you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Woo!
Welcome back, Nicholas.
Thank you. Happy hump day.
Hump day.
So I'm so glad to be back.
So glad.
I missed you guys.
It's gonna be huge.
It's gonna be huge. It's gonna be a great day. It's gonna be
The best
amazing.
show ever.
How's the sun?
It was great.
In a while.
It was great. It was really nice.
Feels
really
good,
hot.
doesn't it?
Sun out all day long. Not
Did
a
you
cloud in
wear
the sky.
sunscreen?
Take the
every
guns
day?
out too.
Okay.
Take the guns out too.
Guns are
Yeah.
always out, baby.
Very nice.
Nice. Yes. No. I wear sunscreen.
Okay, good.
Nobody is stronger than the sun. Okay. So yeah, I wear my sunscreen. You know, sunscreen doesn't stop you from getting tan, especially when you have golden
Easily
skin,
tanned
you know.
like yourself.
Yes. It just protects you from all the bad stuff.
Are you literally explaining this to a black person?
I was, I guess.
go
Yes,
for
yes.
it, son.
That's
Go for
exactly
it.
what happened. Yes, yes.
Cool. Did you get to play golf? What did you eat? Where did you go?
This is
Did you go on
know
hikes?
what? I know he's maturing. I know he's getting to that point where he's probably going to have to go off on his own soon. I mean, he had the wife.
Off on his own. He has a mortgage. Bitch.
I don't know. It's unbelievable.
What are you talking about?
Oh, shush. Oh, shush. Don't give me facts now. He had his wife with him, and he didn't play golf, and that is a mature thing. He did the right thing.
You did do the right thing. That's impressive. Because
I thought about
You
it.
can't just orphan her with your mom, who she doesn't
Yeah,
know
yeah.
that for
Right.
6 hours. Like,
Yeah.
that is a
did.
dick
I
move.
would hope that I would have done the same thing. I'm sure I would have, reluctantly, but I'm glad
Yes.
that you did it. I'm
Yes.
glad that you did it. I was very happy for you. Very
Yes.
proud. Very
No golf,
proud moment for me.
unfortunately. Yeah. Next time, I'll make up for it.
Yeah.
Sure you
Yeah.
will. There's
But did
plenty
you
of time
did you
for
guys
that.
have some wonderful dinners out? or-
We did stuff at the house. Did a lot of grilling and hanging out at the house, sitting in the pool. Did a couple hikes too, Black Mountain.
Did your mom make her famous boiled water that she does? No, did she do that? No, she didn't. All right.
Why would she have left a gym like you?
Yeah, seriously.
Just mysteries abound. Just good for you.
Yeah.
I can't.
I would like to subscribe to
I'm
her
gonna miss you with
newsletter.
that someday. I really
Went to the
am.
rodeo.
You went to the rodeo.
Yeah. I go to
You
the
didn't
rodeo
tell me there
like
were
every
cowboys.
time. Oh yeah.
And you still left with your
Yeah.
lady?
Yes, yeah. It's the boy zoo.
It is the boy zoo.
for
Yes.
you. There you go. Yeah.
Oh my goodness.
Yeah, it's fun. Bull riding, little mutton busters.
Oh, the mutton butts. They're so cute.
Yeah.
What are those?
Those kids.
That's the kids that go on the sheep.
Oh, very-
Michaela actually did those when she was younger. She was a
was a mutton
No, she
buster?
rode a sheep.
wow.
Why is she so comfortable with you? This is good. This is good.
And like the barrel racers and the
They don't have that. It's
They
a
didn't have
small
barrel
one.
raisers?
This is like
Okay.
kind of like a, it's a Johnny rodeo. But it's
Okay.
good.
but it's fun.
That's cool though.
So yeah, it was good.
That's-
Family friends were there too. So it was good.
Good
Yeah, it was
time.
a lot of fun.
Nice.
It was a lot of fun.
I'm glad that you
Yeah.
got
Nice and
to get away.
relaxing.
Yes.
I mean, while you guys were doing this, I had my little piggy toes in the water, just splashing around.
So do
Yeah,
you
not a
trade?
care in the world.
You didn't
do
look back. You
trade
didn't
when
care.
you're on vacation?
Yes, I'm addicted. This
Okay.
is not something that you like give up.
You can't set it and forget it.
What is really nice is that it's a lot earlier in the day there. So
Oh, yeah, that's
market opens right at 6:30 and it's done at 1 o'clock. 1 o'clock.
Oh, okay.
Yeah. So it's an easy day. Like you could get a round of golf in after the market closes,
Yeah, you
which is
could.
really nice.
It is really
which
nice.
Is really nice. Not like here where it's it's dark most of the year when you get out of.
Hey, no,
you get-
we're in that beautiful
no.
time.
Yeah, no.
Sunset past 8 p.m. now for like the next 89
Right now.
days. So just lock in, Midwesterners. I guess.
Yes.
I don't know. How hot was it there?
It was like it got up to the hundreds, in the hundreds too.
Yeah.
But
It's
not-
dry heat.
Yeah. It's dry heat.
It's too hot.
Yeah. It is very hot. The problem isn't being out in it. It's when you go into like air conditioning, your body just releases all the water. So you go from like really hot and you don't sweat at all just
Right.
because it's just so hot. And then you step inside and it's air conditioning and you're just like dripping sweat as
Yeah.
soon as you step inside. So
I
but
like the heat.
it's
though.
not, yeah,
It's
it's
good.
It's nice.
Makes everything you're looser. and
Yeah.
you don't feel as tight.
Yeah.
I think.
Yeah.
I like it.
Sleep like a baby.
Well, I'm sure it just sucks the life out of you.
Sleep at 8 o'clock. It was great. I felt like a retiree. It was awesome. You get in bed at 8 o'clock. You watch a TV show. You're out by 9. It's fantastic. Really.
Well, the way they are photoshopping your YouTube thumbnails, you look like a retiree.
Oh, thank you for that. I was.
my God,
I just showed him.
Wait, you got to put that up there. Can you put it up there on your computer somewhere?
I can get
Maybe
it.
the production team can find it. He said.
Who did you piss off in graphics?
I go. He said it. He goes. He looks like Barry White. You know, like when Barry was around 60 years old. It's beautiful. It really is good.
Yeah.
You look like the Dos Equis man. Like,
Well, the Dos Equis man is good too.
He's a very handsome silver
Yeah,
fox.
no.
Yeah.
Like, I'm not.
Look at this thing.
There we go. Yeah, see right there. Look at that. There we go.
I mean, this thing.
Diabolical.
Just ridiculous. I was
Somebody
like,
wrote-
who did I piss off here?
Somebody wrote in the comments, looks like you've lived through the patent day trade.
Yeah,
The comments are solid gold.
yeah.
Oh, they're so good.
No, they did me dirty on that one.
I don't know.
Usually the AI videos, the AI images, they smooth you out so your
Sure.
wrinkles are gone and your blemishes are gone and your beard is perfectly, crisp. That one put like 30 years on.
We need
Jessica
to.
did that to you. I
We
think
need to
that was good.
upgrade our AI models. I don't know.
I need to talk to somebody about
But we
that
have we have the non-paid for version. That's what it is.
Our free trial
We
ran
don't want to
out.
pay the $3.99 a month. Is what it comes down to.
But I'm glad you're back, and
Thank you. I'm glad to be back.
that's very funny.
Yes.
Yeah. So. Yeah, back at it. How about you, Pat? How was your appointment yesterday?
Good. No more humming in the ears.
Oh, that's wonderful.
Yeah, things are good. I did find out though that I only have a couple of weeks. I have to lose them because they come with a free set if you lose them. So they're about $5,000. So they're.
Are you serious?
Yeah, they're expensive. We're talking about hearing aids, and I have no concealed hearing aids. And they're about $5,000. Insurance cuts it down to about $3,000 or something like that.
Wow.
But they give you a free replacement if you lose them in a year.
It's insurance fraud all day long.
Yes.
Yes.
But the free set, I learned, is $900.
Oh.
So you can elect to lose them and pay $900 and get a second set for the time that you might lose them, because I haven't lost them.
But you know what, though? I bet they have technology because it's so good, like Tesla, like over the air. I bet if you lose them, they'll just turn off the signal to them, and then you can't.
You're probably right.
Run a
Who knows?
scam, right? I'm sure that they found a way to brick it.
Yeah, so I have to make that decision whether I want to lose them now or lose them later and pay the $3,000 again. So,
my mom. This is a true story. I was texting my parents last night, and my mom is cutting out hearing aid coupons from the newspaper, but she's trying to give them to me to give to you. And I'm like, Mom, I think.
Oh,
that's
he's so
okay.
nice.
I'm like, he's okay. He's good. I but she's like, I don't know how to copy
That's
this.
sweet. Thank you.
I don't know how to copy this and give it to Bat. And I'm like, Mom, he's
Thank
fine.
you, Miss Logan. I appreciate that. That's very sweet of you. I'm sorry that I know you tried to raise your daughter right, that she would bring them in, but you tried. That's all that counts.
How am I
That's all right.
supposed to synthesize?
It would be the thought that counts, Vanetta. I got it.
Synthesize a coupon.
It's all right. It's okay.
Okay, well, if you want it, it was in the South Bend Tribune. I don't know what's happening.
Very sweet. It was very nice.
My mom is the nicest lady ever. So anyway, we got a great show for you today. We are double.
Go back to that great picture of Nick. That was good.
That picture, that they did me dirty there.
They did you so dirty.
Yeah, they did me so
well,
dirty.
we are double batted up here on this wonderful Wednesday to get you through the rest of this week. We have a great show for you today. At the top of the 8 o'clock hour, we have an options jive. What do we mean by being neutral? Are we Switzerland?
Yeah, that's true. Yeah, we are pretty neutral. We are pretty neutral. That's a good one. It's just kind of just talking about delta and distance away from the stock, and just kind of talking through skew and just what exactly a neutral strangle looks like, or a neutral iron condor. Just a very basic kind of discussion on just delta neutral positions.
Okay.
In general.
And then it's Assume the Position Wednesday. So we've got What's Your Assumption today. So the bats are back and they are going to do viewer submitted trades. This is where our viewers write in. They have an underline, but they also have a directional bias. And the bats are going to try to do some trades. Vastly different market today than we had yesterday, but we are going to roll with it. So maybe some adjustments needed for the trades that maybe got figured out yesterday, but you're going to try to put on for today.
We're going to be all right.
Good luck with that. Good luck with that. And then at 9 o'clock, a little tasty extra cherry picks. We have TP in the house. Meta Death Spiral.
Oh, God.
What?
Abandoned baby to death spiral.
Is that like the guy on the motorcycle in the steel cage?
Oh, yeah. Like,
That's cool.
Like Thunderdome
cool.
style.
Yeah, those are cool. Like,
That was good. Like you would see those in like the circus.
Yeah.
sometimes. The centrifugal.
Yeah.
Help me with that.
Bill Nye the Science Guy.
Yeah. What's centrifugal?
It's the centripetal
Centrifugal
force that
force,
keeps
yeah.
it in.
Yeah.
Yeah.
It's actually centripetal.
I can never do that.
Centripetal.
Well, there's both. There's a centripetal force.
We were
there's a
close enough,
There's
close
a
enough.
centrifugal force. So
Yeah, that
there's
thing.
one that's more. Anyway.
All right, you're not, this is the wrong audience.
Yeah, I need
It's
Julia.
like-
I need Julia with her advanced degree in physics to come in here and help us all out.
Yes.
But yes, Meta Death Spiral with TP in the house. So stick around for that. And then we got the trade desk around 9:30 live from the trade desk. Oh. Look who's making another
Marty
appearance.
Supreme.
Yeah.
Yes, Marty Supreme.
Yes.
And Mr.
Ooh.
Ryan Grace. I want to give a heartfelt thanks to Ryan for filling in
Yes.
for today's consummate professional. I hadn't done the show with him. It was great. He's
Yeah.
super knowledgeable. It was wonderful doing
Wealth
the
of
show.
information.
Thank you so much, Ryan.
Yes. Marty Supreme. Doesn't that sound something like you would get from Taco Bell? Like a Marty Supreme?
Marty Supreme.
Well, it's the movie. The movie.
Was it?
the
Yes,
ping pong.
yes.
Yeah.
Yeah.
Ping pong movie, yeah.
Yeah.
And it is Wednesday. So it's going to be Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live.
I've been missing some electricity.
I know. Also, jokes on you, Bat. I thought this was so funny because you weren't here yesterday, but because the week before was Cinco de Mayo, we actually are having tacos today, Bat. So we're having
Oh,
tacos today.
what the-
So you couldn't avoid
Be an
Taco
early Bat
Tuesday.
day.
Yeah, you couldn't avoid Taco Tuesday.
Oh,
You tried. So that is our run of show for today. Do you want your daily dose?
Ah!
Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news, coming across the wire. Our leading story, top story, just in.
In today's headlines,
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's May the 13th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings?
I mean, you can look at Cisco if you want to. We had Baba last night. Baba's down like $3-4, something like that. We can look at Cisco, CSCO if you like, but that's about it. Not
Okay.
too much after that.
Yeah.
It's almost over. I mean, it's over.
USAR in the government portfolio.
Rare Earth.
USA Rare Earth.
Rare Earth.
Inc.
Yes.
There's a name to live by.
Yes.
April's hotter than expected inflation reading is likely to put the Fed on watch for higher energy costs creeping into other prices, a red line that, if crossed, could raise the possibility of interest rate hikes. Oh no! Oh no! The numbers came in yesterday's April CPI year over year was 3.8%. Core CPI, which excludes food and energy, came in at 2.8%. The rate hike odds by December around 30%. Energy prices drove 40% of the April CPI gain. And the Fed is nearly certain to hold in June 8th, 98% odds around that. Treasury yields are creeping up around that 5% mark. And Kevin Warsh looks even closer now to confirmation. So all of these things are coming together. What are you going to do?
I mean, bonds are at the lows, 112.09 right now. I mean, they got smacked on CPI the other day. I mean,
Yeah, they got to
that was
about
a big
06
move.
or something like that yesterday. But yeah, you are right. They're
This is
right
the
on
lows.
Yeah, they're definitely lows. I didn't do anything in bonds. The Ivy rank of 17 has been upticking a little bit from the low teens to the higher
A
teens.
little bit of a bid in the US dollar, too, which has helped.
A little bit of a bit in the
my
US dollar.
positions.
Oh, okay.
Yeah, I mean,
The gold silver ratio yesterday.
yeah, that's
the
one
day
I want to
before, that
look
was
at
something I
today,
did.
too.
I'm back under where I bought it. It's now
Yeah.
under 94 right now. It got down to around 93 and a half. It's about 93.90 at this moment. So.
I mean, everybody's told you, and by everybody, I mean, like, Trump and the festival of people. That interest rates are not going. Yeah, interest rates are not going higher.
Right.
I don't think I would bet on that. But
Well, 30%. I'm just saying that's what the odds are.
Of course. Yeah, no, I mean,
and it's creeping up. But yeah, it's a weird time.
It's a weird time. It's a weird time.
So just try to keep your powder dry, I guess.
Yes.
Copper prices are now at their highest level on record, and AI is just part of the story. This is just crazy. LME copper prices for May 12th were $14,021. They're seeing huge demand from AI data centers. Citi has already initiated a $15,000 price target for copper. Copper prices are up 14.9% year to date. And AI data centers require 50,000 MT of copper each. I don't know what that means, but
me either. But I would stay away from this very large future here that has not had a downtick, as you mentioned, in the last 2 weeks or so at highs.
Yeah,
we don't talk about copper a lot.
There's nothing on the really on the option side to trade with them. There's no smaller product.
Like a Freeport McMoran.
Yeah, FCX. We actually have some FCX long delta here, which is working out, but it's not.
It's not at all-time highs like copper is.
Yeah,
I mean,
we did puts and a call diagonal spread. I think it was a what's your assumption trade, and we closed the puts already. So we've participated in this, but it is really hard. Like
that would be the only way to. In my opinion, that would be the only way to trade it.
MHG, I think, is the micro copper MHG. Yes, I've traded that a handful of times. I think it's like $5 a tick, which
How is it to trade?
You can trade it. It actually has 12,000 contracts that I've traded today. I mean, granted, this is a new high and it's kind of in the news.
It's all Pete Mulmat.
Yeah, exactly. No, he trades the big one, okay? He doesn't trade the little mini guy here. But I think it's $5 a tick, and today it's a little over 100 ticks move. So you talk about $500 contract. The big, I believe at $5 a tick might be $10 a tick.
Okay.
I'll have to look.
We'll get to the bottom of that.
It's a micro, so it's 1/10, whatever the tick is. I'll look it up. But
I think it's $5, but I have to look again. Yes.
Okay. I will look it up, though.
Mm-hmm.
A JP Morgan Chase-led group of banks cut their exposure to a private credit fund co-managed by KKR days before the asset manager announced it was spending $300 million to prop up its troubled vehicle. The fund, FS KKR Capital Corp, said that KKR will inject $150 million into the fund as equity and spend another $150 million to buy shares, to which JP Morgan says, "We out." Should we still be concerned about you can't really trade this, but makes me just worried about maybe another fissure or crack in our economy?
I don't know. It's kind of been a headline for, I don't know.
It has been for a while. Blue Owl and all the other stuff. Yeah.
Blue Owl?
Yeah, Blue Owl.
Yeah. I like it.
You know Blue Owl?
No, but I thought it was a good saying. That's why I was asking.
No, Blue Owl. It's a stock owl.
No.
Look it up.
No,
it's another one of they own debt for a bunch of different software companies. I think that's
what's the symbol to it?
Owl.
Oh, owl. Sorry.
Yeah.
I started with blue. I apologize.
Yeah. I mean, it seems to be contained at this point. I mean, the markets are at all-time high. Nobody
trade JP Morgan.
Nobody has problems getting money.
Sure.
Yeah. You see 50 billion, 100 billion, 200 billion everywhere.
You get a billion, you get a billion.
Yeah, you get a billion, you get a billion. Mm-hmm. So, I don't know. It doesn't seem to matter.
Doesn't seem to matter.
Investors want easy exposure to the memory sector, and there's now a DRAM memory ETF. It's gotten off to a blazing start. The Round Hill Memory ETF launched April 2nd, and it skyrocketed around 40% this month through Monday, and by more than 98% since its inception. DRAM.
We haven't traded it yet. I have been looking at it. I've been trading Micron. I have a big, wide, beautiful butterfly. It's a beautiful butterfly, very colorful.
Most beautiful butterfly you've ever seen.
That should be nice today.
It was the name of my child.
Yes.
I was going to have, yes.
Yes.
What? Oh, yeah. Butterfly. That was actually good.
Thank you.
I went Jade Lizard, and then Vanetta was like, what, is she going to be a stripper?
Well, cut that part out. But yes, you and Mikey.
Oh, you cut that out.
You and Mikey named your child the same, though, so you have joint custody.
Oh, wow. That's so cute.
So cute.
Oh, my God.
But you've been looking at Dram.
Wouldn't this be a dram? Wouldn't we prefer it to be a dram, which would be like a
Like
little
of
small
liquor.
sifter
Yes.
of...
Look at you. Good job.
Thank you.
Yes. Dram.
It is getting more liquid, and obviously it's flying around. There's tons of call skew. It's not one that we've traded yet, but I'm sure if this continues, it will certainly be on the radar here.
Okay.
Yeah. It's getting harder to trade like a Micron or a SanDisk. SCX, Western Digital, all of them have gone just banana land.
Yeah. So literally put all of your eggs in one basket.
Yeah.
NVIDIA up around $5 this morning, and that is on news that Jensen got the invite to the girls' trip.
Yeah, hey, Boomer
Hey,
Spring
girl.
Break.
Yeah, so Jensen Hong is joining the China trip with other executives like Elon Musk and Tim Cook as President Trump.
Tim Apple.
Yeah, Tim Apple. President Trump should be on the ground now in China. We are
You should
waiting.
call him Tim Apple.
When he tweeted it out, he was like, I'm on the plane with Elon Musk, Jensen, Tim Apple.
It's the best.
Like,
That's
it's
good.
just, I mean, it's ridiculous.
Iconic.
Yeah.
But yeah, they should be on the ground now, should be getting news out. We'll see what happens, if anything, from this summit. But 16 executives, Tesla, Apple, NVIDIA, Boeing, are all.
New all-time high.
I saw it was like over $1 trillion of net worth on one plane.
Yikes.
Wow.
Yeah.
That is bonkers.
That's,
Yeah, NVIDIA
that's
had-
serious cash.
Serious cash. NVIDIA had new highs, though. Earnings coming up. It's going to be an interesting one.
Like I mentioned yesterday on the show, that it added an oracle's worth of market cap in 4 days.
Unbelievable.
What are we doing?
That's fine. It was in a correction.
It was, I
4
guess
days
so.
before, because it was down 10% from
Yeah.
highs. So
Now it's out.
yeah.
So it's a Super Bowl.
Yes.
Intel stock just guided the chip sector toward a sharp sell-off. Again, this is from yesterday. Analysts note buyer exhaustion as well as market concerns about what the latest inflation data may mean for future data center spending constraints. Shares of Intel closed down 6.8%. Micron, SanDisk were also down. Micron down 3.6%. SanDisk down 6.2%. Qualcomm down 11%.
Ooh.
Again, this was a one-day flash sale.
Yes.
It really is a flash.
It's back to basically highs here today.
So let's start with Intel.
Intel, I mean, it's been bananas. It's some days it's up $15. It's just unbelievable.
Yeah. Closed at 220 yesterday. It got as low as 115 or so. It looks like it's 225 this morning, up around $4 or so, flirting with the high highs in the 130-ish handle. So, like you said, one-day sale.
Any
Yeah,
chippies particularly catching your eye, or is it more like a SMH, SOX?
I mean, SMH is back to highs. It's at 571 here. What did it print yesterday? 542?
Yeah, it was down around
540-ish was kind of the low.
17 or something like that at one point.
I mean, you have to be careful here. And, the emails have come in of, none of these you've been able to sell premium in. Mm-hmm. You've just gotten your face.
You can, it just doesn't.
You can. It's
work.
just been a face ripper in all of them.
Right.
And at this point, it's like if you want to get short it, you have to do something else. You can't be short premium. You can't have the tail risk because you're not getting paid enough, and it's just you're getting realized volatility here. All these, SMH has an 84 IV rank. Monthly implied volatility is 48.
Bonkers.
If you look at a Micron's got 103% implied volatility, and it's an $800 stock. If you sell the 1,000 strike calls, this stock could be at 1,000 in 3 days.
Yeah.
Like, it's just not worth the risk. So if you want to trade these, if you want to be short them, look at like diagonal spreads, vertical spreads, buy some at the money premium. Just don't take the tail risk, and don't take it on either side.
Right.
Yeah.
Do something to find risk.
Call or put, right?
Yeah, just and don't keep adding. But they're crazy. I mean, these things, $15 up, $5 down, $15 up. So it's whipsaw.
Google is rolling out new Gemini-powered Android features ahead of its developer conference next week. Google announced a whole bunch of stuff yesterday, but the AI can understand screen context and complete multi-step tasks like building shopping carts or booking reservations, all in the palm of your hand. Google also announced a feature that could even help you to stop doom scrolling, which I would greatly appreciate. Ooh. Thank you for that. What are you doing in Google?
I do not have a position in this account. I have an At the Money call spread I think we did for Johnny Trades last week or maybe 2 weeks ago, like the 290 strike. Google, I mean, it's at highs, but it's not like busting loose like the rest of the.
But their big developer conference is next week, and they could come out with even more AI stuff.
Busting loose is over 400. It's 388 this morning.
Yeah.
I mean,
the Mag 7s in general, besides NVIDIA Now today, have not been the story.
That's true.
As a basket, they've gone basically. Yeah, they've gone nowhere. I mean, if you look,
they've been holding on to highs, but not making new highs as some of the other markets.
They're back to highs, but they're not like 20%, 30% higher like everything else.
That's true.
So
I will give you that.
Just keeping a little floor there.
Mm-hmm.
In other news, Threads is testing a Meta AI integration that works similarly to X's Grok. Users with a public account will be able to just mention Meta AI in a post or reply to get more context. So, Grok, is this true? Threads announced this. I use Threads sometimes because I like it as a social media platform. Like, I manage all of our social platforms, so I'm always checking on social. And so I like Threads. You don't have anything against it, but the comments were really funny. King Arthur Flour, like the flour company, was like, "We will make you 20,000 cheesecakes if you turn this off."
Well, Meta is not doing too much these days. Not one of the Mag 7 that's cooperated at all. Probably the weakest of all.
Meta's a dog.
Mag 7s, yeah. Under 600, closed at 603 this morning. Every stock that we just mentioned a moment ago is up. This is the first one that really was mentioned is down. IB rank is good at 34, not amazing at 34, but it probably warrants some sort of trade. You've got July options now that are about the same implied volatility as June. So you're not paying anything, you're not getting anything for selling the front month, buying the back month. But it seems like if you have a directional bias, you should go do something in there.
To me, Meta's AI is so underwhelming just relative to the billions of dollars that they've spent for it. Like, it doesn't, like, I would try to search for a video because when I try to show you guys like food videos, I'm like, oh, I want to search for something. It doesn't work. I was like, where's your money going? Like, Grok works.
Yeah.
Like, as much as shade you want to throw at X or Musk or whatever, Grok works. You type something in, you ask it to verify, and it works. And obviously Gemini works, and Anthropic, Claude, all the other AIs I don't have beef with, but Meta's AI sucks so hard.
Yeah, they've been behind on all of it. It's I don't know, it's getting harder to continue to lean bullish despite my positions here that are bullish.
United Airlines flight attendants have ratified a new contract, securing a 31% raises this summer.
31?
This is right. We need to renegotiate our contract.
What the hell?
I also got my congrats on your 15.
Would you like a water?
I also got my congrats on your 15-year email for the company.
Did you?
I'm like, that's it? I get an email?
Yeah.
Would you like a water?
You can't
like a water?
Yeah.
I don't have the lunch boxes. That's behind me. I can do this.
The contract also includes other improvements like boarding pay and pay during airline disruptions. To be fair, all jokes aside, did you know that airline or flight attendants don't get paid till the door is like locked and like shut? So if they're helping you board, put your stuff, like they're not getting paid for any of that.
Well, I'd be saying you want your water, get your seat.
Yeah.
That's what I'd be saying.
So I'm not sure what UAL is doing this morning.
UAL's unchanged. More importantly, Love, which my sister's long.
Which I just flew.
Did you? How was
hour
it?
Late.
Did you? An hour late. Oh. Did you get an assigned seat or did you go seat thing?
They don't do
They're done with that. I was just asking. I didn't know if they were done yet with it.
Yeah, they're done.
It was actually a decent experience. Yeah.
Okay. Cool.
Yeah.
Cool.
I mean, you can't beat the airfare that you paid.
No, yeah, it was very cheap. We had, you have all the snowbirds coming back to Chicago.
Oh, so you had a
little
delay.
We call it the Blue Hair Express.
Yes.
Blue Hair Express. That's
Yeah.
pretty good.
The speed at which we loaded the plane and unloaded the plane was left a little bit to be desired.
You wait your turn, young man.
Yes. Yeah. I had to unload a lot of bags from the overhead store.
Oh, with your muscles.
You need your bag. You need your bag. You
muscles.
need your bag. Yeah.
That's funny.
Yeah.
Walmart.
Some number just came out. I'm sorry to interrupt.
Oh no, I think that's
Even the
PPI.
S&Ps are up 10. They're unchanged right now. Nasdaq's still up about 130. It was up around 200 on its highs. Russell's unchanged, down 5. Dow, which has been weak for most of the day, was only
Crashing.
It's crashing again, down 250, which is a half a percentage point, equaling the Nasdaq
I want to put on this gold silver.
ratio spread. Oh, good for you.
Because gold just moved.
Gold moved.
It moves.
Gold actually sold off, and silver actually rallied to bring
Yeah.
that pair down to around 54 and a skosh.
Yeah.
So you're right there.
Yep.
Good job out of you.
Good job out of you.
Good job out of
You
everybody.
did it first. You even texted me. You said, "Sir, is it okay if I do the gold silver?"
No, I
ratio on
did
the
not
show?"
text you that. I said I put it on, but don't worry, I took it off.
You said,
already.
"Me
And
lord,
I
me
made
lord,
you
is it
$900
okay?"
bucks. I should have
Yeah.
made 1,000.
Children.
But I was
Me lord,
Children.
is it okay?
in about 20 minutes.
And I said, "Sure."
I don't ask for permission. I do ask for permission afterwards.
Nope. Walmart is cutting 1,000 or relocating around 1,000 corporate workers as it looks to combine more of its global technology and AI products teams. If you forgot for a hot minute, Walmart trades on the NASDAQ. You better
Yes.
recognize they're a tech company. Under the new CEO, John Furner, and a reshaped leadership team, the world's largest retailer is ramping up an AI-led digital transformation to better take on Amazon.
Push that through, son.
I did it. I will put it through. Yeah, Walmart, has been strong. It's right at highs. We haven't traded a lot of it. It's just kind of been back burner. When you
Hasn't had earnings yet.
it hasn't.
No, it's later.
On the 21st.
Yeah.
Yes, you are very correct. It's tough. It's like, when you have Amazon or Walmart at 32% implied volatility, and then you look at like Micron with 100% implied volatility.
Sure.
You're like,
No, I get it.
yeah. But this is on my radar now.
Okay.
Yeah.
Just that's it. That's my job, public service. Hey, I don't know if you've opened your Spotify app recently, but Spotify is celebrating their 20th anniversary with a Wrapped for your entire listening history. I joined Spotify. I got mine yesterday. I joined Spotify in July of 2011, which is crazy. The first song I ever played was by Beyonce. It was the best I ever had. But my lifetime,
You're
all-time,
Bayhive.
Does it say it on there anywhere?
it does. I can show you. But it's my all-time most streamed artist, in a surprise to no one, is Taylor Swift.
Obviously.
I have listened to over 50,000 minutes of Taylor Swift.
Mine is going. I'm going to be surprised what mine would be because I share mine with Vinny. So he listens.
So it's gonna be like Young Thug.
Something like that.
Yeah.
Something like that. We'll find out what mine is and what year. I don't know if I have you beat. I only. Well,
Yeah, I'll help you.
You could probably make him his own profile. So that you have your stuff separate from his.
He's got a playlist called Unk that I really like.
Yeah?
that's
I'm okay.
you.
I'm
That's
learning
you.
some
That's
new
good.
songs and stuff.
Something, the metric that was interesting is like how many different songs you've listened to over like the tenure of it.
Yeah, I
So
don't.
It's cool. It's on Spotify. It's free.
I don't mind it.
I don't know. I know
Okay.
Spotify's not the best to trade, but I thought this was a cool feature. So
Yes, Spotify markets in June are about $1 wide. Like you said, not the greatest, but it is a stock that's on its butt. Now, here's June, July volatility, where June's a little bit higher than July. Or if you're doing a directional diagonal or something of that nature that has a direction to it, front month, back month, you'd be selling higher implied volatility and buying a little bit lower volatility. It might be something you want to look at.
okay.
So you may have did something every
Something to
every
do.
day. Now we do option trades today, so maybe we'll get something in there.
This sucks, and I didn't really think about this, but figuring out how to watch the NBA playoff games has been a struggle, and it's only going to get worse. The NBA playoff this year has been split up among a myriad of networks and streaming services, and it has fans scratching their heads about where and when to find games. It's getting crazy because you need Peacock, you need like Fubo, you need Fox, you need cable, you need YouTube Premium, and I think about just being a kid in the 90s and getting to watch just the generational run of the Bulls for free on just over-the-air television and getting to see, all of that. And just to think, like, kids can't even watch a basketball game for free. What are we doing?
I have watched like zero basketball this year. I think that
I don't even know where it is.
Yeah.
It's just, I don't know. The product is just, maybe it's influenced by the Bulls being not good. But
Yeah.
It's just not, it's not on my list of like.
Hey, we got the
things
fourth
to
pick,
watch.
right, in the draft, so it's going to turn this ship around.
Yeah.
Also, the WNBA exists.
I only watched
Caitlin
LeBron
Clark
get
is
swept.
back,
That
Paige
was
Buckers.
Every once in a while, I go back and forth on that. That was it.
Yeah, Angel Reese. Like, you got, like, the women are doing it. Like, WNBA is back, baby.
Yeah.
And there's 2 new teams.
I kind of wanted Buffalo to lose last night in the.
What? You just spent all this time with Ryan and now you're going to throw him under the bus.
Who are they playing?
The Canadians.
Oh, okay.
Yeah. Canadians got this 7-6. Unbelievable. Huge. You got to.
Okay, now I'm interested.
Go on. Move on.
Does he do the goalie stretches? Does he do the stretches?
Oh, yeah,
I
the
like it when
squats.
they do the
Yeah.
stretches.
Yeah.
That's
Yeah, you got to stretch out those glutes.
those quads.
the quads?
Hockey butts. Elite. Hey, Nikki, I pulled this for you before I even knew that you did the just unbelievable sacrifice of like not even getting to play golf. Like I thought that you were going to. So that's good. You were a relationship guy. So that's
Thank you. I appreciate
chef's
that.
kiss there.
Somebody
I think he's
recognizes.
actually trying this time.
No, this
He's
is
making
wonderful.
an effort. Yeah.
Well, this is a run out the clock situation.
Oh my God.
But let's see how good you are at this. I was honestly very impressed. I only got one of these right. So they asked 2-time Masters champion Rory McIlroy if he could guess who the golfer was by their swing, but it's just the silhouette.
Okay.
Watch this.
That's me. Okay.
Wow. Good job out of him.
Siwoo Kim.
How?
Jordan Spieth. I don't even have to see him swing. Xander Schauffele.
Wow.
That's pretty good.
LeBron James.
Come on. Somebody knew. No way.
Michael Block.
Wow. That's pretty
John
insane.
Rahm.
But if you play with these guys day in, day
Tiger
out.
Woods.
Michael Block was that, but that was like a one-hit wonder.
Had to be 2000.
So not only did he get Tiger Woods, but he knew the year based on
Oh, that's Charles Barkley.
Barkley. Yeah, I could've got
Barkley.
Okay,
That's the one
there
that I
we go.
got.
They should
Yeah.
have given him the.
Yeah.
That was pretty
awesome.
amazing.
That's impressive.
That was pretty impressive.
No notes, but I.
Great.
Yeah.
Great. Good job,
I could probably do that with like me and Mike, but you'd have to give us like the shot shape too.
Okay.
Because we generally go like, same sort of distance. His just has this like swooping.
Little curve to it.
Yeah.
Little bend.
That's impressive. But
We're going to take a little bend here, like a 90-second break, and come back. We got more Tasty Live. Well, with a lot more Tasty Live coming at you. We got Tasty Extra. We got Option Jive. We got
Yeah.
Well, we'll be back in 90 seconds with Tasty Live.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with a little bit of a tasty extra look back at yesterday, which was May 12th, 2026.
A wild one.
It was. Actually, some people in the chat are asking for you to go back and bring Ryan back in because he had one red day. You have not been able to muster up one red day.
That's true.
That's 2 weeks.
That's true.
You know,
or maybe it's.
It was a significant one, down around 70, 80 on the lows. I mean, 60, 70.
On the E-minis?
Yeah, on the lows of the day. I think so. Yeah, pretty close to it.
Yeah. Well, it's the flight thing. You know, when you're on a flight, like if you're out.
Yeah. Out of the airspace.
Yeah, maybe I'm the new contrarian indicator.
Could be.
Because wasn't that the case? Like every time Tom got on a flight.
Yes, we had a wild move, one way or the other.
Yeah.
Could have gone either way.
Yeah, he would never be able to take the money from the short because he was in the. It was like
it was too late.
Depending on
by the time he got back, it was done.
Yeah, if he had the Starlink on the plane, he was okay. But
That's right.
Not,
That's right. He was screwed.
Yeah.
Yes. Let's take a look back at May 12th, 2026.
Let's do it.
Look at this, 3 reds.
Oh my God. Mm-hmm. World was crashing.
Almost had the jackpot.
Yeah,
4 reds.
Yeah,
but
it was. I mean, the rally into the close was the whole day. Volatility had stayed basically flat. Like volatility did not expand into the down move. The stuff that was moving was all the semiconductor stocks that have led us higher. I mean, they have been clearly the outperformer of the group, and you see the NASDAQ here, one of the weaker of the group. The NASDAQ and the Russell, and moving the bonds was obviously a huge move that affected the Russell here. But volatility was not bid throughout the session, even though it is.
Volatility was actually down.
Was down at the end.
I mean, the S&P's down around 20-ish handles, 25 handles. Yeah.
I think the VIX closed in the 17 handle.
It never got it. I mean,
1782 was the low.
Never caught a bid. Now it
that's
went
today.
Yeah,
it closed 1799.
Yes, and it's up small this morning.
Yeah.
Volatility was up 10, 15 cents. Even the S&Ps were down like 30.
Yeah.
Even the S&Ps went down 50, 60. Volatility upticked 7, 8, 10 cents.
Yeah.
Nothing, never got ahead of itself. And even when the S&Ps kind of were dying or dead, if we're down 45, 50, something like that, volatility was contracting. It wasn't a great indicator yesterday because we did go lower as volatility didn't move. But it really gave you a little bit of hope that you could hold on to whatever you had if you tried to buy the dip, and we went from down 40 to down 60 kind of thing.
Well, it told you that the CPI number that everybody was throwing around was obviously not good, but was not catastrophic. I mean, volatility was not going anywhere. I also think it kind of speaks to the skew that you're seeing in the market and just the way some of these things are being traded. You know, volatility itself is a reflection of both calls and puts. And right now, there is a lot of just call buying and call participation where, the skewness in the market is flat to up.
Yeah.
You can look at the E-minis and they probably still have some put skew, but you look at pretty much any.
Oh yeah, they're gonna have a little skew.
They're always gonna have
sure,
put skew.
Sure.
But you look at any other single name stock and it's all call skew. And so, you're getting that kind of dynamic here where volatility is priced on both sides of the market. You got to keep that in mind.
Yep.
And then the Dow, strongest of the group. Has it made its new high yet? I know it got above 50,000.
No, we
not at new highs.
Yeah, not at new highs. We got over 50,000, like 50,900, I think, is a high, somewhere like that. But we haven't been getting. Even last week, when the markets all closed on their highs, the Dow didn't get over that psychological $50,000.
Cool. Getting into the Mag 7s here. So of the group, you had Apple, Meta, NVIDIA. NVIDIA now up $5 or $6 here. Or is it still up? Might be selling off a little bit.
He got the invite.
Yeah, he got the invite. He's part of the government portfolio.
Yeah, it's still up $4. It was up $5 near its highs that I saw. It's up $4.
Tesla giving up a little bit.
It was in tight.
A little bit of its gain. It's back to what, 425-ish? Might be. Yeah, it's probably going to be up this morning because he's also on the flight. So part of the government.
It's up $1 this morning, 434. It got as high as almost 450 or so.
Yeah.
But Tesla's been on a run. I mean, last 2 weeks gone from the mid 360s to the low 430s. So definitely had a run.
Amazon, Microsoft a little bit lower as well.
Next one.
When we look at the sectors themselves, so you had healthcare strong. If you've looked at like UNH or Eli Lilly has rallied quite a bit. I think it's back to 1,000 or just off of 1,000. UNH traded near 400 yesterday. A little bit of strength in the healthcare sector. Yeah, financials catching a little bit of a bounce. I was looking at JP Morgan yesterday. It was up like $4 or $5. He's also on the flight. Jamie Dimon, I think.
Wells Fargo was up 2%.
Yeah.
JP Morgan was up 1.5%.
Goldman Sachs had a huge move. To the downside, it was really just semiconductors and tech, which have been leading the charge higher. The AMATs of the world and what is that? The LRCX down a little over 2%. But you are right. Healthcare was the big green on the heat map. If we were looking at something like that. For sure. When we look at
and a little bit of consumer too, like Costco was up big, Walmart was up big, Coke was up. So it's kind of like a rotation into, which they'll be rotating out of today probably.
Probably back into semis.
A 1 day rotation, yeah.
As you can see here, a lot of healthcare names on there. Humana, Centene is in there, which is another one of the like healthcare service, like UNH kind of adjacent stocks there. CF was in there. Mosaic as well. I think they had earnings. Stock was up a little bit from the lows there. Some of the fertilizer stocks getting a little bit of a bid just with the move that you've seen in some of the grains. You used to look at like wheat at new highs here, I think. ZW?
Yeah, pretty close.
Yeah, pretty close there. You have some of the lesser tech names, ANET, catching a bid from the lows there. But that was really the story yesterday was, it was kind of the junk up. On the downside, it was all the big names here. Qualcomm, I think it was the biggest down move since 2000, I think it was, or 08 maybe in Qualcomm. Qualcomm, Intel, SanDisk, Light. I mean, this is a momentum list for you here. Western Digital is in there. Corning, which was up, 10% on that NVIDIA news. It was down a little bit. ETN, which is another one of the data center build-out stocks. Coinbase is in there. This is a momentum list. It's been the market for the last month has been kind of these momentum names in these sectors.
Yep.
And then when you look at a heat map, NVIDIA, Apple, Microsoft in there. But a lot of the big name stocks, I think I have the wrong one in there. Oops, that's May 6th.
Yep.
So that's not the right heat map.
No, that's not the right heat map. XOM trading 150 has caught a little bit of a bid over the last 3 days, but it sold off as the oil had sold off, a week or so ago, trying to regain back to 152 or so. We'll take a quick 90-second break and come back. We got much more Tasty Live after this with, we'll take a look back. We'll take a look at what's going on today, and we'll go to your emails. We'll be back in 90 seconds. Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, and you know what that means? I couldn't come up with something new for Ryan.
What'd you say?
I just kept saying Ryan, my friend, I believe, or Ryan.
That's okay. That works.
I kept going back and forth. It didn't.
Yeah.
It just didn't.
That works.
I know.
No, you're not getting off the hook for that one, Tony. It was Ryan.
Ah.
Right. Could have.
Yeah.
I asked if he had a nickname. Tried to get with that. I mean.
Yeah.
He's Al Bundy. His brother was Al Bundy. It was tough. It was tough. I think I came up with a nickname. I wrote it down on my pad yesterday, but I'll have to look again. I forgot what it was.
Well, Gracer. You could go Gracer, but that's...
But then you don't know which one you're talking.
Yeah, you don't know which one you're talking.
Yeah.
So,
well,
I get it. I understand.
Yeah. Even the S&P is down 7, second day in a row. We've going to open red here. NASDAQ up 57. As you can see here, even the S&Ps were 54. They're as low as 410. They're about 8 handles off of their lows. Russell down 10, was one of the weaker of the group. Dow is now the weakest of the group, down 260 or so. Volatility up 14 cents, 2071. But you can see here on the low end of the range yesterday, tried to catch a little bit of a bid. It really didn't all day long as the market sold off. Bonds are down 6 ticks. New low under 112 for a quick second there, 112.02 right now. Bitcoin down 700. Middle of its range, maybe middle lower, traded under 80,000, up to 81.5. Ethereum doing the same, maybe not as quite as soft today on a percentage basis as Bitcoin is, but still soft. Oil, 98 yesterday, 98 today, but today it's about 20-ish, 30-ish cents off of its highs, got down under 97. It's at a very tight range. Gold and silver, you traded that. Silver has rallied exponentially compared to gold. You can see here over the last.
That ratio's coming already.
That ratio has moved already. It's trading
$250.
Yeah, it's trading around 54.30 or so. You did it around 54.10 ish or so, something like that. Yeah. There was a moment there when you were making money on your gold future that you were long, and you were making money on the
I was
short,
up like $400.
short silver futures that you had. So
what do I do with my 1-day oil position? I have.
It's in USO, right?
No, in CL M6.
Okay.
I have a monster of a position. I have these butterflies that are all wrapped. I'm long 99 and 100, and I'm short 103, basically, when you put it all together. It's right at the money. It's everything.
It's all the kit and caboodle here. It's trading 98 and change, basically unchanged right
now.
Mm-hmm.
There's still a lot of juice there. I'm trying to figure, because I don't really have upside risk here. I don't have upside risk. I will just miss out on the profits if we explode to like 110 here in the next 48 hours.
Well, I mean,
but with Trump and China, I could see
it's a $4 spread trading at two in the orders with another, day and a half to go.
Do you like buy a put? Like the 101 strike put?
This is
this is the $1 million question.
So you basically have a butterfly on. Let's call it a butterfly because
I have a butterfly. My butterfly is 99 103. 99 103.
Right, and we're sitting at.
But I have it on with a couple contracts, so it's a big position.
Right, and you have to remember the future that you're trading is trading 102 and change. So I personally,
I can even show it here, like where
I have it. Oh, I mean, I just have showing you the future. I personally, with it at 102, would probably sit with it because I think that front month future is going to stay bid.
You think so?
Yeah.
But if you get some sort of news event and oil drops 10 fucking
and it's gone.
Sorry, 10 handles,
10 fathoms.
I think I buy one of the put. If I buy one of the puts for $800,
you can't
like
be
the 101.
You can't be everything to everybody. Oh, do it! Go ahead, buy the put. You'll never you'll regret yourself.
If I lose it, it's fine because yeah.
Well, it comes off the top, but sure.
Yeah, it comes off the top, but it'll hold some value here. All right, so we're gonna keep that.
All right, beautiful. Confirm and send.
And now we just need to chill right here.
Chill.
We'll just chill.
Just chill.
Right
It's been
here.
chilling.
Yeah, it's right at. I mean, 100. My perfect spot is just under.
Market hasn't been affected by oil going higher yesterday.
Yeah. And this is in the front. This is in the M6, the 1 day. If you don't have a position on, I would not do anything in this contract. I would be trading the end contract 30 some odd days out. That's the one. That's the active contract. Right now.
Nice potty mouth. People are writing in.
Sorry about that. I know it's a family show. I've been off for a little bit. I've been relaxing. I'm sorry. I'm sorry.
It's okay. It's okay.
Thank you.
Confirm and send Wednesday, May 13th. Go. I read the New York Stock Exchange is opening an invite-only private club in a former Wall Street vault.
They forgot to send me my invite.
Attempting to revive old-school deal-making culture. Do you think this is a good thing at a time when people want more transparency about markets, not less?
I don't know anything. I haven't seen anything about this. Like I said, I didn't get my invite either, so I guess I'm not one of the big boys here. But I don't know. Do you know about this?
Unfortunately, I even tried to.
You didn't get your invite either?
It's supposed to be like a members club.
Okay.
I don't think it has anything to do with like a. And again, I don't know a lot about it. I researched it last night when I saw this email. I didn't spend a lot of time with it because I too didn't get my. Didn't get it. I don't think it has. Country clubs are invite only. Every country club, golf country club is invite only. I have a feeling it's going to be more of a social club for insiders or ex-insiders. I don't think it's going to have any bearing on anything about transparency in the markets, black holes, spaceships, or anything else like that.
Yeah.
In my interpretation of this.
There you go.
So it's not market related in my opinion at all. I think it's more social status club.
And
at a time when New York City is trying to get rid of all of that.
We're not in the club.
And we are not in the club.
Unfortunately.
We're not. I think it's poor timing on this. I think the old school environment in New York is being regentrified.
Yes.
To something different. At least they're trying. Next one, please.
I believe it was last week someone asked a question about trade size. They asked about how much buying power to use as a percentage of the net lick, and you guys said you lean more towards a certain number of contracts. My question is, how do you decide how many contracts to use?
Yeah,
I think we have this kind of flip too, because we talk about sizing everything kind of in the same sort of size. Contracts, you can kind of, 1
to 5% of your account lick is what I would look at as
but size is going to differ between stocks. So like, your Micron trade is one contract. Your NVIDIA trade might be 2, 3. I mean, like when you weight it like size-wise.
Yeah, but my IBM position is not going to be 10.
No.
So I'll go broad-based and go 1 to 5% of my account size. In a larger account, it's going to be smaller percentage. In a smaller account, it's going to be higher. In a smaller account, it might actually be 7, 8, 10%. If you have a $20,000 account, and you use $2,000 for 10 trades, you're using 10% of your account size. I mean, $2,000 is really not even a wide iron condor in a big product like one of these $1,000 stocks or even an SPY or something like that. And I know you can go to ES and use less buying power, but that buying power is subject to change with the commodity options and the futures. So I guess that would be my answer. But you are correct. I mean, I'd like to.
And there's not a perfect number. Like
there's not a perfect number.
You're not going to get $2,000 on every single trade.
No.
It's going to be there's a variation there that's going to change on volatility, on underlying, on trade strategy that you're using. Whether
I'm not going to do a 10-lot covered call or synthetic covered call, so I use less buying power in a $20 stock than doing 2 or 3 contracts in a $200 stock. I'm just not going to do that. I think you have to put the risk in your own kind of camp here. But I guess the only way to measure really is by buying power, because that is your risk.
Yes.
Next one, please. Are reports like the commitment of traders or WASD?
WASD.
Yeah.
That's the
actionable. That's the
AGS.
Yeah, I think actually you mentioned Pete Momet today. I think Pete actually was the first one to introduce me to this too, and I had been trading as a market maker for 15 years. It's more of a commodity thing, but go ahead.
I mean, these like the WASD and the grains. It's not something that I trade a ton of, so to me, it's not that actionable. Mm-hmm. When I was on like with Westwater and Mikey.
WASD's agriculture. I mean, basically. Yeah. Mm-hmm.
Yeah. I mean, if that's your thing, I'm sure these are actionable. It's just not something that we trade a lot of.
Yeah. All right. Actionable. I mean, it's
good to know. I mean, it's something.
Sure.
If there was something that like easily discerned what direction anything was going to go, this whole thing would be a lot
easier. It's like production and harvest and
but sometimes like there's
supplies.
Yeah, it's just I don't know the moving.
I've never looked at it, but I know, as you mentioned, there are some that like to put into context for their assumption.
Sure.
I mean, that's really what it comes down to. I mean, it's almost like looking at a chart. You see what you want to see.
Yeah, you
zoom out on a time frame if it fits you.
Yeah.
You zoom in on a time frame if it fits you.
Yeah.
Everybody comes up with different lines, different ways of looking at it. It doesn't make one more wrong or more right than the other. It just fits your assumption.
Yeah.
So I'm okay with it. Not something I do. So
I agree.
I look at, but
it
does have a heightened volatility sometime around these reports. So that's good. Next one, please.
I've been consuming tasty content and learning so much, but I've never traded before. How do you know when you're ready to do your first trade?
My first trade was in 1983, so I think I forget why I was ready.
It's like the birds and the bees talk.
Yes, yes. You just know.
Yeah, you just know.
No, I mean, listen. How do you know when you're ready? If you've been consuming content and learning as much as you can, I don't care if it's for a week, 48 hours, or 4 to 8 months, you're ready because you've taken the initiative more than anybody else that you know, probably, more than your neighbors or anybody else, to learn something. You have to go and apply it. One contract, defined risk.
Yeah.
You might even surprise yourself and make a couple of dollars. Like, just do it small. Look at what the buying power is when you put on that trade. Realize that that's your risk over the 45 days. And if it's, $450, you got $10 worth of risk on a linear basis for the next 45 days. You're only going to keep it for 20 days. So let's cut that risk in half on a straight line basis, $250, $5 a day in risk. It's a cup of coffee at Starbucks you can afford to put on that trade and watch how it works. That's when you know you can do it. That would be my way of doing it.
Yeah, options, the great thing about options is you can define the risk and you can make positions very small relative to the underlying there is so much flexibility here. I agree.
There's no stock out of your reach, no matter what your account size is with options. You can make a $5 wide spread basically in any stock, whether it be a $20 stock, $100 stock, or $1,200 stock.
Yeah, I think it's, one of the hardest things to do is just clicking the button. And once you do it, you kind of, get through that, angst.
Hump, yeah.
Yeah. Mm-hmm. And I think that's the hardest thing for people to do, but you got to do it at some point. It's impossible to do this. It's not the same. Paper trading, simulated trading, back testing. It's all, when you don't have emotions or real skin in the game, it's just a completely different animal, and it's just not the same. It is just not the same.
Totally agree. We'll take a quick 90-second break. We will come back. We've got more Tasty Live after this. What do we got coming up next? Well, we've got a little bit of an option jive for you. We'll be back in 90 seconds, Tasty Live. Then the opening bell. Even the S&P's up 4. Cancel crash. We'll be back in 90 seconds.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
It's option jive. That music is time for an option jive as even the S&P sit up 3, NASDAQ sits up 100, Dow is down 175, regained about 100 handles off of its lows. Go.
Option jive.
Option jive.
What do we mean by being neutral? What does that mean to you? Are you just in the middle of everything? Perfectly.
I was going to say something.
Playing both sides.
Say something so stupid.
What were you going to say?
But I matured in the 48 hours you were gone. Neutral is a strategy I think that we've come up with here for a long time, trying to get a position where letting the market beat us. We believe in market neutrality. All news is already priced into the market. Efficient option theory and market theory would say that prices are perfect with the penny-wide markets. Let's see if we can take what the world is thinking and do something that says, let's just move in between our expected moves and try to benefit from that and manage the winners. So that's neutrality.
I think being directionally neutral allows you to be long and short at better prices than what you're looking at right now. So I think, when you look at your positions as a cumulative position, you might have some bullish, some bearish, some neutral positions. You should overall be kind of flat to market. As the market goes up, you get short delta. As the market goes down, you get long delta. And that's easier to do right now than it is into the future with all the news and the fear and the, everything that's changing.
It works in cyclical markets, which we have not had as of late.
Sure.
I mean, overall markets.
Yeah.
Like if you're looking at ETFs, which I believe is where they're going to go and not go into neutral stocks.
Yes.
I mean, to individual stocks.
Yes. So let's do it. So directionally neutral strangles can be defined in several ways. Recently, one of our viewers asked a question of how do you define a neutral strategy or neutral strangle, neutral iron condor, and what are the differences between each definition? And then when should they be applied? The common question we get is like, do you go the same distance out of the money? Do you go to the same delta? Those are two different, because of the skewness that you have in different products. Something like a Micron or an NVIDIA is going to have call skew. So your call relative to the put is going to be further out of the money. And so if you really want to be truly neutral, you would look at it from a delta perspective. Some people look at it from a premium perspective. That's going to line up pretty close to the deltas. Equal distance is going to play into the skew. So on something like a SPY, you're going to be long delta. Something like an NVIDIA, you're going to be short delta. So there's different ways to kind of look at
on entry because of
because of the skew.
Yeah, right.
Yeah. If you went
so really what you're doing is let's just say for argument's sake, what you're trying to point out here, it's great. It's a great point for somebody who's never done this before. You're selling the 20 delta, exactly the 20 sell delta on both sides, and you're going to go $10 wide for argument's sakes. When you go $10 wide, those options that you buy, you would think would have the same delta, but they don't because one's going to have skew. It's going to have a higher delta than the other, which is going to make you either long or short, depending on if this call skew.
And that's because there's
a great point that I don't think we've ever really talked about.
Yes. The normal distribution is not, it's real, but it's not in current markets. There's speculation and hedging that comes into play, and that's what skew is. Like you would expect that everything that the probability of a stock going up $5 versus down $5 would be even. It is not even from a probability and from a skew perspective. Like NVIDIA has a higher probability of going up $5 than it does going down $5. And that's just option prices tell you that because that's it's same thing as like sports betting. Like when when one team is the favorite, it has a higher probability that team is winning based on a number of factors. It doesn't mean that plays out. That's just what the market is pricing.
And that's what we try to take advantage of.
Yeah. But if more people thought it was going to go down, the market would price it to be going, to be that way. Sure. So it is what it is, but it's not normally distributed, at least not priced to be normally distributed. So getting back to what we were talking about, which is delta neutral strangles. When you talk about delta neutral, it's just the deltas on either side of the stock. So selling a 50 delta put and call would be flat delta. You'd have no delta on that position to start at that given point in time. If you sell the 20 delta put and the 20 delta call, it doesn't matter how far the options are out of the money. At the start, that trade has no delta. So delta is the theoretical change in option prices given a $1 move in that underlying. So when you are delta neutral, a $1 move up or down would theoretically have no change. Those deltas are going to change, of course, but that is the thought process. If the stock goes nowhere, those deltas will come in. For contracts with delta between 10 and 30, delta can also be used as a proxy for the probability that a contract will expire in the money. So when we talk about POP or probability of profit, that's the probability that the stock will be out of the money at expiration. It's the inverse of whatever the delta is. So the delta is 30. It means it has a 70% probability of expiring out of the money for that one option. When you put in two 30 delta options, you have 30. You have less the credit that you get on the trade. But you have a roughly 60% probability of that option, of that trade, both sides expiring out of the money because you're on both sides of the distribution. Strategy gives a trade where there's an equal probability of an underlying reaching each strike, both on option, based on the option pricing model. So when you sell a 30 delta strangle, 30 deltas on either side, it's equal probability that one or the other will be in the money at expiration. And that's the same across any deltas. So in the platform, when you put on a trade, you'll see the delta gets added up. If you're short a 20 delta and on the put side, short a 20 delta on the call side, same exact delta, it's going to net out to zero. That is what delta neutral is when you look at the delta of the options, you add them together, it'll be zero.
And you got to be a little subjective with this too, right? 1 delta, 2 delta, 3 delta, one way or the other is pretty much delta neutral. So don't get too granular with this.
Yes.
You defined your risk on entry. That's the most important thing. You went to the same delta on entry. That's the most important thing. As the stock moves up and down, your delta is going to change ever so slightly. And volatility, if stock doesn't move at all and volatility changes, your delta is going to change.
Yeah. You can still be delta neutral if the stock goes up or down. Yeah. Which is because you're, in something like SPY, if the stock goes up $1, you lose delta on your put, you gain delta on your call. It's right. You can still be neutral.
That is right.
On that position.
Correct.
So price neutral strangles consist of a put and a call that are approximately the same price or the same delta. The strategy gives a trade where there's an equal expectation of tail risk to the upside and the downside in the underlying. So when you're looking at delta, it's the equal probability on either side if you are putting them on with the same delta. So in that same example, you'll see that the delta of the overall position is zero. You'll also see that the price of the options is basically the same. So when you go to the same delta, it's generally going to be around the same price on either side of the stock. The distance away from where the stock is trading is what can be the variable. And that's going to reflect in skew. And there you go. So you can see price of the options, basically the same one. This can skew based on the bid-ask spread. So, if you see this and you look at the options and you're like, well, one is $1 and the other is $4, it's probably what gives. It's probably a really wide bid-ask spread. And it also helps you price your option. So they generally, if you're at the same delta, are going to trade for around the same amount when you look at those trades.
Perfect.
When you get into equidistant strangle, so this is equal distance away from where the stock is trading. So the stock's at 100. If you look at the 90 strike put and the 110 call, that's an equal distant strangle. They have a put and a call strike that are equal dollars amount from the current stock price of the underlying. They're not necessarily going to be the same price or the same delta. That is the big key here. This strategy gives a neutral trade based on the assumption that the distribution is normal and that there's a 50-50 chance of an up $5 or $10 move, whatever your distance is. That is not the case in actual trading. So you will see skew to one side usually, especially when you're trading like 30 or 40 days out. When you're in the 0 day, there's probably a lot less skew or no skew really, or sometimes it'll flip back and forth from calls to puts, whatever the day is looking like. But when you're looking at a 30 or 40 day trade, it's generally you're gonna have skew on one side. And so for this example, with SPY trading like, just under 715, you're looking at like $14, $15 out of the money on the put side. You're looking at $14, $15 on the call side, or I'm sorry, you're looking at like $5 or $6 on the call side. The equal distance, you're 5 or 6 on each side. I'm sorry, I'm doing bad math here. $5 or $6 on the downside, $5 or $6 on the upside. You could see when you look at the delta, so on the upside, the delta is actually 46. So there's a higher delta on the upside. You look at the premium too, the call is actually trading for more. And so this is where skew comes into play. The market is pricing a higher potential distribution to the upside than there is to the downside for this specific example at this point in time. That can change. It is dynamic. It'll change with volatility. It'll change with price, all those things. All these definitions of neutral are founded on the assumption that around future underlying price moves that may not be true. So you have to keep in mind that options are just pricing speculation and hedging, and those are kind of in the same bucket here. It is not a given. Like just because something is a 95% pop, it doesn't mean that it's a free money trade. It's the market is.
And a lot of times it's funny you say that because I didn't add that in there. Nothing is free money, right? You see something and it has this high, probability of success. You say, how can this happen? And the probability of success will change as the trade is on. At that moment, it looks so great. Nothing is free.
Yes.
There's risk to everything.
So there are many definitions of neutral. I think the easiest one to come around to is just looking at delta. That's why we focus on delta. 20 delta on either side, that's a delta neutral trade. Choosing a mix of delta, price, and distance and distant neutral strategy gives you the most holistic portfolio diversification. So when you're using all these, like it's okay to do, an equidistant strangle. You're going to lean generally a little bit short if you're in something like, NVIDIA. Mm-hmm. If you're in something like SPY, you're going to lean a little bit long. There's no way to fully eliminate all portfolio volatility or all portfolio delta or all portfolio. There's no way to get to zero. You're never going to sit at zero with anything. Just because markets move, volatility changes, time passes, all those things.
Life goes on.
Yeah, all those things are going to change your delta exposure. So
very good. Let's take a quick 90-second break. No break in the S&Ps as they're up 7. About 20 handles off of their highs, now about 20 handles off of their lows. Let's just call them mid-price for the day. We'll be back in 90 seconds. Let's take the live. Opening bell next.
Woo!
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with the opening bell being imminent here. E-mini S&Ps are up $6.50. That puts us in the stratosphere at 74.33. I wouldn't say the stratosphere because it looks like it's a triple top here, really going nowhere, right?
Triple top.
Triple top. There you go, son. 1, 2, 3. I mean, between friends here,
Look
right?
at you.
NASDAQ up 130, doing the same thing. Russell down 240. No triple top here. Russell a little bit weaker than the NASDAQ and the E-mini S&Ps by a skosh. Dow down 150. It too is doing more like the Russell. Russell and the Dow seem to run in tandem these days, as E-mini S&Ps and NASDAQ usually run in tandem. Volatility up 8 cents, 2065. You can see here at the low end of its range. Yesterday was really a telling day when the market was selling off 50, 60 handle move to the downside. One we have not seen in quite some time. Volatility really never got out of its own way, and here we sit at up 5 handles. Bonds 112.06 got down under 112. I missed them there. I didn't do anything there. Bitcoin, I've been trying to sell puts in there. Bitcoin, I guess if I was trying, I would do it, right?
That's true. You have hands.
I have hands. E-mini S&Ps, Bitcoin down 700, kind of in the middle of its range, lower of its range. Ethereum doing the same. Ethereum a little bit stronger relative. Oil now down 15 cents, back near its highs. Let's call it as we see it. Gold up $10. Silver up a lot more. Gold up about a quarter percentage point. Silver up over $2, which is 2 1/3 percentage points. We are now maybe $100, $200, $300 loser on our.
God, you stink.
By this time, your first day gone, I was up $1,000.
Oh, wow.
I just took it off. That ratio is now under 54, ever so slightly. We bought it just over.
Yeah,
54.
silver just rallied like $1 while we were on the break.
A couple of days ago, by like 6 trading days ago, this was trading around 61, 60.
Yeah, which is $6,000 or $7,000 move in the small
almost
$1,000
a move to the downside every day.
$1,000 a point.
A point.
So $6,000 or $7,000 in that total span.
That is
going from 60
in the last 6 days. I was just averaging
61 to 54. $5, $6.
Big moves, no doubt about it. Yeah. More than that futures pairs usually trades. Cisco for earnings on its or near its highs, 99 and change. IV rank of 104 is pretty good. You look at markets in June, if you go to the monthlies, they're okay, not great, 30 cents wide or so. But here's a $100 stock, sub $100 stock at the moment. Decent implied volatility. Maybe people will be running into here to do something. $7 expected move for May. We'll see if that expands a little bit. You can see that the May options have about the same type wide markets, 20, 30 cents wide.
There's our bell.
Do the
The
monthlies.
people would like copper quoted now that it's in play.
/HG. Give the people what they want. If the people want what they want, then that's what they will get. It's up another 2%. Copper futures trading 6.66. The devil number.
No!
There it is to the upside, just a skosh off of its highs. There you go. I hope you're happy.
Okay.
Even the S&P is crashing down 3. NASDAQ,
no.
It's head up 90.
How will you ever survive the great crash of May 2026?
You joke, but it does seem like that sometimes. Goldman Sachs is your leader to the downside on the high option volume list, down 7. Microsoft down 5. Coin down 4. AVGO down 5. BABA for earnings down 4. Meta can't find any love, down 3. MSTR down 2 in the orders. Shop down 2 and change. Amazon down 2. Hood down $1.60 or so. Let's see what's going to the upside. Oh, where do these stocks come from? MU up 36 or 37. Sand
back
up 37 or 38. Nimbus up 21.
NBIS.
That's a 10%, 13% move. I'm sorry with my math there. AAOI, I got a buddy Peter who writes me about this stock every day. He's been trading it like a champ. It really is just a stock play. Up 15. There's your Wolf you talked about just a moment ago, up $13. Wolf. SMH up $7. That's a nothing move in SMH, to be quite frank. BE up $5. It does look like the upside, even though the market isn't doing anything. I guess the NASDAQ is green. Seems to have bigger percentage wins than the downside as we go here.
Yeah.
What are you thinking here, son?
I'm just putting some orders in.
Your gold silver ratio is sitting right there, really hasn't moved since the last time I quoted it.
Yeah.
Probably won't be putting any more on if it goes lower at this point. Moving $1,000 a day, you probably sit tight and try to manage a winner. If it goes lower, try to do something with that tomorrow, right?
Yes.
AVGO down 6. NVIDIA up 4. Didn't mention that, 4.5 or so. VRT up $7 for those people who are playing these.
Got a little monster in Tesla here. Good monster.
Good monster.
Good monster. I need it a little bit lower to
I
be
didn't mention Tesla, up $4. Tesla traded as high as $4.39 and change. It's $4.37 and change right now. It's actually come off a little bit. Google down $1. Apple down 45 cents. Microsoft still down 5. Mixed bag of tricks here.
Yeah.
Across the board.
I don't have the time. I'm trying to.
At LITE, man, you want to talk about a stock that you trade, 10 shares of or something, and that would be light.
Yes. I'm going to try and close out of this big, beautiful butterfly I have in Micron.
Big, beautiful butterfly.
I mean, we've traded that twice.
Mm-hmm.
I mean, I just took $2,300 out of it.
Oh, beautiful.
It was just a wide butterfly, 100 by, or I think it was, what did I do? 150 by 100. So it was an upside skewed butterfly.
Beautiful. I love
into
it.
the move today.
Me like you a lot. That was an MU, right?
That was MU, yeah. Pushed it through.
MU, do you consider us taking a breather only up 36?
I guess. Sort of.
Uh-huh.
Baba basically unchanged here.
Yes,
I'm going to take off. I had a calendar spread. I'm just going to take off the call there. I mean, we do have what's your assumption, so we'll have some good stuff there.
Okay. Even the S&P down 6, NASDAQ up 80.
Nothing's happening. I'm just putting.
No, nothing.
I'm just putting some orders
happening.
in to.
When I look at some of the existing positions I have for option trades today, neither here nor there. Not the best 2 or 3 days. I'm long a little bit of McDonald's. It's unchanged. Really not doing much of anything there. Microsoft, I've got a little bit of long delta there. It's down about $4. Nike, I got a little bit of long delta there. It hasn't gotten out of its own way forever. NVIDIA, I've got a little bit of a diagonal spread. Prefer the downside. It's up $6. So far, you would say I was 0 for 4, and you would be right. Palantir, I have a little bit of long delta with. It's basically unchanged. SMH, kind of flat. It's up $8. ExxonMobil, down 90 cents. I got a little bit of long delta in there, some premium self.
I just closed some calls that I had in. This is the least sexy trade ever. Okay. I'm long stock in DraftKings. I had I sold 2 calls. I think I had a strangle on. I legged out of the puts. So I had 2 calls against 100 shares of stock. Stock's down a handful today, or over the last 24 hours, down below 25. So I legged out of the calls and just rolled to 1 in June. So I'm 1-to-1 there.
Beautiful. DraftKings down 50 cents.
Yes.
Even the S&P is down 11, $5 off of their lows. What are you thinking about here?
Nothing. I mean, it's kind of a pretty muted session here.
Okay.
Yeah. Cool.
All right, ready to take a quick 90-second break? Let's take a quick 90-second break. We'll come back with more Tasty Live. We got an option. We got a what's your assumption? We're going to look at 15
Yeah,
trades.
we got trades. So
10, 15, 25. We'll look at something here as even the S&Ps are down 12. We'll be back in 90 seconds. Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more because it certainly has meant a lot to us. It saved us a lot of money and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. Is even the S&Ps meander down 11?
Yeah.
Volatility.
Volatility's not going anywhere. It tells me this is another buy the dip.
10-cent move. 10 handle, 11 handle move on the even the S&Ps. A mixed bag of tricks
yeah, but
here.
There's no.
You had the Russell down almost 2% at one point yesterday, and we didn't get volatility doing anything. I know the Russell's not the indicated the even S&Ps and the Nasdaqs might be, but yeah.
Yeah.
I don't expect volatility to move either on a 10% move here. We'll see what goes on.
$10 move, not a 10.
Sorry.
If it was a 10% move, we have some problems.
Kids couldn't handle it.
No, couldn't.
Let's go to
got to buy the dip.
What's your assumption?
A 10% move would be great. Buy that dip.
Well, we did buy the dip on a 10% move, which we had last month. Well,
I know.
Month before. But we bought it down like 5 and 7 and 8 and 9 and 10.
Took a little heat. You were scared. You were like, you don't even know the bear market, blah, 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 blah. And then it ripped your face off. Just like every other time.
CMG, something you love, something your brother loves a lot. CMG, also known as Chipotle. Viewer is bullish, AJW in LA. Bullish near the 32 level. Well, lucky for you.
It's right there.
Right there. Down 47 cents. It's about a 1.5% move. Volatility upticking.
They have some sort of special dividend or something?
CMG special dividend.
Because I'm looking at the options. You look at the June expiration, and they have like 31.6, 31.2. Like there had to.
As of May, it has not announced, nor does it have a history of paying special dividends.
Maybe this goes back to.
Doesn't pay a cash dividend either.
June are quarterlies.
Yeah,
so maybe
I'm seeing those two, 31.2.
So when did they split?
This is the split. Did
they split last year?
Yeah, this is because of the split.
Yeah. So you have funky options in the June expiration that put you at just weird numbers. Mm-hmm. Like I would almost
remember it had like a 50-1 split in June 2024.
Yeah.
That's why you got the 20-cent wide.
Yeah. But it just makes it
lowering the price from like 3,000 to 65 or something like that. Yeah. And now it's 32. So it's been cut in half. I don't blame you for wanting to be a little bit long here in CMG. Just out of principle, stock really hasn't done anything. It's got an IV rank of 32. He just wants to it looks like take profits after meaningful rally. I love this optimism. What about a long at the money call spread? How can you argue with the guy? For crying out loud, it's a $30.
I know, it's just the options are goofy.
The options are a little bit goofy.
I just bought a 100 shares of stock.
Just going to go with the straight stock play?
Yeah, I'll try and scalp out of it. I
don't hate the play. Yeah. I don't hate the play. You got to, no matter what AJ or anybody else thinks, right now the expected move is around $3. So that's your kind of best case scenario, risk reward, upside or downside. So it's a $300 play on 100 shares of stock. Relatively low on entry trade.
Cool.
All right, next one, please. We're 1 for 1. Gotta love it. Netflix, June, bullish. Netflix, let's take a look at what's going on here. Down 70 cents. Everything feels too expensive to buy right now. Maybe Netflix is one of the few names that are still relatively cheap. You are correct. This is a stock that was trading around $75 before they got the $2 billion gift of
this has been falling off a cliff.
Not having to do anything, and then rallied up to 110, now 87. Down another 60 cents here. Good IV rank at 38. Bullish for June. July has a 38% implied volatility. June has a 33. So I don't think you want to do anything calendarized here. So you might just have to stay in June, in my opinion. What do you think here?
Ugh. It must have another earnings coming up like between June.
Yeah. Yes, exactly. Dollar-wide strikes, though, are good. Good meaning that you can get as tight or as wide as you want. I default typically to 1x2 put spreads. You don't get a lot of put skew in here, though.
And it's like,
I mean, you buy the 85, sell the 82.
This is a lot of buying power.
Yeah, it's horrible. 43% credit. I mean, only $3 wide. I know it has an 83% pop. The pop is what it is, but the credit you received is horrible. I think you have to get a little bit directional here too.
Yeah, I'm doing a cheapy diagonal spread.
Yeah.
90-94.
I don't like the vol skew in the June, July, but I hear you.
I just, to put 2,000 or 3,000 on a naked put at $1, I would just rather have a little bit more capital efficiency here. There you go.
I understand completely. You did that for
314.
Got it.
90-94.
Beautiful.
It's small.
I'd say good job out of you, but
you didn't like that?
No, I don't hate it. It's okay.
Yeah. All right.
I don't hate it. Next one, please. SPX 0 day. I haven't done one. We should do one. Even the S&P is down 20, right at the lows.
All right.
What do you think? Ivy rank of 42 is pretty good. 0 day. Trump should already be in China. I don't know. Musk tweeted out that they're on the plane. I don't know if it was old or not, but I didn't see it recently. But nothing major is expected until Wednesday night. Could be a quiet range day. So I'm going into neutral iron condor. That would be our way of playing it too. $28 expected. Oh, don't have to tell you anything. You did it right here. You
$5.50.
$5.50. You are correct.
$15 wide. I did around the 25 delta on the short.
73.60 on the short, 74.10 on the short. You can see it right there on the screen. Get you just outside the expected move. Classic.
Classic.
Say it one more time.
Classic. Absolutely.
Iron Condor. You mean the S&P down 26. Close all watertight doors. Volatility up 3 cents.
7,400.
Go.
Volatility not going anywhere.
No.
Kind of incredible.
Yeah.
There's just no
oomph.
No oomph.
No oomph.
Chad and Fargo, thank you for that. We are in.
Oh, yes. I forgot to mention your name. I apologize. Qualcomm bullish.
Oh, no.
Have you seen Qualcomm?
They are on the plane.
Down $2.
So they're in the government portfolio. They're on the plane.
Down from 240, down to around 200 and change. Also leaving for China. See, everybody knows this.
Yes.
And the stock is lower per K. I like defined risk downside. Let's see if.
Yeah, visiting China. There you go.
Okay. Sean in Hong Kong. What do you think?
Like a defined risk downside. Semis.
You could do one of your diagonals. See here, I like your diagonal. July has a 69% monthly implied volatility, and June has a 74. You could play the upside. You could play the downside. They want to go upside.
They don't want the downside risk. I was trying to figure out what we were thinking of. Well,
he was bullish. He doesn't want to do a strangle.
Yeah.
And have downside risk, even if you made it a bullish strangle and have that convexity, as you like to talk about.
Convexity.
I like to say co.
I know it's because you're a little
special. We say special.
John Jay College of Criminal Justice didn't do you any favors there.
It was yeah.
Air hockey.
Math guy. I'm not even that good of a math guy, but I tell you something, I know how to take on risk. I'll tell you that much.
I am looking at a diagonal spread here.
Okay. Beautiful.
Okay. 1275 I got filled. I did the 220 in July, the 250 in June. Unbelievable that I'm even saying those numbers. And the 220, the 220
do you feel dirty?
The 220 with the skew is almost a 50 delta. There is so much skew to the upside.
Mm-hmm.
Unbelievable.
I know.
So I'm in. Right. I'm with you, Sean.
$12.75.
Minimal risk to the downside.
Yeah. Your risk is what you paid for it. What did you pay for this?
$12.75.
$12.75 debit. Interesting. Yeah. All right. Good job. Very nice.
For a 30-point wide diagonal.
Yeah, that's a good one. Okay.
Cisco, I don't know. Me neither.
Okay.
Stock's at 100?
Yeah.
When did this happen?
How did that happen?
Earnings play. Great IVR into earnings. I'm mostly neutral, but I don't want to get clipped too badly on either side. What would you recommend? Maybe an iron fly or iron condor if you wanted to define the risk.
Okay, we could try that.
What do? You think we just pin at 100?
Could try. We could try CSCO.
What about a June 100 straddle? You buy the wings at 85 and 115. Do this at $8. You have $600 in risk.
I don't hate it. I don't hate it.
I'm going to try and get filled here.
Okay.
Markets are a little wide.
Markets are a little wide. You have all four indices red, I believe, for the first time ever in recent history. The MESP's down 17, NASDAQ down.
They're going to rally this. The vol is going nowhere. We're green in the next hour. 100 straddle with 15 point wide.
Bitcoin flirting when it's lows of the day.
Oh, God.
79.7.
I did it at 870 credit into earnings. I did it in June, so you got a lot of time left until expiration. Not going to move all that much into earnings here.
All right. Beautiful. Next one, please. Neutral strangle in June. IVR is still climbing after earnings. So I'm staying with premium selling. RKLB from my boy Tom. I believe it's actually Tom Sadnov just doing it in incognito.
He's trying to get
RKLB. NASDAQ green by $2.75.
There you go. Can't keep
RKLB has not had a downtick. I haven't looked at this in quite some time. Ivy rank is 62. This is Rocket Labs. I was thinking for a moment it was
spaceships.
No, I know, but I was thinking it was the one I did with Katie when it was our first trade. It starts with Roblox.
Roblox.
Sorry, I was thinking of that. I was having a flashback. This is Elton John. Rocket Man, burning never long.
All right, I'm trying to do a little ratio spread.
Try as you may, my son.
There you go, at $1. I did the 125, 140, so you're 15 points wide on the call spread. And I sold the 150 strike call. I did the whole package at $1. So call ratio spread on the upside. If you move the call down or the call spread up a little bit, you get a better credit. But this one gives you a wider range to hit on the upside, a little bit more protection too. So your break even here is 165 and change, which the way stocks move now could be tomorrow.
Yeah, could be.
But it's that high, so I'm okay.
But it's that high, so you be all right.
Feel good.
Yep.
All right.
Beautiful.
Tom, thank you. I'm with you.
All right.
Sort of. Neutral / no risk to the downside.
Beautiful.
Neutral, though.
All right.
Cool.
I like it.
Next one. EEM. I actually just took a position off yesterday. I had just a leftover short call. EEM was down a bit yesterday. I think it was down to, what did it get to? It got to like 64 and change. I was short the 63 call. That was part of a strangle. I think I ended up scratching the trade and just, as I was looking at my phone at the pool, splish splash, piggy toes in the pool, I was like, I'm going to take that EEM.
Okay.
60-71 strangle, 30 to 60 days out. 60, I can't do that. Markets are wide here too. The 71, they have 40 or 50 cents wide. I think this is a no-go.
I think it's a no-go too.
I'm going to pass on this one, but thank you.
Okay.
Appreciate you.
All right. Appreciate you too.
Yeah.
I think it doesn't kneel
It's a
in
tough
Providence,
one.
Rhode Island. I don't think it has the proper markets here either. Although EEM's been on a tear.
Yeah.
Next one, please. McDonald's. Oh, man, I'm in here. Markets are not that great. Let me say that first. Meaning they're a little bit wide. Almost
thing
trade by appointment.
killed.
It got killed. It's up $1.50 today. I need it higher than this even. So you'll be getting it at a better price than me if you are so inclined.
Medium to long-term hold. Interesting. But the stock is too expensive for my medium-sized account. Looking for a solid poor man's covered call setup. What do you think? I like that.
Okay.
Could do something like, what's the medium term to you? To you, what's the medium term?
I don't know. Medium term to me, I'm always looking at a 45-day time frame.
Well,
I guess if you wanted to do a June, July, you can say it was medium term, 365 days.
Yeah.
Basically, I mean, July, you should be getting ready for my birthday present. You're not even thinking about it right now. So that would be medium term.
I agree. I think.
And also, this is not something that has great markets. You look at July markets and they're between friends $1 wide.
Yeah.
I really think you should stay shorter term in here, and you can get as bullish as you like. Give me S&P's down 14.
Diagonal spread. I did the 80, 280, 290.
Okay.
July, June, $5 and change. Get some positive gamma here. If you're bullish over the next 60 days, it's a pretty cheap way to do it.
Yes. I agree with you. Good job.
Good job out of you.
Good job out of you. That's McDonald's, $5.69. Meta, bullish. Betting Meta fills the prior gap down soon. I'm looking at an iron condor with the short put near the lower end of the gap. That'd be 625, and the short call near the top around 650. That seems relatively tight for me. Let me take a look at here. I haven't looked at the option chain yet. I just read it. With $20 wide wings.
I think they're doing like a butterfly. I think they're.
I mean, 650 is the 25 delta, and
Yeah, but they're setting this up as like a sort of butterfly where you're selling a put
because
spread.
625 is in the money with the put spread.
I have some long delta in Meta already. I have a diagonal spread here, so I'm kind of in this.
Can I talk about this for a quick second? You know, the stock is trading $600. If you're going to sell the 620, the short put is near the 625 and go $20 wider than that. Selling this in the money put spread, and this is a good example, not a great example, because the markets are a little bit wide in here. But a short put spread is the same thing as a long call spread on the opposite side, same strikes. So you might want to just look at this and really
better markets too.
And better markets, most cases, this with wide markets. Yeah. So you're usually better off going to where the better markets are, the tighter markets, and also just looks a lot cleaner on your overall page of your positions. Then if you want to sell another call spread above, which is higher, $20 higher, this is really what you're doing. It doesn't make any difference. It's a butterfly or skip strike butterfly or long a call spread, short a call spread to financing it. A rose by any other name.
Or a condor.
Or a condor, which is not an iron condor, which is calls and puts, which Luke in Kansas City was saying. He was 100% correct. Using calls and puts, it's an iron condor. Condor, same thing, same strikes. I would put it all on the call side if you're going to do something like this. Not my favorite trade. As you can see, it does have a low probability of success, but it does have long delta to it. It has about 5 long delta to it. I might look at just doing a $20 wide call spread by a $15 wide call spread if you wanted to do something like this. You know, that would be me. Did you do anything in
I'm long with you, Luke. I've already got it on. I'm not going to add to it here.
I don't blame you. Next one, please. And the last one, Shop, bullish in June. Omar.
96.
Orlando.
This stock has gotten myrtleized.
Do you know what myrtleized is from?
No. I've just heard it so many times.
It's the Three Stooges. Well before my time, probably. Well before your time. But yes, the Three Stooges. Myrtleized. A Shop.
If you don't mind owning it near 100, you're going to love it at 96.
They are Omar in Orlando, Florida is 100% correct. Better buy here. Then at 100, trading at 96, down $3 a change. Nasdaq just turned red, down 10. Even the S&P's down 13.
I sold the 90 strike puts in June, 355.
Oh, beautiful.
I'm playing for the. I mean, if you'd love it at 100, why not at 87?
You're doing the best you can with the limited capacity that I gave you. Shop 355.
Yeah, cool.
Good job. Good job out of you. SPX down $10. Even the S&P down 13.
Has that spread moved?
It's about $5.30 or something like that. Maybe $5.20. You sold it at like $5.50.
Yeah, which I put it in for.
I don't know, $4.75, $4.50.
Yeah,
you like?
$4.75 will do
Okay, $4.75. You the man.
Yeah, you the man.
Oh, you the man.
No, you the man.
You the man,
You
Mookie.
the man.
All right, look at you. 9 out of 10 here. Only EEM is not good.
Yeah. I even did CMG, which that has been a tough trade.
That has been a tough trade.
Sell those puts and the stock goes down $12.
Yeah. No bueno. All right, my friend. You look at you, right on time. I mean, Ryan was good, but you are unbelievable when it comes to the clock here. Microsoft can't get out of its own way, down $5. Palantir can't get out of its own way, down $3. We're going to take a quick 90-second break and come back. We got more Tasty Live on a pretty complacent day. This volatility is completely unchanged. We'll be back in 90 seconds. We got more Tasty Live. We got, can I say fan favorite with you in the room? I think I have to. Fan favorite, TP.
For sure, TP.
TP is on next.
Way bigger draw than I am. Way bigger.
Well.
No draw.
If it was a fight, they'd stop it.
Yeah.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. That's right, Tasty Extra, Mr. TP.
In the house.
Mega 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Is where it started, where it all begins.
what that means. E-mini S&Ps are down 10, Nasdaq's down 34, Russell's down 17, E-mini S&Ps are down 177, volatility's up.
Oh my God, we're crashing.
Nothing's crashing when you've got this man TP on there. How are you, brother?
All right. So yeah, and I hate the inside baseball stuff, but I gotta let everybody watching know that it's like Laura on the production side and between Nick and Tony, it just starts falling apart, and then 2 seconds in, well,
you got to flip a switch, TP. You
flip a switch. So
dance, monkey, dance.
Yeah, that's what they do to us.
All right. So here's the issue. So last week I said the SPOOs, the SPX is going to be 100 points higher. I was wrong. I think they're about $40 higher now when I last checked. Nice little risk. So yeah, okay, it rallied. Not as much as I thought it would.
It's okay.
It's all right.
I know. Hey,
we forgive you.
Thank you, Nick. Thank you for your forbearance. And
I'm a little nicer now. I had a little vacation, got to sit at the pool and stuff, so I'm not as salty.
Yeah, he's happy. Give him 24 hours.
You are big by big, dude. You are big by big. All right. Hey, Nick. All right. I saw an interesting statistic, and you're a young guy, but you're not that young.
Oh, you should see the picture they posted on me on YouTube. It makes me look like I'm 65.
He's really salty about this. I'm not.
I gotta talk to the team after this.
No, we got to take that down. But the point is, we can't like double your age. But the point is, and Tony, you remember this, is right now. And I know you know about this, Nick, is the big IPO news, okay? It's the SpaceX coming out. It's Anthropic. How do you say it? Anthropic.
Huh? Oh, the man knows Latin, and I have to correct English. This has come full circle, everybody.
All right, we'll figure it out. Whatever it is. OpenAI, I think I can pronounce that one okay.
Okay.
So here's what I saw, Nick. The expected market cap of those 3 IPOs, if and when they come out, and presumably they actually will, is going to be about $3.5 to $4 trillion. Those 3 stocks. For comparison, between 1995 and 2000, at the most manic levels of the dot-com bubble, 2,600 IPOs, 2,600 of them, had a market cap of about $3 trillion. Now, I know what you're going to say, Nick. You say, well, Tom, it's the time value of money, yada, yada, discounted and all that. Okay, fine. Maybe in today's market, they'd be worth $10 trillion or something like that. Okay, fine. But the point is, 3 stocks versus 2,600. The mania over these 3 things, particularly SpaceX, is great. I was talking to one person on a desk, and she's getting calls at least twice a day from people who want to, quote unquote, get in on the SpaceX IPO.
Sure.
They don't even know what an IPO is.
Right.
They don't know what SpaceX is.
Right.
They just know that maybe Elon Musk is somehow involved, that it's the hot new IPO that they see on all their social media. And so I'm saying, Nick, for a young guy like you, it's time to get involved with that crap. The market is going crazy. Ride the mania wave, Nick.
Oh, of course. I trade the momentum, and I'm all about it. I don't think you should fight what's happening. You should make money from it, and if it goes down and it stops, you can make money from that too. I don't think it's worth fighting. I will say I think the IPO situation is really, really interesting, and I've said this for months now. Of like, there's this black hole of capital that is going to have to fill this space. You have SpaceX, which is going to IPO at $1.5 trillion. That money has to come from somewhere, unless it's just sitting on the sidelines, which we've heard that story for 10 years, that, money markets are at record highs, nobody's participating, blah, blah, blah. That has to come from somewhere. And there's a lot of capital that is just going to be created, or it's going to come from something else.
Right.
You got to sell Microsoft to buy SpaceX, or sell NVIDIA to buy Anthropic. Like you're gonna have to make that decision. You can't buy it all unless there's an infinite money glitch, which there apparently is.
Well, it's and you never know what that quote. It's like what are they called? Dark matter in the universe, right? Or dark whatever it is. And it's out there. I can't see it. Maybe you guys can. I don't know. And these astronomers, people, they can see it, and it gives certain hints that it's there, right? But I can't go out and get a box of it, a jar of it. But the point is, Nick, yeah. And that's the same. That's the story with everything. Where is the money going to come from? And somehow it always is. I think this is, yes, there are two narratives going on. One is that the economy is kind of not so great. The job numbers that came out last week, it's a little thin, right? A lot of the jobs growth, they pointed out, a lot of the jobs growth was in like delivery services, DoorDash, things like that. And a couple of weeks ago, or 10 days ago, they came out with housing sales, housing numbers, I think for February, March, whatever. And housing prices had gone up. But the detail was, it was the $1 million plus houses that were going up in value. It was the $1 million plus houses that people were buying and bidding for, not the $350,000. I'm talking like $350,000 a starter home. Okay. Back in my day, that was a mansion. But the point is, it's there.
Yeah. Starter home in West Texas.
Money.
Not a starter home in anywhere else.
No. The point is, Nick, is that there are people with the money. And whether it's all in America or all in outside of America, and think of it this way: with oil at $100 a barrel at this point, or something like that. All these oil producers, and it is still, I don't care what these alt people talk about, it is still a petrodollar world. Nobody wants to stick their money in, short-term Chinese debt or whatever. They put it in a
40 days of higher oil right now. I mean, we had 3 years of it.
Yeah,
right. And so the point is that I think there's a lot of money, if not only in America, Nick, but all around the world.
Yeah, I agree.
And that could keep these stupid stocks. Again, Tony, what's the name of that?
Anthropic.
Thank you, Anthropic. The accent is on the second syllable.
It sounds like something like my dad would have to go get checked up on, like you got your Anthropic, your colonoscopy, your.
Yeah, so it's slightly invasive.
Yeah,
they give you a little bit of a sedative. They don't have to put you out completely to get your Anthropic checked.
Yeah,
it's Nick. God willing, you will get there too at some point. Unless you check out in the next couple of years, you're gonna have all that crap started.
Almost there. Brutal.
There, dude. Stay healthy. Stay away from sugar and whatever. But my point is, I don't think. You can poo-poo these 3 IPOs and stuff like that. I don't know. I've been wrong in this stuff before, and the money comes from somewhere and just buys up the story, because that's what it is. It's not the product; it's a story.
Agreed. What do you got for us today?
What's that?
What do you got for us
today?
Yeah.
See, here's the other story. Meta, AKA Facebook, AKA whatever, is in a death spiral. Okay, that's the story going around now on the interwebs and all that stuff. The argument is that cool kids like yourself, Nick, do not have Facebook accounts. That only old people, older than Tony and me, have Facebook accounts. Nobody who is anybody bothers with Facebook. It is filled with AI stuff, advertisements. It's just like, it's the worst of TV. Okay, if you think of social media as a TV alternative, it is the worst. It's just like what the worst of TV used to be. If you didn't have cable, you just stuck with the crappy little UHF channels you had. It was a bunch of reruns. That's what Facebook is right now. Meta hasn't really had a successful bid anywhere. Metaverse kind of failed. They had some other little ventures, spent a lot of money on it. They just aren't leading the charge anywhere. And their stock has been one of the most underperforming, underperforming of the Mag 7 stocks. If we go to the first slide, this is what I wrote about in the cherry picks yesterday. So you look at the 1 year data. Okay, Microsoft is down 9.1%. Meta is only down 6% year on year. Okay, but the SPX is up 25%. Okay. Every other stock, Amazon 26, Google 147.7, Nvidia 76%, Apple 39%, Tesla 34%. Come in closer 3 months ago, every other one of those things is up. SPX up 5.9%. The other Mag 7 stocks, Amazon, Google, Nvidia, Apple outperforming the S&Ps. Hey, Microsoft even managed to rally. Tesla's up a bit. Meta is down 10%. 1 month, same exact thing. Okay. Meta is the outlier on the downside. And it's the people that write these articles don't trade. Okay. Yes. And a couple of weeks ago, last week, I was very carefully selling some put spreads in Meta, thinking, okay, maybe we'll have a little bit of rally. But now I'm thinking, you know what? If the broad public is starting to now see a death spiral in Meta, that is going to be the next Yahoo or AOL or something. I mean, AOL's gone, but Yahoo used to be, back when you were still a kid, Nick, used to be a big deal. Everybody went to Yahoo, and it still has some valuable
they put it in the S&P 500. I mean, it was part of AOL.
Yeah, right. So, but Yahoo eventually sort of died and is not really a player anymore. Nobody really cares about what Yahoo does anymore.
Right.
And could Meta be headed for the same dustbin of market history? I don't know. Maybe. Let's go to the next slide. And this is a box plot. And Tony, I know you're all over the box plots.
Yeah.
I love a good box, not gonna lie.
Especially when it's plotted like this.
Yeah, I was a box trader. I mean, I know.
A lot of people trade those now because you can get 25 basis points better than what you can get on a T-bill.
Oh, yeah.
In SPX.
Yeah, in SPX, yeah. And you could trade in and out of it.
Yep.
And so just to clarify what Tony and Nick are talking about is the box trade is a theoretically zero delta spread. Theoretically, where it has teeny tiny deltas. It's basically flat.
Yep.
It trades, it's priced like a T-bill. Okay, so you buy it at a discount to whatever the difference between the strikes is. And that difference between what you pay and the difference between the strikes is the implied interest you earn on that box. Just like Tony said, if you look at this, and if you're careful executing, you get better than what's in T-bills, you get better than what's in CDs. Okay, you pay commissions, whatever. So
you don't quite have the liquidity to get in and out too. There's some slippage there too.
There's
but if you hold it to the end, monthly, thing, it is what it is.
But it is something that you can trade short term as like a play on interest rates, very short term. Like you might be able to make, and when you're doing this in size, this isn't a trade that a Johnny trader is going to make buying a 100-point wide box spread in SPX. It's just not capital efficient. But if you have a larger size account, it's a way to get a little bit of extra bang for your buck, for sure.
And the other point is, while your bank offers 3 month, 6 month, 9 month maturities and stuff, or go out to 12 months, 2 years, you can pick your expiration with the boxes. So that's the nice part about it. So if you have cash to sort of store away for a time, you can fine tune it with these things.
And you're not stuck in it. You're not, because like a CD, there's all the penalties and fees, all that.
I hate them. Anyway, so the box spread. Here's what the box tells you. These are based on 1 year of daily returns for these 7 stocks: Tesla, Google, Nvidia, Amazon, Microsoft, Apple, and Meta. When you look at the 1 day price changes, the log price changes every single day, and say, okay, show me box plots for these things. If I just looked at this I'd say, yeah, Meta's pretty good. What is this box plot telling me? Well, the light blue box in the middle is kind of where most of it's the interquartile range. It's where 50% of the values are, and it's pretty tight. I mean, it's not as tight as Apple or Microsoft. Right. It's a measure of volatility. Mm-hmm. So it's kind of the middle of the road volatility wise. The whiskers, those what they call the whiskers, those bars up higher and low and below, those are the minimum and maximum values. It's a little bit wider. It's a little bit more volatile than some of the others, but not nearly as volatile as Tesla, not as volatile as NVIDIA. The other big point is those little dots on the top are the outlier values. And you can research box plot outlier values to see how that's calculated. It's pretty straightforward. But they're all on the upside.
Yeah.
They're all on the upside.
They are on the upside, yes.
So if I just looked at this stuff, Tony, I'd say, yeah, Meta should be at least holding its own with the market. And it's not.
No.
And it's not. If we go to the final slide.
If anything, I mean, it's underperforming bigly.
For sure.
Oh, it's horrible. And so let's go to the final slide, and we can talk about the way I'm thinking about this. And this is just a big mess of the Mag 7 implied volatilities. All right. Meta is the red one down in the lower 5. Okay. It's down towards the bottom. And I would be surprised. Tony, to your point, it's been one of the weaker stocks.
Right.
The volatility hasn't gone up. It's not like you're being rewarded for taking risk because Meta's selling off. Okay. This is why I just have a weird feeling. And again, my hunch is worth less.
Hunch is worth a bunch.
It's not worth anything. But my point is, it's this lack of volatility. And the stock just keeps drifting lower and lower. No one cares about it. I'm sort of positioning myself a little bit longer, not long term as in, I'm not buying put spreads out 2 years from now. That's not my point. But just if I put on 45 days, solid call spread, the volatility is still high enough to get decent credits. I am positioning myself now to be bearish, find risk on Meta. That's my take.
Okay.
Ooh, you and Mr. Knight.
That's not great company, TP.
You know what?
You're only as strong as the 6 people you surround yourself with.
Guys, broken clocks right twice a day. Don't forget
That's right.
Nice. Very nice. Well, you made even the S&Ps rally. They're up 2. NASDAQ's up 71.
They love me.
Russell's down 12, and the Dow is down 140. Volatility in by 2 cents. This is more of a complacent day than even yesterday was in volatility, even on the down move yesterday, right?
Yep.
It's wait and see, guys. They're waiting and seeing what comes out of this Trump Xi.
Well, they're bidding all the China stuff right now. Baba, Baidu are up like $10 a piece. You have KWeb up, FXI is up. So market thinks there's a nice, big, beautiful tech China.
Baba traded down to 130, up to 144 today alone. Big move in there, 7% already. Yeah, I agree.
Baba.
You want one. I know you do. We'll get you your Baba. We're going to let you go. We'll take a little break. You'll get your Baba. We'll be back in 90 seconds. We'll bring in everybody from the Tasty Trade World headquarters and be following these messages. We're back in 90 seconds with Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nikki, we are back, son, and I don't know if we could say classed up the joint.
Oh,
I
yeah.
got a few stories about him that aren't so classy, but I will say one thing. It's better with this man.
So glad to be back with the brothers. Thank
Mr.
God.
Marte.
What's going on, boys? I missed you this morning. We usually have our coffee talk during the morning, and we can arrange our jab sparring back and forth.
I know you're working out early in the morning now and everything, allegedly.
Yeah.
And everything like that.
He's looking svelte.
He is looking svelte. He looks great.
Svelte.
Amazing.
Thank you. I got to get another wife sooner or later, right?
You're going to need somebody to wipe you. You are. I'm going to, yeah.
Getting to that age where we need care at all times.
Yeah. You broke your ankle, right?
Yes.
Yeah, you broke your ankle, and it took how long to heal?
It's still
12 years.
It's been it's literally
that was the point I was getting to.
Right. Yeah, I think I heard it in like 84, and it's just starting to come around. I had surgery December of 2024.
You correct me if I'm wrong. I'm going to change subject for a quick second here. But it's still on the athletic side of what we talk about.
Yes.
You played center field, right? When we
on
were
our team, left and center.
Right. He was the only guy that I've seen pull it off. I've seen other people try to do it. I don't know if
Throw somebody out at home.
Going to talk about for a moment.
Yeah.
He would go in center field, somebody hit a single, maybe they think they're going to stretch it into a double. It takes like that 2-3 bouncer, and he would catch it, make believe he missed it, take a step or two back, turn around, fire to second, and nail him every time. I got to give you credit for that.
Deception. I mean, think about it. Think about that team.
A rifle on you.
Yeah.
I was envious of. I would
Think
give
of
you
that
that.
team.
I would give you that. And speed, too.
Yeah, very difficult team to make. I got into a heated argument with the guy that played with us, and I was like, well, you could have never started on that team. He was starting to bring up quotes from like 1983 Florida softball. I mean, I'm like, all right.
Tom used to
I was
do that
saying
to
it
me.
as a joke.
Because my team, we won the championship like 3 or 4 years in a row. Just every year, just dominate.
How would we have done against his team?
That's what I'm saying. And Tom would be like, "Oh, you guys don't play softball. You're not good at softball. No.
It's a different age, different era, different time.
You couldn't get it past me at third base. Couldn't get past.
Was he at third?
They got hot bats. I mean, we were basically playing with wiffle ball bats. I mean, we were doing nothing.
But we had
hardly used
unlimited
gloves.
arc.
I mean, it was different.
Unlimited arc and 75-foot bases.
Yeah.
We have unlimited. Unlimited.
What about how long were your bases though?
Normal.
I mean, like those little league bases?
No. Like a normal.
I don't want to hear
We played
about
a
that.
UIC.
Right, that no, but I mean,
normal base.
Isn't it nice to have peaked outside of high school? I mean, most people peak at high school. I had Ryan on here the other day, and he was talking about his brother that peaked in high school, like Al Bundy, basically.
No, he's still on
He's
the
still
up.
peaking?
Still
peaking? Okay.
Grace Brothers.
I tell my
fine
son,
wine.
At least we peaked at like 23.
Yeah.
You know what I mean?
Right.
Now we're
It's been
63.
I'm still looking for my peak, right? But I always tell my son the same thing. I'm like, just don't.
Yeah, if your son doesn't know and he listens to this,
and listen
you were
up.
the man out
Listen
center
up,
and left. I'll
Aiden.
give you that.
Don't peak in high school. And you got a year left, right? But yeah, I mean, come on. Well, like, did you go to like your 45th high school reunion?
Me?
Yeah.
No.
Yeah.
My wife did.
I think I stopped after 40.
I think my wife did. Well, not 45th. I'm
Yeah,
that
I
old,
can't.
but-
I can't even.
Yeah,
I did my 10 year.
I never went to.
Well, your 10's great.
Yeah, but you were born here. I wasn't born here. I mean,
Right.
anybody could find me.
Yeah.
I'm not on Facebook. I don't do that kind of thing.
Yeah. And your high school is filled with grifters too, so you don't even want to, like, you might get your watch stolen or something. You go to your high school.
Tony, allegedly. Allegedly.
It'd be a lot of
Where'd
fun.
you go to high school?
Yeah.
There'd be a lot of
PS237.
Oh, that's right.
James Madison, where
Was it 237? I just made that up.
No, PS 207 and
207.
PS 278.
207. I was close. I knew it was the 2 and the 7. I'm in the middle.
You were there.
I was there.
Yeah.
I was there.
Yes,
PS
you're a
207.
native New Yorker. It
What's
gives
that?
you panache, a New Yorker.
Nah, I've been out of there since 1980. I mean, I consider myself
Chicagoan?
Yeah.
So Q is. Q's a Chicagoan now.
Yeah, I mean,
He's
if
like
you
got
spend
one New
twice
York,
as long as you, or
he has
more.
one New York word, like accent left. He'll just be talking normal, and then he'll throw, and then it's very difficult. He'll just throws
I've
the
got a
very
few
at
still, I think.
Right.
Especially
Beautiful.
If I'm drinking. I think I got a few.
Yeah. What do you think of this market, boys?
Complacent, resilient and complacent.
Right.
Resilient.
It used to be resilient. Now it's resilient and complacent. I don't know what its next move is going to be.
So a sideways move now, and this market's just slowly on a
Sideways move is a
45-degree
drift up.
angle up, right?
Pretty much, yeah.
No.
Yeah. I mean, things get more expensive. That's what happens.
Right.
Yep. All right, Marty, let's get to your list, my friend. We'll bring in Ryan. He's got a couple of slides. He came in with the tea today. We'll see what
We
he's
got to
got
get
say.
somebody really, really high level intelligent on here. This is why we have one of the Grace brothers with us, right?
I know. Vanetta did that to us this morning, too. I was like, Vanetta, you got to know your audience here. This is
Right,
like,
right.
She was trying to give us, like, what was centripetal force that caught us up.
I just want to keep it on a level
Yeah.
where just normal people will understand.
That's right.
Right.
That's right. Talk to the masses.
Right. I'm already surrounded by geniuses in this place.
That's
anyway.
right. Yes.
Right.
That's right.
Surrounded. At number 20, have Amazon at an 18. 19 is SanDisk and SNDK at 81. 18 SoFi, 18. 17 OKLO, 44. 16 SOXL at a 97. 15 Marvel, 110. RKLB at 14, 65. AAOI at an 81. 12 AMD at an 88. Filled. 11 Intel at 88. 10 Palantir, 26. 9 Meta, 35. That's been getting hit lately. 8 Baba, 71. SLV at a 48. NBIS at 88. Microsoft at a 50. Apple, number 4 at 42. Tesla at a 26. Nick, mine and yours favorite, MU, 101. And NVIDIA back on top again at a 73.
Yeah,
NVIDIA catch itself a little bit of a bid.
Yeah.
Here.
Watch those spoos above 74.26, I think.
That's right where they are, 74.
Right now.
Yeah.
Right now, unchanged.
I think if it stays up there, it could go. We'll see.
Yeah. Got to have something good coming.
All of a sudden, you got a crystal ball.
Talking my position right now.
There we go. You're allowed to do that. You are allowed to do that. That you're allowed to do.
Right. All right, gentlemen.
All right, I'm going to allow you to leave right now because we've got this man, my old co-host. I miss him dearly.
Oh.
Ryan, how are you, brother?
Oh, yes.
I'm good. It's nice to see you again, Tony.
Good to see you again. Thank you again for filling in for Nick, who was on another vacation, which hopefully will.
Oh, yes. Always on vacation this
Anytime. He lives a life of leisure.
Yeah, you know.
He's a kept man these days.
Yeah.
Oh, my
Yes,
God.
yes, yes.
You know.
Welcome back, Nick.
Thank you. It's good to be back. I missed it.
What
I tuned in a couple times, too.
I know. That's okay. It's hard to stay away.
I know.
It's hard to stay away. Ryan, what do you got for us? So you got a couple of slides for us?
Yeah, I got
today?
some
You came-
slides. We're going to go into presentation mode.
Hey, you know what? I didn't ask you, though. How'd you like doing the show? How'd you like
I loved it.
the
It was a
show?
lot of
Don't
fun.
lie to me.
No, I did.
Oh, good.
I really did.
Good. All right, cool.
The
We'll
morning
we'll have
goes
to ask
by
you back.
quickly. Yeah, you know, you think,
Yeah.
okay, 3 hours, that's quite a while. But no, it goes by instantly, really.
Yeah.
You're supposed to say it's a long time for my, you know, like I'm supposed to use that for my
I think
review.
it's...
Yeah, it's a ton of work, you know, hard work, backbreaking work.
Hats off to you guys. I think you make it look a lot easier, and I think anybody that watches the show and then once you get into the seat, and that's with anything where you're doing it on camera, it looks a lot easier than it is. The speed, the pace, the back and forth, the rapport that you guys have, the energy that you bring, you definitely put in a lot of work.
We don't control your pay or bonus. Just we appreciate the kind words.
But
all right, what do you got for us?
I get it. Let's take a look, guys.
Well, you got to save that speech for the right person.
Yeah, that was good.
That was a great speech.
Yeah.
It's coming from the heart.
Yeah.
Good. I'm glad.
Let's take a look at Bitcoin slipping below 80,000.
What is gives? What gives? What gives?
It was higher earlier, of course. So I put these together at 8:15. We're a little bit lower, but I think you've got to feel a bit more bullish here, guys. This is continuing to trade with the market. We saw the wild reversal intraday yesterday. When you look at the S&P, look at Micron, for example, a sell-off there and instantly bid back up. I think as long as that continues, you stay on the long side of Bitcoin here. You're starting to see some signs elsewhere too. We can talk about it in just a second. Solana trading a little bit better, but I track that momentum or the price momentum via moving averages for what it's worth. Starting to see a better picture with Bitcoin. It was breaking down there for a while, but if we could hold on to these levels, maybe get back above 80 today, that'll be some information that we could possibly trade off of. I think you could get back up to 90. I say all of that, and I still think there is some probability that you could revisit those 60s. Just in terms of where...
No!
Oh!
I'm sorry.
It gets like down on my cost basis and stuff like that. My last tranches here, a little mid-60s here. Oh!
Then you got to add more.
Oh, no.
Oh, no.
Oh, baby
I have to hedge
Jesus,
my forecast, of course.
That's okay.
But no, the way that you're going right now, I mean, these expected moves, volatility has come in so much. So that's the one thing that I would keep in mind, where if you're trading those expected moves, they've worked, and they've worked because you've been trading higher as vol's been collapsing. But at some point, you're going to get that volatility expansion, and you're not going to have this real tight range that you're trading in, and just be prepared for that. I still think you look to buy the dip. I think you're higher, longer term. Probably, you'll know a lot more by, let's say, as we get closer to October. But I do think you can get blast off mode. I just think that in the meantime, there's still some risk to the downside.
The Clarity Act stuff is sort of in the news. As it's not like passed.
It's not.
Like
it goes
talking
to
about it.
markup in the Senate Banking Committee on Thursday.
Okay,
So
but
there
that
will
doesn't. So okay, go on.
Yeah, so what happens there is you're going to have some deliberations over it, and you've seen some lobbyists come out recently. The banking industry continues to push back against this. It's bizarre to me to think that, hey, we don't want to regulate this industry because it wouldn't be good for consumers.
Yeah.
That doesn't make a lot of sense. I think you want to regulate the industry in the same way that the banking industry is regulated. There's going to be back and forth over that. But point being, there will be a vote that's held whether or not to take that to the floor of the Senate for a vote. I'm hopeful. Polymarket, we could throw that up if you jump to the whatever slide it is, 4 maybe. 5
cool. You got
on here.
Yeah.
Polymarket's got us at about one more. One more.
Yeah,
there we go.
Yeah.
60%, 59%
Okay.
chance. So decent probability. I think the risk is to the downside here. So if we do revisit the 60s, I think it's because this did not happen.
Okay.
It's just a lot more uncertainty.
Do you think it's more of a downside catalyst than an upside catalyst? Like, what's your so this passes, we get maybe 90, so like 10K up. But if this doesn't pass,
I think the risk is to the downside here. Like, is some of this priced in? Yeah, I think the market is pricing in a probability that this passes.
Yeah, so you have a little bit more risk to the downside that if this doesn't happen, you have more, of a move to the downside than you do to the upside.
And I think so. Just given simply where you are right now at this point in time, it's 80,000.
Yeah.
From 60,000. That's a decent move in a relatively short period of time. But that's typically how Bitcoin has traded previously. So that's on tap here tomorrow.
And if I'm looking at this, I know it's at the higher end of 59 right now, and it got up to 70 some odd percent that I could see here. It did get as low as 45%. This 50 and a little bit lower than 45% a couple months ago looks like looks like the mean is around 50-50, maybe like 52. 54.
It tells you that it's truly uncertain. It's
truly uncertain.
Like this is a coin flip, no doubt.
Yeah.
It does look like a coin flip.
We will know the details tomorrow.
Yes. Oh, really?
Well, in terms of what comes out of the markup, you can actually, if you want to, I don't know why anyone would, but maybe if you were close to this, watch this live so you can listen in on to deliberations.
No, go outside and play, boys and girls.
C-SPAN or something like that, right?
Do not watch this live. Go out and play. I challenge you to go out and play.
Right, get outside. Don't worry about this. But I think the risk is to the downside for what it's worth. 60% probability right now. It's come off of 75 though, just a week ago. So. And that was when the labor unions came out and started to push back against crypto regulation. So whatever, make it make sense. It's a threat to the banking business, but it's inevitable in my opinion. Crypto is inevitable. Stablecoin proliferation is inevitable. So coming out of this, probably look at Coinbase, look at the layer ones, things like ETH, the L2s on there. You look at just the continued growth of tokenized equities, tokenized securities. So platforms like Ondo, that's not a recommendation, but some of those areas in the market, I would expect if you get clarity, that there's some support there. Anyways, let's jump to our expected moves really quickly. Low vol, but these ranges have held up week in and week out over the last few weeks at least. Trading higher here, looking for a $4,300 move in Bitcoin, ETH, a little bit under $200 takes you to 2121, 2459 on the upside. Solana, super low volatility. That's just been stair-stepping higher, kind of grinding higher with the rest of the market. Doge trading a little bit better versus Bitcoin. XRP, we don't have a 150 on that range, but it is also moving up. Vol is super low, though. That's what I would call out. Premiums have opened up. Yeah. So you have at times, and I think it's come in a bit, but this morning when the market opened, the equity market opened, the out-of-the-money strikes in ETH-A and IBIT were relatively juicy from an IV perspective, where your at-the-money IV for ETH-A was 52. You could go a few points away, and you had an 80 vol. So you had a setup where you could possibly buy at-the-money call spreads or sell covered calls there. That volatility on those out-of-the-money strikes has come in a bit now, though.
If this goes through, stock-wise, Circle more than like a Coinbase would probably be the higher beta play? Or do you think both?
I think they both benefit, but you've seen Circle trade higher here. Coinbase is trading a lot better.
Yeah.
You kind of break out of this downtrend it's been in. It sounds insane to say, but I mean, the range in Coinbase is 200 to 400.
Yeah.
It's wildly volatile.
Yeah.
That said, your $400 stock price for Coinbase is at a $120,000 Bitcoin price.
Yeah.
So it's still highly correlated just with higher volatility. But when you look at the companies that benefit from this, the industry at large benefits. The banking industry does benefit as well. If they want to participate, banks will be able to custody these assets. They'll play a larger role. More products come to market. But Coinbase should, again, benefit. Circle should benefit. That said, with the stablecoin stuff, Coinbase is really the biggest beneficiary given the current agreement with Circle in terms of how much of that
they get
yield.
like a skim from
Circle. Any stablecoin.
Whoa, let's talk about.
No, because
I'm just kidding.
Because they like invested in, right? Like they were like a
Investor, yes, but also the commercial agreement for making USDC essentially the de facto stablecoin for the Coinbase platform means that those on-platform assets, Coinbase receives the majority of that yield from the treasuries that effectively give you that interest rate.
Okay.
So Coinbase makes a lot of money off that. You can look at their quarterly reports and you'll see, outside of the transactional revenue, looking at hundreds of millions of dollars here. Tether does not split that in any way, and it has this fantastic business. Presumably, if there's now the ability to pay rewards, and I wouldn't say that it legitimizes Tether, but if there's more competition in that sense, they're going to have to pay rewards too, so their business doesn't look the same in terms of the margins that they have.
Yeah.
But those would be some of the areas I'd focus on around clarity. And generally speaking, I think the risk is to the downside if it doesn't pass, of course.
I did a small short-term upside play in Circle, just a little diagonal spread. I went 1 week out versus 2-day here into the end of this week. It's kind of like a
small shot.
I mean, I'm long IBIT, so like I'm in that too, and I will be forced to dollar cost average if we get back to 60. But
I bid 45. It's caught a little bit of a bid over the last couple of days off. It's
just to play like a little news-driven move here.
Okay.
Hopefully it's to the upside.
Yeah, I hope so as well.
Yeah.
Awesome.
I mean, every dip in there has found some buyers over the last week or so.
Yeah, 100. We've traded it the last couple times that you've come on. I mean, we've had that into earnings too. It was a big move on earnings. It was up like $20 or something on earnings. Been good trade.
Yeah, well, I mean, you look at the checklist that we ran through a while back where it was like, what do we really want to see here?
Mm-hmm.
Volatility has come in a bit as you've bottomed with that process. We're now starting to see those ETF flows pick back up closer to, $1 billion or more week over week. Seeing stablecoin market cap growth, that's up 25% year over year, 320 billion. I think, again, it's on its way to $1 trillion. So you're seeing some of those signs. Price momentum is trading a little bit better. The market is holding up here, ignoring the war for now.
Yeah.
Maybe that is the next catalyst that sends us to that even higher level. Yeah. Who knows? But you're seeing a lot of the signs.
To that point, I closed out of some of the call spreads in oil futures because they rallied like full. They were up like 103.
Yeah, they got up to 99, rallied about 50 cents.
So I'm taking some of the money off the table here in oil.
Good job out of you. You should. Bring in the register. Nothing wrong with that, right?
Yeah.
We're going to take a quick 90-second break. Great job out of you. Decent job out of the market, too. Even the S&P's up 7. NASDAQ up 1.
High of the session.
Yeah, high of the session. Russell down 10 and the E-mini and Dow down 250. Volatility up by 3 cents. It was just unchanged, hanging steady at 2060. It has not moved. We'll be back in 90 seconds. Bonds down 10, 111.31. We'll be back in 90 seconds with Tasty Live. Peace for now.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. It's a very calm day at the beautiful SIBO.
It is. Number one, Liz, you're right. It is a calm day, and you're also correct. It is beautiful down here at the SIBO. This building is amazing. We caught the tail end of a tour yesterday. Learned things we never knew.
We were literally like Ferris Bueller's Day Off. We joined the tour at the end.
They do tours of the Board of Trade building, and we pretended like we were part of it.
We did.
And we really learned quite a bit.
I know, but it is an amazing building, right? It's an amazing building with a lot of history. This is brand new, but this used to be the old Board of Trade.
Right.
This used to be the old what? Wait, hold on.
The
We're on the
bond room?
seventh floor. Somebody's going to correct me, and I know it's going to be Frank in the chat, and I will look it up. But I was on the bond room floor when it was the bond room.
Back in the that was like 96, 97.
And I want to say it was on 7.
So that's why I was.
So there was the grain room and the bond room, and they were on 2 different floors. Somebody's going to correct me, and I'm going to go to the chat right now.
Just text TP because TP, that's where he was. Like when we were across the street on the SIBO floor.
I mean, what did I do? Block out 3 months of my life? What floor number I went to?
Yeah, I mean, it's not hard to do. So SIBO was across the street, and Board of Trade here. They traded bonds, grains. TP was here in the bond pit. And
He was in the bond pit too.
I believe it was this floor.
So it was either 7 or 8, but I know like 8 is the
No, I
visitors
think
gallery,
7.
and 4 was a floor too.
I don't know. I don't know, but it's a beautiful pit, and this building is amazing. If you ever visit Chicago, there's a newish museum, a Board of Trade museum.
There is a Board of Trade museum.
There are tours, and I don't know how you book the tours. I'm not sure, but then we see these tours running every day.
That we can do on Google. All right.
Every time we're eating lunch down in the cafeteria, the tours are rolling by.
They're rolling by. They really are. I'm trying to log into YouTube because I had a visitor down here today with me today. A big shout out to Adam and Kevin Nix. They were with me today, and that's for you, Allison, because that was one of my roommates in college.
It was fun. They were really cute, and he's a college kid studying finance and interested in production.
In production. Yeah, he was a really smart kid, so it was fun.
Okay. We were down earlier. We had a number come out this morning, PPI, I think. SPOOs were down. Now we're up 10. NASDAQ's up 170. So we've got SPOOs barely moving. NASDAQ up almost more than half a point. If we want to pop into the platform, we can do that.
Oh, let's do it. Okay.
I was taking a look at what's moving the NASDAQ. So I pulled up NASDAQ 100 and trying to see what's moving the most. Biggest mover today, Marvell.
Marvell, thank the Lord. Okay, and I knew Frank would tell me this. The Board of Trade main floor was the 4th floor.
Oh, 4th floor.
4th floor. I knew there was something on 4. So the SIBO was literally built above the 4th floor in 1973. Thank you, Frank.
Thanks, Frank. 1973. We weren't here yet.
Nope.
Literally. Micron is also up quite $40, up 5%. But it was down
Yesterday they were all down.
But by the end of the day, it wasn't down that much. Maybe 5%. Like
do me a favor, and I'm going to look on this tiny little screen. Go to Marvell, and I want to see if the bar yesterday equals the bar today.
Oh, sure. I think it's up more today than it was down yesterday.
I don't know, Jenny.
Yeah. It's look at that up move. We're making new highs.
Oh.
New
You know
highs.
what? I've been so distracted with my friends that I have not looked at the markets.
No one can see my high five. I was risking my
life and limb. Risking life and limb. Okay, so Marvell's up. That's great. We have the whole market up. We do have, it is a Wednesday. We've got an amazing study from Jacob. He's talking about jade lizards. It's going to be not exactly what people expect, but that's okay. Jacob's taking his own twist on things.
Right.
And these are buildable, and he's going to do another one next week and the week after that. So it's going to be good.
We are also taking live tweets. Send us a tweet. Include the hashtag LAZJNY. That's what we're looking at. Tweets with that hashtag. We are going to make a trade. Today will be our very first trade in the MAG 10, MGTN. We have it on our Tasty platform now. It has options. It is a new product at the SIBO, and I went over to the pit and told the guys, big day today, guys. We're going to trade the MAG 10.
So in that pit, for if anybody geographically needs to see it, is about 30 feet that way. It's behind the SPX.
Yeah. And it's a newer product, so it's just building steam. And, when the products are new, the markets aren't quite as tight as something that's been around for a while and more active. So they're getting a handful of trades here and there. And I said today,
I betted it. I popped one in and I got filled mid-market. And a two-legged spread that I got filled mid-market.
So we're going to do that today, too. So we have a busy show. Do you think we should jump right into Jacob's study?
Yes, I think we should. Are you ready?
Are you ready?
Drum roll, please. Can they do the drum rolls from here?
This is short-term Jade Lizard placement and widths.
And keep in mind, once again, we've received lots of emails. These are all buildable, right? So we have something today that we hadn't looked at before, and we're going to keep continuing on with these Jade Lizards, short-term, different distances, what we're doing with them, management techniques, and so on.
After the last study, we landed on doing 5-day Jade Lizard, setting a price target of, I can't remember, it was 25% or 50%.
Either one was fine.
Either one. They all worked over time, over the course of this 3-year study. Today, let's see what Jacob's taking a look at. Recently, we began to investigate how Jade Lizards translated to the short-term options world, finding that the upside-proof structure and two-sided credits perform well when entered just days before expiration.
Absolutely. At order entry, the key characteristics for a Jade Lizard are the distance out of the money and the widths of the spreads.
The Jade Lizard's defining credit requirement, collecting at least the call spread width, means that there's a natural limit to how far out of the money the short strikes can be placed, one that depends on the ratio of put width to call width.
Yes, and we'll take a look at that. Today, we're going to explore the range of the viable strike placements and their performance across several spread width combinations. Okay,
so
it's a little bit
really
confusing.
Diving deep into these.
And what is great about this is we both read it. We had to go backwards and forwards, and we're going to show on the platform what we're talking about.
Yes.
Okay,
so here's the study. Using over 3 years of data in short-term SPX options. He's using the 7-day.
Yes. Oh, it did say that. Considered selling 7. So we're just focused on one. They have to put parameters in place using 7-day. We landed on the 5-day in the last study, but that doesn't necessarily mean that it had.
They seem to have the best results.
They were all very good,
but
though.
they were all good and close. So he went with the 7-day, and you go a couple days out, and it gives you a little more room. Probably allowed him more opportunity to cover the width of that call.
Well, because in the 5-day, you really couldn't couldn't cover it. You got just under. So this makes sense why it's going this way. So the parameters are 7-day Jade Lizards with $10 wide wings, $5 calls, $10 puts, $20 puts, and $10 calls. $30 puts and $10 calls. So they're all variable distances, and they're going to be different placement from out of the monies.
So $20 wide put wings with $5 wide calls, $20 wide put wings, $10 wide calls. I think in that scenario, you might have a hard time covering that $10 width. And then the $30 wide put wings and the $10 wide.
That's why this was one of the most unique studies I've ever seen, because in order to cover it, you got to get pretty tight sometimes.
Right. So examined how far out of the money as a multiple of the expected move. And that's where we were thrown off, because I've never seen Jacob do a study like this where he's not using a delta, he's using a multiple of the expected move.
But we cracked your code, Jacob. We cracked it.
These Jade Lizards could receive a fill, expected move, and can these Jade Lizards receive a fill, meaning how often the credit mid-price was at least the width of the call spread. So in this study, this trade's not going on if the credit's not covering the width of the call spread. And often we will do a Jade Lizard where the credit's shy of the width of the call spread, but in this study, he's not.
Research has to have parameters, and so you can kind of extrapolate certain things from this, and it's interesting. Okay, so for those that couldn't form valid Jade Lizards, meaning you couldn't get that could form valid Jade Lizards, examine the results with winners being closed at 25% of max profit. Okay, that's key too. Checked at the end of each trading day at first day, then every 10 minutes throughout the day on the day of expiration.
Okay.
So keep that in mind too. Hold on one second.
So he has to check them. So it's not just like, close at 25%. Looks like checked at the end of each trading day. And only every 10 minutes on the last day.
Yeah. So if it wasn't closed for a full, like this has to be
25%.
25%, meaning that you need a solid 25%. It's not like it just hit it at some point during the day. So just keep that in mind as well, which means I think the results are even better.
So here we go, $20 wide puts and $5 wide calls. With this short strike, and here's where it got a little bit tricky. With the short strike, and that's going to be the short strike of the call and the put.
Are both at the money. So you're almost looking at a skewed iron fly where you've got a $5 wide call spread and a $20 wide put spread. Take it to the tape, Jenny. I want to show what we're looking at.
And let's we'll go through all of these then. A quarter of the expected move, half the expected move, 3/4 of the expected move, 1 1/4 of the expected move, and 1 1/2 expected move. So we'll look at this $20 wide put spread, $5 wide call spread. When I look at the bottom, if I see average P&L, the best are though at the expected move, or 1 1/4 the expected move, or 1.5 expected move.
I mean, right, but they're all that. I mean, you're looking at pennies. If you go to 1 in 25 expected move versus 1.5 expected move, you're looking at 10 cents, 15 cents.
Oh yeah, but all three of those.
Yes.
All 3 of those.
Yes.
More so than the at the money.
Right. Okay, so here, I just want to visually show what we're looking at here, because then he goes through with each of these as the strikes go out in time. So if you go to SPX, go to 7-day, and now the at the monies would be set up. So if you go to the 7 days, you're going to do a $5 wide call spread using the at the monies. I mean, I would split it a little bit, yeah.
And then a $20 wide put spread. And so, like Liz said, this is almost like a skewed iron fly. Here we're getting $10. So we are getting.
You're getting.
We could almost turn this into a $10 wide call spread.
Correct. So this is why he does it this way, and then you'll go into the $10 wide. You're going to go into the wider ones as well. But this is what we're talking about. Then number 2 is
this isn't bad. I don't mind this trade. Although the results of this one weren't great. It was average P&L of 27.88.
No, but so then just go. Can you go back to the trade page, and then we're going to show if you're going a quarter of the expected move. We're going to eyeball it, but Jenny's just going to take it up a little bit and down a little bit. If the expected move is 100, you're going to go.
We're going to go up $25.
Up $25 and down $25 with your short strikes.
So you can just got to go from 10 to 35, 74.35, and then I'm going to go down from 10 to 85.
Right.
So down to 73.85.
So we're just showing what they're talking about here, 73 and $20 wide.
65.
Correct.
You're here. Okay, yeah, you're covering the call spread.
You're still covering the call spread because it's $5 wide, and so on and so forth. Then the next one is a half of the expected move. Then it's 3/4 of the expected move.
And I hope you're not going to keep making me do the math.
And then it's the expected move. So I just want you to, where I always land is expected move. So that's just it. Let's go to the expected move.
And the expected move seemed to be one of the best scenarios.
Correct.
And when we place these, that's where we're going. We're going to the expected move with puts. Sometimes we're bringing the calls in. Sometimes we have a hard time covering.
Not a $5 wide, $20 wide.
Not on a 7 day. Not on a 7 day. So I'm going to the expected move in 73.05. 72.85. There's
What
my
if I made you do all of them? I was like, and now 1.5.
I'm not gonna sit here and do.
No, but I wanted to show how he got to where he was going.
Jenny, now do half the expected move. Now 3/4 the expected move. Now 1 1/4 the expected move. Keep going.
Keep doing it. No, I just wanted to get to it. Now, the expected move is a lot of times where I'll land, right? So here, you've got $3 on the $20 wide, so you need $1.50 on the top. You'll probably get it.
I'm gonna
$5 wide.
$5 wide, and it's
I mean, expected move is a relative term. You could bring it in
I can
one
bring
strike,
it in a little
and you could
bit,
bring the put strike in
and
one
that's
strike
what I'll
too.
do.
Yeah,
because I believe in this study, if he didn't get over the width of the call spread,
he didn't do it. Dun dun dun. He's also doing it at 9 a.m. By the way.
But I will say,
he's also doing it at 9 a.m. So there is a little bit more premium at 9 a.m. than there is at 10:15.
Okay, so let's take a look at this. I want to go to the next slide because I believe there's a slide which talks about like not doing these or not filling them.
Keep going. Yes.
Okay.
There you go.
$20 wide puts, $10 wide calls.
We know if you're barely covering where it was $20 on the puts and $5 on the call, you stop at the expected move because you can't get it.
We barely were covering the $5 wide. So in the at the expected move, 1 1/4, 1.5, you couldn't cover the expected move. But that's okay. The trade could still be done.
The trade can still be done. I don't mind these things, and it's okay, but he has to put parameters. But once again, I think my eye line goes to, Jenny, so far, every single one of these has an average P&L. Every single one so far has an average P&L that's profitable. Unlike some of the other studies we've seen where they don't have the average P&L that's profitable.
I want to take a look at this, the 3/4 of the expected move, because that's 3/4 of the expected move. So if we're, and this is $20 wide, $10 wide. So if again, $100 expected move, I'm going to go down 75 points. So I'm going to go to the.
See, I told you she wanted to do it all, ladies and gentlemen.
25, 35, 75, 73, 35.
$20 wide.
73, 15.
Okay.
And then the 85, 74, 85, 74, 95.
You're not there.
That's $1.
Well, it says you are. I mean, at 9 a.m. you might be able to.
No. This is a 7-day trade. This is 7 day.
I don't know, but nonetheless, Jacob somehow managed it to work. That's why I know that sometimes you're getting under the expected move.
I'd be okay with this. I'd be okay with sending this and getting 750 and having a little bit of risk on the upside.
Correct.
I would be. And your risk is minimal because you have a $20 wide put spread collecting $750. Your risk is only $1,250. Not bad.
No.
Because you see the average P&L on this, $60 a day.
It gets better and better as you go farther out that way.
Can't
Keep going.
wait. All right, $30 wide.
So what they're doing is widening the put spread. And my eye line goes, do you notice that there's more non-availables? There's less non-availables on the $30 wide because you're getting a decent credit from the $30 wide.
You are. So look at these results.
That's where I said my new favorite is expected move, $10 wide, $30 wide. $100 a day average P&L.
That's pretty good. I'm going to look at that. And this is easy. There's no math required.
I would
Go to
take
the brown bar.
Take it in a slight bit on that.
Okay, so I'll take it in a little bit. $73.15. $30 wide. 85. $72.85. There's the $30 wide.
Okay.
And on the upside, $75.10. And this is $10 wide, right?
Yeah. That's my favorite. This is my favorite so far. Now, I understand you're not collecting
Jacob covering it?
It's only when it's covered. He only puts it in when it's covered.
Oh, and he only puts it in. Okay, all right, hold up. He only puts it in when it's covered, which means if we're only getting $750 now with a VIX of 18 or 17, this is only going on in periods of very high implied volatility.
Yes. So he's looking at the win rate in there, the fillability, but the fillability is when he's putting it on. So you can see it's not 100% of the time.
Yes.
It's not 100% of the time.
Almost 99% of the time.
Darn tootin' close, but it's not 100% of the time. But yes, so taking a look at this, I understand you have to put some parameters on there, but that is where my eye line goes. You're taking a little bit of risk to the upside, which I'm okay with. You're taking a little bit more risk to the downside, but you can get out for 25% pretty quick.
Right, and you're getting a pretty hefty credit.
Yeah.
Pretty hefty credit. All right, what do we have? We have one more. Oh, the takeaways.
Yep.
Just the takeaways.
The key feature of Jade Lizards, collecting credit on both sides while eliminating upside risk, has been an excellent fit for the volatile yet bullish market of recent years.
Every combination we tested showed a positive average P&L, but that doesn't mean all approaches are equal.
Put widths drive max loss and buying power. Call widths set the ceiling on how far out of the money you can reach. That's true, right? So the call widths, the wider you are, the farther you can go. Collecting enough credit. $30 put, $10 call spreads were viable out around the expected move. 20 and 10, only about half of that, and 25 extended to roughly 1.5 times.
Within each width combination, further out of the money generally perform better once you've settled on widths. It may be best to simply look at how far out of the money you can go before credit reaches the call width.
With entry parameters in hand, next week, let's explore more ways to manage these trades over their lifetime.
Before we end this segment, I want to put one on. So let's go on, because I think we might be out.
We have two Jade Lizards on.
I thought we might be out.
No, we have two Jade Lizards on. I know we do, because I looked at it today. We have a short-term one in the 2-day we rolled, and then we have a 45-day one we put on yesterday.
Okay, well, just taking a look here at our SPX, I thought this 2-day might be off. The 2-day, it's trading 580, and we took in 625 total. So that's profitable.
We could take that off and put this on.
We could take that off and put on a 7-day.
I'm fine with that. I just don't want to have 3 on.
Okay, so let's take that off. We're 25 cents away from our order. We're 25 cents away from our GTC to take a profit. So let's take that off and put on a new 7-day.
Perfect.
Because it was through that new call spread.
Yes.
So let's go to the 7-day. And Liz,
I like the 30-day, 10-day, but that's a lot of risk.
The 30-day,
$30, $10.
I think for this account, it's a smaller account. Let's go. We have to do a $20
$520.
one.
You have to do 520.
520.
You
Even
do
1020.
Let's do 1020. Let's get crazy.
So 1020, best case scenario is at 3/4 of the expected move.
Yes.
Or even a quarter of the expected move.
No, go to the next one. I like expected move. I hang my hat on expected move. I use that bar for everything. And what I learned from this is that a lot of people ask this question, and this is probably why Jacob did this, because if you set up a Jade Lizard, a lot of times they are at the monies. It wasn't that bad when it was at the monies, when you're collecting that much over. Your risk is so little.
And I think to get to that 3/4 of the expected move, we'll start at the expected move and we'll keep bringing them in until we get the right credit.
Right. So I didn't mind the at the monies when you think about that iron fly, because there's so low risk in it.
That's true. And this one's $20, $10. there is very little risk in that one. And but you're kind of pinning. It's almost like a butterfly. So when you're trying to put on a butterfly for 7 days, saying this is where SPX is going to be in 7 days, that's next to impossible.
Well, no, because you collected $5 over. If you do a $5, $20.
Well, let me try. Let me see the $10, $20. So 10, 790. You're still getting 320 over.
That's what I'm saying. You're getting so much over. It wasn't that bad.
Your risk is very little.
Your risk is mitigated. Yes.
You've got a $20 right put spread, but you're collecting $1,300.
Yes.
I don't mind this.
I don't mind. I say we land on this one.
Let's try it.
Jacob's takeaways be damned.
Well, this one is the lowest average P&L, but it's the least amount of risk.
It's the least amount of risk. I would put it on. Let's try with that one. You know what? What we're doing in this account is vetting. I've been doing these in different variations every day. Every day I have one that comes off, and every day I put a new one on, and I don't stick with parameters. Sometimes I'm 2 days, sometimes I'm 5 days, sometimes I'm 7 day, but I kind of like this.
And I feel like it depends on what the market's giving you. If the market's down, 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 and ball's exploding, then you know what I'm doing? I'm going further out. I'm going $30 wide put spread. I'm getting wider, but with the market we have right now, that's been up every day, and who knows when the shoe's going to drop. I want less risk. So
yeah, we had one gleaming moment of a down day yesterday, and it ended up.
So I'm going to put this in. $20 wide put spread, $10 wide call spread. We're getting $13.25.
And are you out of the other one?
We're out of we closed the other one.
Perfect.
So I'm working the 7 day, and if we're taking, no, I'm not. Yes, we are. We're out of the other one. So if we're taking $1,320, 25% of that's almost $300.
Yeah.
So that's pretty good.
And so when you look at this, even if it gets closer to expiration and we're above, the $300 will be ours if it blows through it. So do you see what I'm saying? Like so who cares how high it goes up, because we get to keep $300 anywhere to the upside in 7 days. It's not a bad play.
So we collected $1,320, and if I put in a GTC for 25% to close it at 25%, we're going to get out of it at $990. So we're making $330 if we get out at 25%.
Yeah.
I feel like on this, you can lower your bar. It doesn't need to be 25%.
But it can be, because anywhere to the upside. So if you continue to go up, you don't have to do anything.
I know, but I almost think this average P&L on that strategy might be higher if he wasn't waiting for 25%. Because when when we're going at the money, it's you have to lower your percent to like 15, 20%.
Unless you have that overage.
You got the overage.
Because the overage is helpful.
All right, so that was...
I liked this one.
I did like it. I liked it. We're filled. Now we've got our working order in, and it's only a 7-day trade, which is kind of fun, because by next week, Wednesday, that's coming off.
We either have $300...
Or we're out what did we collect? 13. We're out 680.
Which is a good risk return.
I know.
Huh. I think I'm actually... Jacob surprises us on a daily basis. I love it.
All right. Now, big moment. Drum roll. Drum roll, please. Every time I hear anyone do that, it makes me think of Christmas Vacation.
I got to go like this.
Christmas Vacation, when they're turning on the lights. Okay. MGTN.
Mag 10. MGTN. So it's got the big 7 plus 3 additionals. It's got Palantir, AMD, and Broadcom.
Broadcom, yes.
Plus the big 7.
Yes.
What are the big 7? Can you name them?
Meta, Microsoft, Google, Tesla's on that?
Yeah.
Meta, I don't know. What's it? I got
Nonetheless, it's all the big dogs.
I'm going to read it to you right now. Okay. AVGO, which is Broadcom. Google, which is Alphabet. Tesla, Meta, Microsoft, Amazon, Apple. Oh, I was forgetting Apple. NVIDIA, Palantir, and AMD. That's what's in the Mag 10. So this is going to be our very first Mag 10 trade. It's new. We have it on the platform. We have options. We're going to be some of the first to trade it.
Yeah. Yes, absolutely.
I just went to the 48-day... Well, no, the monthly. Where's the monthly? So June 18th, you've got AM here. I'm going to go... That's the regular month. The regular monthly is an AM settlement. Is that surprising to you?
Yes, it is.
A little bit. But
no, I did a very, very baby trade. Like I said, I did the near term. I did the 1 day, 2 day diagonal. Honestly, I didn't even really look at where the Mag 10 was or anything. I just wanted to see price discovery to see if I could get filled, and I got filled immediately.
The fact that there's no bid or ask means that this is cash settled. There's nothing.
Now I'm just gonna let it roll.
Hey, Liz, what's your favorite term?
Cash settled. It's not secured. I want to say make sure. I want to make sure I wasn't going to say cash secured because I do not like cash secured. I do not like it, Sam. I am. I like cash settled.
So the fact that there's nothing here to buy and nothing here to sell means that this is cash settled.
Yes.
So I'm going to go to this June 18th AM settlement. Who cares if we're on the train and it expires? Psh, whatever. It's going to settle to cash. And let's look for something. The fact that it's $500 makes me think we have to define our risk.
We have to do a spread. Let's go to the expected move. We've been talking about expected move all morning. Okay. Or we can just do the 480-470, which is wrapped around the expected move. Put spread.
480-470 put spread for 225 doesn't seem bad.
No, let's do it.
We're going to ride the bull wave. If the market's going to keep running up, we're going to sell a put spread in the Mag 10 and keep riding the wave.
So you could do something that's skewed too. You could also do an iron condor if you wanted to, but then you're adding additional legs, which is fine.
You know, let's just try something very simple for our first Mag 10 trade and just trade a put spread.
I love it.
Sell the 480, buy the 470, collecting $225. Our risk is $775.
And we're going to put a GTC in for, honestly, let's lower our bar. We just need about $100.
Hey, I'll take $100 out of this trade, right? If we can. I'm going to ship this 480, 470 put spread in the 35-day June AM.
Do you think our viewers have seen Toy Story?
And I am going to...
Are you filled?
Not yet. I'm working it.
Because you know what I always think about whenever we're looking at this? Remember when they're at the garage sale and they're about to get sold and somebody's like, he offered him $50. And Ham goes, $50 ain't bad. I always think that, like, if we can get $50 out of something, I'm okay.
Yeah, sure. We're only 2 legs in.
$50 ain't bad.
We're only 2 legs in. 225. I'm going to lower it to 220. We're just feeling out the Mag 10, right? Never traded it before. New product here. Yep. Feeling it out. Moved it down by a nickel. Let's let it work.
So do you want to see what I did? And you can tell me if this was dumb or not. I'm leaving it because, like I said, it's cash. It's cash.
Because you got filled instantly.
I got filled immediately. Okay, you ready?
Yeah.
So it was, I sold in the 1 day.
Okay.
In the 1 day, I sold the 510.
Okay.
And then in the 2 day, I bought the 501.
Okay, so 1 day, the 14th tomorrow, and then in the 2 day, the 15th PM.
I mean, this is literally just...
You bought the 501.
Yes, correct.
So 501, 510, $10 wide, and you paid about $4 something for it?
$4 something for it. I'm going to tell you exactly what I paid for it.
So if we get a big run up in these Mag 10 stocks, which we could, because how many leaders of Mag 10 are on their way to...
Can I tell you the good news? I put it in my son's account.
Oh, JD, you're gonna be $500 richer, or
he's up $50 right now.
If he had more than $5,000 in his account, you could take it off.
But you know what? I've been butterflying things off. I think it's worth closing.
Oh, so I don't know. You don't want to risk him hitting the PDT. He's got to make it till June 4th. He's almost there. He's a couple weeks away. June 4th, that PDT is going to go away.
I know.
So, but yeah, it's trading 505 right now. So he is up.
He is up.
I'll be happy with that $50 you made him.
$50 ain't bad.
No. Okay, so that's the Mag 10. And we're working it. Working our 480, 470 put spread in June. And I hope we get filled.
I hope we do too.
I'm not going to keep chasing it down.
We'll let that work.
Yeah. All right. What do you want to do next?
I feel like I'm going to have to sell my son $400.
No. I
think it'll be fine.
Yeah, it might. I think he'll be all right.
It'll be okay.
Or take it off. You can see how many trades.
He has two already.
Oh, no, I wouldn't do it.
I'm not going to mess with it.
No.
Yeah.
No.
Darn pattern day trading rule. That's just it. That's the problem with it. A fat fingered error. It went into the wrong account.
So Liz is connected to her son's account. If she's in there, there's different ways you can do this. Because I have my son's account linked to mine. But I rarely have it clicked on. I only have it clicked on my account. So I only see mine. If I want to go into his account, then I go into accounts, click out of mine and into his, so then I'm only in his. So I never have the issue of accidentally putting it through.
So I do, because I like to see what orders come through, because he's still learning. So I need to see what order he's got on. And what I've been doing is getting him out of the pattern day trading, because people always ask, does he have over 25,000? He does not. But if he's been putting the SPX on, I put an order to butterfly it off for 5 cents, which is not a pattern day trading.
No, because then you're just
adding to it, not subtracting from it.
You're taking off the risk, but you're locking in your profit.
And he doesn't understand that yet. So that's why I need to see when he trades something.
Oh, yeah, you're kidding. He doesn't understand butterflying off
It's weird.
All right. Let's see. Do you want to look at Twitter?
Yes, let's jump in. Spoos are up 10, which I'm shocked by. What do you think today's going to bring, Jenny? Vix is. I'm gonna. You're in Twitter right now. We'll go to Twitter.
I was dead wrong yesterday. Dead wrong.
We were both dead wrong.
I mean, you were closer.
Price is Right style. I won. How about that? Closest to without going over.
You were closer. So I don't know. I have no idea.
Do you remember exactly what I said though? I go, listen. She thinks down 80. I think down 30, but none of us said green. It's exactly what I said.
And I said there was no way that spread was coming in.
Yeah, and it did. That was crazy.
Okay, so Frank Walsh is sharing Jim Scott from YouTube. So people on the YouTube chat, Frank can grab things from the YouTube chat and post them here on Twitter for us. So this is coming from YouTube, from Jim. Question for the ladies. I have a number of Leap Zebras that I use for poor man covered calls. Great. Some of them have significant P&L open values. Do they have guidelines for when to ratchet them up? Yeah, if you could take in a decent credit and ratchet them, we would. You're just taking risk off the table.
So let's go into an example, because we use ratchet for the zebra, but if you have a poor man's covered call, which means a deep in the money call, just go to anything. It really doesn't matter what it is.
Let's say like Marvell, because Marvell's been running up.
So go to Marvell.
So let's say in January, I had the...
You're going to go pretty far down.
Yeah, let's say I had like the 110 where I was...
You might even be farther down in Marvell.
Well, who knows? Let's just say it was... Because
there's still a lot of extrinsic value there.
Let's say I had this 120, 135, right? That's pretty far down. Zebra.
No, he's got a poor man's covered call. He wants to ratchet up a call.
No, he's got zebras. He's got zebras.
Oh, Leap Zebras. Yes. Okay. That he uses for poor man's covered calls. Got it. Perfect. I was thinking just an individual call. Good job reading.
So a zebra would be like 2x1. I just pulled this up. The one, it'd probably be a little wider. So let's say the 110, 135 zebra, and the stocks run up, and the zebra's in the money with a nice profit.
I would 100% be closing that and reestablishing with new parameters. It's different with leaps, though, with farther out in time. You got to make sure you're getting enough credit to do it.
Yeah, so just make sure you're getting a decent amount of credit. So here I would be closing the original, so just flip this.
Yep.
So sell that, buy this back, closing the original, and put on a new zebra with the same original mechanics of sell a 50 delta, and it's just the at the money. I know Marvell has such call skew that it's not a 50 delta. Sell a 50 delta, buy 270 deltas. And then you continue your zebra, you continue your unlimited upside potential, but you're taking, in this scenario, $30 or $3,000 in risk off the table.
That is when you would do it, is when you're taking risk off the table.
Yeah, you do. If you can take in a credit, whatever credit you take in is risk you're taking off the table.
Yes.
If you
so just assess the situation. Like if I'm doing it and I'm getting $1, I might just leave it.
Right. Yeah. Like we probably have some that we could look at and say, oh, it's not worth it. It's not worth moving.
Do we have any zebras in there?
I mean, IBIT, but that's IBIT. Bitcoin's down today. I don't know if we have any others. Maybe not. But if you are only getting in 40 cents, 50 cents, it's probably not worth it. But if we're getting over $1, over $100 or $200 in credit, anything above that, it's worth ratcheting it.
Right. I agree.
And there's a video on the ratchet, but it's just closing the one you have, putting a new one on with original mechanics.
And I actually like that you're using zebras as for the stock replacement in the poor man covers calls. So you get a gold star for that.
Now, the tricky part is, here's the tricky part. If you have a short call against it and it's blown through that call,
out and up with call.
Sometimes you have to, if you can take that call out and up.
Well, when it hits the call, you got to go out and up. You have to be if you're doing this, you got to be proactive with the poor man's covered call. Out and up when the call hits the at the money.
I mean, a covered call, like in Marvell, if I had a covered call in Marvell, you're tapped out. And then you might have to just close the whole thing because you're tapped out. Like if you can roll that call out and up and keep getting a credit and keep rolling that call out and up for a credit. But if that call is so far in the money and you had a zebra against it as stock.
Never have the zebra leapfrog the call.
Right, you've got that short call. At some point, you just have to close the whole thing.
Yes.
Because when you sell a call, you're saying, I'm okay getting called away at this level, and if it happens, it happens. And it's a high-class problem because you made money, but it's frustrating because you capped yourself.
Well, I don't know who is that?
This is Jim.
Okay, but hold on for 1 second. If you've got a profit on Marvell and it's through the call, you're not holding the stock. A lot of times people are say they want to keep the stock for tax purposes.
Well, and he didn't say Marvell.
But you've got options in it. He said that he's got a decent profit on. Close the whole thing and start again. Close the whole thing and start again.
Because it's had such a run. So let's say you had sold your call here for like 135, and you've got the 135 call in June. Now Marvell, you probably could still get something. You know, if you rolled it out, and I maybe go to August to give myself a little room, I can move that thing.
I'm telling you though, when you've got a poor man's covered call is a zebra, you don't have the stock. People that are trying to protect it and not have their stock get called away, it's because they have the stock. When you've got a poor man's covered call, it doesn't matter. Close the whole thing, restart.
You can close
the whole thing, and then just say, okay, here I am with zebra, here I am with this. If you want to be back in it.
And you could look at your call, whatever call you have, how far it is in the money, look at the corresponding put. And let's say there's $200 in that put or $300 in the put. You know, if you leave that trade on, that's another $200 or $300 you're going to get.
Yep.
So you can, it's tough. I have a very hard time with zebras and then selling calls against it because when it blows through, you almost have to close it all.
Yes. But there's no harm, no foul in closing it all.
No, you make
it's not for tax. It's not for tax purposes.
No,
a lot of times, it's the stock that they're trying to get away from not selling. There's no harm nor foul.
Okay, from Fabio. Good morning, ladies. Nike is still disappointing, and the June 18th short put is still in the money. What do you think to roll it to July? So let's look at Nike.
And then Frank Walsh comes in and says, look at forward option volumes. Frank, I'm going to look at forward option volumes as soon as she's done with this.
I know Ford's up. I know that. So Nike, we have here, we have a Jade Lizard, and it's quite a bit through but ours is June. I wouldn't roll June to July yet. Is Fabio saying roll June to July? If you want to roll, if you can collect and roll to July, sure, but I'm not ready to roll to July yet.
No, we're not in that bad of shape. No, we're not in that bad of shape. We have a big lizard.
Did you hear that?
We have a big lizard, not a jade lizard.
Oh, did you hear the noise in the background?
Yeah, they're always making fun of somebody.
It sounded like someone was playing like a clarinet.
They're making fun of somebody.
I'm not ready to roll to July, but you can. You can. Punch Pixels. Market seems to have exhausted on the upside. I expect it to stay sideways for the next few days. I'm kind of with you, Punish Pixels. That's kind of what I'm thinking. How about a 100-point wide iron fly on ES for May 22nd?
Ooh, let's look at it.
That's big.
And then we're looking at forward options.
Big.
Let's look at it.
100-point wide iron fly in ES.
In what cycle?
May 22nd.
So May 22nd is the 9-day. 100. So 74.40, 64.40. Right?
70. Wait. 100 iron fly.
So 74.40.
Yeah.
I'm sorry. So 73.40, not like 60.
Yeah. 73.40.
And you've got the 74.50, 75.50.
75.40. Yeah, I just kept the thing straight.
Yeah.
So here you're getting $77. It's not bad. I thought this was going to be a riskier trade, but it's not. You're collecting $3,800, risking $1,125. It's basically iron fly is a butterfly. It's like a very wide butterfly in the 9-day. Risk is only $11.37. The only thing that's going to hurt this is a big move one way or the other. I don't mind it.
I shipped it and I put it in my account, not my son's.
All right, then I'm going to ship this.
So how much risk do we have in there?
$11.25.
It's not bad.
No. It's weird. Your max loss is $11.25, but the buying power in this is $1,500. Your buying power is more than your max risk.
Now, I'm going to put a very low bar in there for this trade. I appreciate this. Thank you, Punish Pixels.
He said,
now go to bed. Now, what is that? What is that at the end of every show? It would be like, go to bed. Remember that at the end of each episode when we were young? It was like sitcoms would have the thing at the end. It would be like, go to bed.
Remember.
Mikey, I'm going to need you. What is that from?
And he's saying close it for 10%, 20%, whatever. So I'm working it. We'll see if we get filled. All right, here's Bob on fire with today's earnings. Before we get to today's earnings, let's manage yesterday's.
Oh, yeah, good idea.
Yesterday, what did we do? Baba?
Baba should be a full win today.
Look at Baba. It was not up on the open. Take a look at this big bar. So Baba today open 132. Now it's almost a 145. It was down on the open. It's rallied, but now it's up 7.5%. Our diagonal is a full win. Should be.
Yeah, we're up $295 on that. So
it's
not a full win.
136, 143. You've got $7 wide. It's trading 625.
Let's close that thing. It's worth $3. It's worth $6 right now. $6.25. I was going backwards with it. Yeah, that's a good win.
Yeah. Okay. We're filled, and that's off. And then Oklo, we bought a call spread and sold a put spread to pay for it. So if it doesn't go down too much, we're not going to lose anything. We're not going to win, but we're not going to lose. And our put spread is still out of the money. So
we have to wait on that one.
Yeah, I would say just leave it. We could close it and take the $18 loss and put on something longer term. Maybe we do that.
So we could. I'm okay. It's only an $18 loss. I thought it'd be a little bit more. I just kind of glanced at that. I'm fine with either we want to do. Let's just pause that till tomorrow.
Well, but if it's down $3 today, what if it's down $3 tomorrow? Then it'll be a full loss.
Then we're going to be bullish either way. Yeah, you can just close it. Just close it. We'll look at it tomorrow.
It's kind of like it's an earnings trade. It didn't work. So close it for 35-cent debit. See if we get filled. Oh, filled. And if we want,
that was a big order, or a loud order, I should say.
So when he says 60% going out, 60% going out to the crowd, 40% going electronic.
Yes. And so we were talking to some of the brokers back there the other day because Matthew, who's our in production, was asking a very good question because he said he's seen lower numbers. He just saw me say his name. He's seen lower numbers out there, so it's great. I went and asked some of the brokers, and they said if they'll get, so say they get 1,000 lot. I'm just making that up. 1,000 lot, and 999 are electronic. There's going to be one lot that's left, and you'll hear. So that whatever's broken up that's not in the electronic book, they'll offer out to the crowd.
And I'm going to take a look at. Let me see if I can. How do I update
so he
this?
was just 9 guys into 60%. You got to hit refresh. This circle up there. Nope, that one. That circle. That
This
circle right
circle. There we go.
No. The one above
this
it.
one.
Yes.
How do I refresh this? Jeez. Oh, here we go. I'll go back to. I just wanted to see what we have going on.
Because Frank Walsh has told us multiple times. Oh my God.
What?
Is that possible?
What?
I'm out. Oh no, we got filled. Never mind. We got filled on RES. I thought I was out of mine because I put a 10% GTC.
You thought you were already out of it.
I was like, oh my God. But it's
30 seconds. I just wanted to see what's big and happening. And I will say, Liz and I were watching these yesterday. So it's like the top of the leaderboard. So right now is the May 13th 7420 call that's the top of the leaderboard. Just because it's next to the 7410, and this doesn't necessarily mean this was a spread. This is just the second highest traded option today, and this is the third highest option traded today. So just because we see them next to each other doesn't mean those are trading as a spread.
You can almost guarantee though if they're the exact numbers,
exact same size,
that's a spread.
But this you'll see, then it'll change because we were comparing this chart, we were looking at this later in the day yesterday, and we compared it to what we saw during the show. What we saw during the show, they weren't in the same order because it's just based on volume. So whatever's the highest volume is jumping to the top of it. It doesn't mean this is a spread.
7420 and 7410, right? They're not a spread. I'm just looking at both of them.
They're just the most actively traded calls right now, today, so far. And the 7425.
They're all wrapped around the at the monies.
Yeah. But I will say, if you go further down the line and you see something like this where, like you said, if you see something about the same amount, then you could kind of guess that it's a spread. But I think oftentimes it's not.
A lot of times they are spreads.
Yeah.
But if they're close to the same amount, they typically are spreads.
NVIDIA is sneaking its way into this list.
Frank has texted and tweeted us. You've got to look at Ford.
Okay. I've got to look at Ford. Last I saw it was up like 40 cents or something. It's up $1 now.
Take a look at the open interest. Open up any of the options. You're getting crazy volume in Ford options.
And all I have in Ford are short puts. So the option volume in which cycle?
He just said check out Ford option volume. I didn't see it on the most active list though.
All right, I'm going to volume. And let's see, today. 6,013.5 calls, 5,014 puts, but you're seeing volume on the downside too. 12 puts, 12.5 puts. That's in the 2-day. Now let me look at the monthlies.
I mean, he just said the volume.
16,014 calls, 16,013 calls. There's a lot. It's a lot more calls. If you're looking at the 36-day, today's volume is calls: 13 calls, 14 calls, 16 calls. I'm glad it's up. I'm short the 13 puts that expire this week. So,
ooh, congratulations on your wealth.
Well, but that's all I have. So Ford gets on a real tear. I'm not going to make any more than just those puts.
Is there news in Ford?
I don't know. Let's take a look. News?
No.
No.
74 put time
No.
45 on a 41.
I also heard, because we're friends with the other networks here. I was talking to someone from the other network, and he said big trade today was someone buying lots of straddles in EEM.
Straddles in EEM.
Or not yeah, buying straddles. It's either buying straddles or buying strangles in EEM. So looking for a big move in the emerging markets.
Let's take a look.
And I don't know what cycle they were in. I don't. I mean, I guess I could glance at volume.
We'd have to go through every cycle.
I'm not gonna bore you with that. Oh, well.
No, you'd have to look at every.
5,000 here. The 60-70 strangle.
Oh, it was strangles.
5,000.
Did he say strangles or straddles? You don't remember?
I don't remember.
It all blends. I get it.
I think
get
it was strangles. So you can see 5,000, 60-70 strangles traded.
Do you know that when I was on the trading floor, you know how we'd always have those cards that were right here?
Yeah.
Everything, because I ran the gamut. So I was a broker sometimes and I was a market maker sometimes, depending on the day. So I had everything that I ever quoted as a market maker or a broker written down on my card. So I can go back and look what date it was quoted, whatever they were doing. And so straddle, I'd always do like a V for a straddle or a U, like this for a strangle. So, but it is nice to have it all written down. Now what's great is electronically, you can go back and see what everything was done. But all we have right now is the SIBO's most active.
Right. To see, and I wonder if
there's
that made
there's lots of feeds that you can buy that have all the stuff that's going on there, like your unusual activity and things like that.
I wonder if that made it to the list here.
You're in indexes right now. Oh, there's Ford.
Oh yeah, May 29th. So that's the 13. May 29th, 13 calls. Let's take a look at that.
Ford made the list.
So 16 day, 13 calls. Look, 30,000. 30,000, but no, today. Ford, I got to change my position. I need more than just short puts.
I don't have 30,000 on mine. May 22nd, 9-day?
May 29th.
Oh, May 29th. Okay.
May 29th, 13 calls, 30,000.
Okay, that makes a little bit more sense because I was like, "What are you looking at, Jenny? 24,000."
Let's put in a little zebra. Let's put in the June zebra.
I like it.
Actually, Ford's so cheap, we can just buy
the 12.
Buy the 12 for $1.27. We'll see what happens. We're filled.
And we also are filled in the ES. We saw that the ES Iron Fly. You got filled in quite a few things today. Nothing's been pushed out yet. We'll push out right after the show.
And this, I don't need to put in a strangle or like a GTC for the ES because it's an iron fly. So a move up's not going to fill us on a GTC. A move down's not going to fill us on a GTC. The only thing that's going to fill us is time passing.
I would argue put it in there because it can get filled in the middle of the night.
Oh, in the middle of the night.
And sometimes
vol collapses in the vol collapses.
No,
in the middle of the night?
sometimes markets get crazy. Okay. Anytime I have a futures option contract, I always make sure I have a GTC in because a lot of times I'll come in and it'll be gone, and it will make no sense to me.
So
you could get to the point. Remember, keep in mind this is only 9 day, right? So it's only 9 days. So you could get a gap up and a gap down with like a little bit of a vol collapse, and you're out for 10%.
So how much do we want? So 7,700. It's a 50% multiplier in ES. So $3,300 or $3,400.
I did 10%.
It'd be $300. Okay, I'll put it in.
I just put a GTC in for. That's the only reason I advocate. I agree with what you're saying. You're not saying anything that's wrong.
Like, there's not.
If you were in,
it's a zero delta trade. So there's no movement that's going to take it off.
No, but there is the overnight action that you will see. That sometimes vol is weird, markets are weird, things are wonky with the futures options.
So if something weird happens and we get filled, great.
Yeah. So what has happened to me a couple times when you have trades like this on is you'll get a move up or a move down right back because it's only 9 days. So each day the theta is going to keep coming out of it. If it bops up and then comes right to your strike, you're out. You could just get lucky and get filled.
You know what else is moving up today? Natural gas.
It is?
Well, natural gas had a little run up. It was higher. It's higher earlier. Today it got up to almost 3. 2.9 something. So I'm keeping an eye on. We have this order in. It's working $20. We took in $2.24 to put it on. It's working 20. We have an order in, but it was higher earlier.
But that's just a placeholder. But that's good. We don't mind taking in just the credit for the natural gas.
I know, because right now at 20 we'd be locking in a $40 credit, but earlier today I saw it working. I thought like a $90 locking in a $90 credit. So we'll keep an eye.
Yeah.
Something we'll keep an eye on. Anything that we have moving today, Rivian's up 54 cents. That's good.
That's shocking. Rivian can't get out of its own way.
I mean, I saw a Rivian drive by yesterday, and I do like them. I've always liked them.
Oh, I love the Rivians.
Yeah.
I do like the Rivian drive.
I just got rid of the refrigerator in my garage, which would leave space for a charger.
Oh, I was so confused on why you were talking about the refrigerator.
I thought when they hauled away the refrigerator, I thought that would leave some space for a car charger.
You don't need a second refrigerator in your garage?
We just added a big one in the basement.
Okay. This makes me feel a little bit better.
They came on Saturday with the big refrigerator for the basement.
Perfect.
So I got rid of the garage.
Yeah, you can put a charger in there.
Yeah.
It's not bad.
Rivian. Get a Rivian. Shop. What do we have in Shop that we're down $500?
Shop, we had a bad earnings trade, and then we followed it up with a bad put.
A Jade Lizard. We have a Jade Lizard.
Which the put is the problem. Now, this is 36 days. We've collected... Our trade price is 7. This is one of those where you can take that call spread and bring it all the way down. All the way down. Do you want to try it?
So I'm going to buy back the call spread and move it right to where our put is. So the 105, 110.
You're taking in another $1. It's fine. I mean, so then we'll have taken in $8. Can you put that in the notes?
Well, okay. So we've taken in a total of $8.
Yes, because it doesn't show that. It shows we took in $7.34. Fazia, thank you for teaching us this.
As $8 credit.
Mm-hmm.
Okay, so it's in there now. Now we'll know.
Perfect.
So that's in earnings. We didn't get to today's earnings.
There's not that much here. I'll go to the earnings to see what we have. In earnings, if I can.
I'm pulling up Twitter right now. Here we go.
Yeah, let's go to Bob's list.
Cisco, USAR, Klarna, CSIQ, BLSH, bullish. Okay, Klarna has been a real dog. Look at this, I think.
What has Cisco been doing? That's a name I haven't blast from the past.
Look at Klarna, $13.
Wow.
That's done nothing.
But that's brand new, isn't it? Isn't that where it starts?
Yeah, it started, it IPO'd at 52.
It goes straight down to 13.
Straight down to 13. I only know this because Logan has it in his account.
Oh.
One time I heard Nikki talking about it, and I thought, if Nikki likes it, it might be good for the kids. So I put it in Logan's account.
Was he like, thanks, Mom?
Yeah, thanks for nothing. Thanks for nothing.
Okay, so I don't know that I want to touch Klarna with a 10-foot pole. What's the IVR?
Well, I don't know if we can get anything. It's only $13. Oh, look at this, 85 cents on 13.5 put.
How much capital is that using?
$600.
It's 50%.
Margin. It's like margin.
It's margin. No, that's more than margin because it's only $12, right? It's as if you own the stock.
Yeah, right. Margin of stock. Margin of owning the stock. Not like the 10% of a short put, but the margin of a stock. Did you see that just turned red?
What just happened?
Fun.
The pod might lift off. I think that might be the takeoff button.
We're going to have to post a picture of this from the outside so people know what you're talking about.
Well, both of us jumped.
I know. Do you want to get in it?
Yes. Why not?
I'm just going to, 85, I'm just going to hit the bid. Because this is quoted in nickels.
Yeah, go for it.
Cents. Now, we could lose. Klarna could be down to 10 tomorrow, and we're out. But I put it in just so we can keep an eye on it because Logan has it. I don't have it.
No, let's take a look at Cisco, can we?
Was that the other one?
Cisco's got earnings.
Cisco.
I haven't seen Cisco in a long time. I couldn't even guess where it is right now.
100.
Oh, okay. What's the IVR in Cisco? Thank you for
105.
Thank you for walking me through this as if I'm a blind person because I'm just watching the screen.
105.
105. It's a $100 product. 105. It's been at the top of its range.
I bet a diagonal would be cheap in Cisco.
Bet it would be too.
So the 100.
You're buying the 100 and the 90.
108. $3. Let's do it.
It's for the 100 108. So you've got an $8. I love this. It's kind of fun just listening to you. So you've got the 100 108. So you're $8 wide and you only paid $3 for it.
I shipped it because we're out of time. I'm just going to make sure we got to everyone. Ajit. He just says hello. Hi, Ajit. He doesn't send us a trade because every trade Ajit sends us is like big by big for big accounts, and we have a small account here, but our viewers love your trade ideas, Ajit.
And we love you too, Ajit.
Yeah, we do. We do. Okay. So Spoo's up 18. That's how we're 18.
Ending. I just got to look at that Mag 10 for my son that I put that trade in again.
Oh, you'll be good. You'll be good. I don't know about closing it though.
I know, and the problem is one's going to leave, and then I'm left with the other one.
I'm not sure what to tell you about that, Liz.
Okay,
but,
I'll get this solved by the end of the day. All right, everybody, good luck with their earnings trades, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Glenn Freibarger. This is Options Trading Concepts Live. It is Glenn's day.
Rejoice.
Rejoice. Come one, come all. We're streaming live on the YouTube channel, on the Tasty Live channel, and also tastylive.com. First things first, who you got for the PGA Championship starting tomorrow?
Man, I am, in most aspects of my life, not generally discouraged. Golf predictions, very discouraged. I don't even want to try.
Got it.
Why? Who's hot? I mean, I'm always a fan of my fellow kitty, Matt Fitzpatrick, and he let me down on the Masters because, not only because he performed less than admirably, but because the next weekend he went and won.
And then again.
And then again with his brother.
Yeah.
But that was a feel-good story.
Yeah. His brother almost won last week.
Really?
He caught it.
With his new tour card?
Yeah. Almost a $3.5 million payout.
God.
But he did new PGA Tour guy stuff and squandered it. So, but
classic.
This upcoming PGA, I do like Matty Fitzpatrick. I think he could be up there. So maybe you just keep going. You just keep betting on him because eventually he's going to win, and then you will win.
Oh, funny you say that.
Static thing.
funny you say that, because another one of my longer-term speculative betting strategies has been from our good friend Jason. The Ohtani Opportunity Fund has been more of an than any sort of profit investment. It's a similar concept, but just betting on Ohtani home run. Guess how many home runs he's had in May?
0, really?
On the year, only 6.
Wow. That's actually pretty low, because
extremely low. And every kind of drought, I haven't been doing it every game.
Mm-hmm. But well, you have to do it. That's how it works. Is you've got to do it every game.
Well, so far I have not.
You've been saving.
I've only done it on like 25% and have not missed out on any potential wins.
Yeah,
but have had realized losses.
There was a certain point in time where Aaron Judge and our very own White Sox Murakami were tied for the most home runs.
That's pretty cool.
Year. It's pretty fun. So we'll see. White Sox still need to win games here, but
I think I'm going to Sox Cubs at Sox on Friday night. Should be fun.
The crosstown classic, as they say.
Is that what they actually call it?
Mm-hmm. Yeah.
If that was just
speaking of buying and holding and just betting on something going up or hitting home runs consistently, the U.S. dollar not working out yet.
I was going to say, hanging in there.
But I'm really intrigued to see how much value we've extracted from the yield on this. Because, again, I've been in this trade since November 5th of 2025. It is now May 13th of 2026. But I've been collecting yield this entire time on 20 micro lots. So, and I'm like, I've been holding this loss for so long, but the net lick of this portfolio just continues to go up. And that's a good thing.
That's a great thing.
It's a great thing. So we'll see. But
do you have your little history tab there?
Sure.
Just scroll over, even just right there. You can look. You're getting all right. So 3 days.
$6.
Yeah, that's for 3 day. 1 day would be around $2, right?
Yeah. That is correct. 6 divided by 3 is 2.
Big math guy.
Mm-hmm.
And you've been in this for what? At least 150 days, 120.
So you're saying we're around $300?
You're probably around $300.
That's kind of nice.
Pretty good. It definitely cuts into your break-even price, and is a wishful back of the mind thought when you're looking at your red position on the screen. But we are building to a slightly more positive picture here in this pair specifically, and US dollar overall holding in at perhaps a better level day to day than you would expect from stocks being at all-time highs or just thereof. So I'm not too discouraged by what we're seeing from the US dollar, but a ton of interesting storylines and a ton of places to look when you are bouncing around these global FX markets. Specifically today, top of mind is range trading, recently successful until proven otherwise, and we have another one of these tests here today. We're looking at this Australian dollar outperforming across the board. That is pushing up against its highs that we've flirted with many a times, but haven't closed this high. It's funny because I, am on for this hour, have been have been on earlier this week with Nick and Tony. Well, Tony and Mr. Ryan Grace. And we were looking at this exact same chart on Monday, and at this exact same level said, if it could close here, that would be huge. It reversed all the way. And so if you have sold these 72.5-cent Aussie dollars, you've been successful scalping around, but pretty resilient here, staying above 72 cents for the past week now straight. So when you look, this is not just a US dollar story. You're looking at all of the Australian dollar cross-currency pairs, you're seeing a similar story. Most interesting for you for graphs to look at would probably be the Aussie yen. This one's pretty good too. Aussie yen. Yen, as we know, in a world of hurt across the board, but this flirting with its highs once again. This one, a pretty stark gauge of risk sentiment. Yen historically risk off. Australian dollar, very risk on currency. Here we're back at highs. So that's what I'm looking at today. How, one, we close the U.S. session, and two, the reaction as Asia wakes up. Whether this can have some pretty strong momentum. On other pairs, looking at some juicy fundamental stories, we've got the UK, Great British Pound, on the top of my docket for this week. And similarly, along those themes of trading ranges, this one getting tested early today, flirting with below 135 this morning, pulling back slightly, but as you can see, that's pretty much the low end of the range for the past month or so. And we've gone all the way from the top of the range to the bottom fairly quickly to start the week here. Now news thinking that UK leadership may be coming to an end. The Prime Minister, I'm not going to pretend to know how UK politics work through and through. I barely even know the U.S. Do you know how many House of Representatives there are?
No, not at the top of my head.
Nice.
But I do know that if you paid $100 for the golden Trump phone, it does not actually give you the phone, and there's no monetary value of it at all. I saw that. That was the craziest thing I've seen this week.
That is more useful information, I'd contend.
Yeah.
But anyway, we might have a shakeup in the UK's political landscape, markets pricing in that uncertainty. You have, a tale of two scenarios when you have yields for a country's debt at 30-year highs, like you do for the long-term gilt yields. That could bolster a currency because you're getting more reward for holding those assets, but that risk premium has not translated into British pound demand, investors fleeing those assets, and we've seen some repricing there. So that makes not only you're absolutely right, not only the British pound US dollar pair interesting to watch, but these crosses as well. Mike here pulling up the pound Australian dollar, which appears to be at new lows. Keep zooming out. How far is this price extreme? Man, there you go.
Look at that. It's almost as
2
if
years.
This line is just perfectly drawn.
Oh, Dylan.
You know what that means?
Smash?
Smash. Smash the buy. 0.05. Place trade.
So yeah, not only in terms of two kind of reassurances for your position here, not only are we at historic extremes, but this price level has been bought up on numerous occasions the last time we were here. So, of course, past performance not indicative of any future returns.
Correct.
But the past few times we've seen this pair get bought up a little bit right at this level. So that makes it interesting. The cross-currency pair I'm watching the most will be this euro pound. As we know, it's pretty historically low volatility because of how not only geographically but economically related these two currencies are. But you can see this has been pretty whippy recently. If you zoom in just for the past, you can see a lot of the wicks on those recent candles tell you that when we're looking at the platform, not as interesting, but if you change this to an hourly, you could see that this has been, no surprise, I suppose, much more interesting during the UK sessions. You're seeing huge jumps up in this euro around 3-4 a.m. our time. Market's, still tradable, but it has been, if you've been successful in setting some take profits, you've been able to get those hit overnight with more volatility in this pair. As, like I said, foreign investment has been fleeing this British pound. It's just something to watch. I don't know necessarily what kind of time horizon we're looking at. It's not like one Fed decision or one central bank decision, but definitely something to keep on the radar. And if you're a longer term swing trader, you still have pretty historic pound strength to sell or get long dollar if you're betting on further collapse of this British pound, or you're at the low end of the range if you're just trading more recent price action. I'm not related to Matt Fitzpatrick in the chat. But
I saw that. I was debating whether I should bring that up to you or not.
That's big bro.
Yeah.
That would be fun. I'd love to get a tour card.
That would be nice. Yeah.
But yes, I do claim him, and Northwestern does claim him as a student athlete, even though he was there for, I think, 2.5 semesters.
I think he still lives in that area.
2.5 quarters. Not even.
You're on quarters.
Yeah.
Then.
So like 1.5 semesters.
Yeah. Cool. Love it. So I'm going to get long the euro pound because why not? 5 micro lots. Deal confirmed.
Very nice.
Thank you for the deal. So yeah, I'm kind of there you go. I'm kind of neutralizing some of this Aussie delta now because I'm short. I'm short the Aussie dollar.
Man, that's
not good.
That's a tough
one.
Not
great. I remember specifically putting that on and be like, yeah, I'm just trying to take a little bit out of it and then just mooned. But I'm also short the Aussie dollar euro. And now I'm long the pound Aussie dollar and I'm long the euro pound. So something's got to give.
You would think, yeah.
You would think. But my favorite trade that we placed today is this pound Aussie dollar, simply because we've got this 2-year price extreme, and I love entering into price extreme trades in a small way because, like you said, past performance is not indicative of future results. However, the past performance of this particular entry point has been indicative of future returns. Disclaim that does not mean that these particular trades will.
It gives you a little more solace. Yeah, and you're absolutely right.
We call it pot odds here.
Yeah.
Yeah.
And this is one when you think about trading some of these currencies, these are all pairs, right? And so for that one, you have 2 kind of fundamental storylines that have been working to send the price of that down to where it is now. For your reversion, you might only need one of those stories to fall apart. You could get a pop in that off of Australian dollar weakness alone, or broader British pound strength once again. So that's where my head's at when you start to talk about some of these cross currency pairs, and it isn't as intuitive to U.S. traders as, I have U.S. dollars, my anchor, as a safe haven, or I expect this to be correlated to my equity portfolio because of Y and Z. So you're getting further and further into the realm of currency trading, my friend. But
I have 1 green position.
Bingo!
Yeah. But I think at a certain point, the dollar strength will come into play here. The dollar can't be weak forever. That's my thesis.
Yeah, I mean, we've got a new Fed chair coming in. Fed's in a bind.
Interest rate hikes strong
on the table.
Strong probability relative to a cut.
Yeah.
If you look further out on the curve,
cut's not coming till what, September 27?
That's like where the cut has a decent probability.
Mm-hmm.
June, July, September. Actually, now September, there's a 10-to-1 probability of a hike relative to a cut. 10% probability of a 25 basis point hike. October, 20% probability of a 25 basis point hike. December, 32% probability of a hike. and a 5% 50 basis point hike. So things are not looking great here, but that could result in the dollar gaining some strength here.
Yeah, because when you start to think about on a relative basis to other economies in the world, it's been interesting to see some of these inflation readings, spelling some inflation to the upside, spelling U.S. dollar strength, which we would expect. It's more aligned with theoretical reactions, and you start to think that these other countries are pricing in some interest rate hikes as well, but it's really up to their growth from their economy to be able to withstand that for a central bank to act. Right now, the U.S. is looking pretty positioned to be able to withstand not only the elevated rates that we have right now, but could withstand a potential 25 basis point hike. When that narrative changes, then you start to get into that stagflation territory, which is really murky and doesn't necessarily mean the dollar's stronger as a safe haven or elevated yields. That's where it starts to get murkier. But for the time being, we've seen growth remain positive, inflation surprising to the upside, which is not good for a lot of assets. But in a kind of inflation strong, growth strong, you can still tend to see risk assets, certain ones appreciate, and the U.S. dollar gain strength. So one to watch, but nothing really left on the economic calendar from a data release standpoint that I'm looking at, but we'll see what headlines come from this Chinese summit. It's looking to be, honestly, even though it's a more macroeconomic meeting, it's looking like NASDAQ's the indice to watch as this shakes out. It's hard to imagine bad news will come of it from the associated parties, whether good news is actually good news or all talk. This is the market to watch because you have, Tim Cook, Jensen, and Elon Musk all in attendance. So AI, the topic of conversation, probably a bigger mover for these tech stocks than US dollar. So stealing a bit of my thunder, but whatevs.
Well, hopefully you're involved in some of these tech rallies. Are you trading NVIDIA earnings coming up next week?
Oh boy.
I think the answer should be yes.
The answer should be yes. Man, strong like bull.
Mm-hmm.
That's crazy. These have to be new highs, right?
Oh yeah.
Cleared them. It was 21? 21?
Yeah. Easy.
What are you thinking? Are you doing anything this week for next week?
I am.
Until next week.
No, sometimes I like to play what we like to call a pre-earnings pump. So I got into a calendar spread, and we talked about this with the Microsoft position too.
Mm-hmm.
But I got into a calendar spread where I bought June and I sold the 5-day, knowing that if NVIDIA sold off, I would keep all this premium in the 5-day and I could roll into the earnings cycle in the 9-day, pick up a ton of value there. So I have the 225 calendar on. I think someone in the YouTube chat asked if I was making any adjustments here. We certainly can. It's up $150 right now. Bought this for $760, and it's trading for $9 and change. I think into this rally, it does make sense to make an adjustment. 5 days out, we're in the money now, and as we've said before, an in-the-money calendar spread doesn't help you if the stock keeps rallying because you have no intrinsic value profit potential. So I think what we could do here is evaluate what I can do.
Can you run that back one more time? An in-the-money what? Has what?
An in-the-money calendar spread.
Yep.
Has no benefit to going further in the money. It actually hurts you because your max profit at any point in time with calendar spread is where the stock price is right at your short strikes.
Yep.
Like ideally, your short option is expired and the stock is at your long strike that will still remain. But because this is an pure extrinsic value trade, your risk graph looks like the extrinsic value curve if you look at an options chain, where at the money options have the highest extrinsic value, in the money options just have intrinsic value. So calendar spreads still have a neutral bias to them, even if you buy them out of the money to start. Yeah. So if NVIDIA keeps rallying, like this trade will start to lose money as opposed to keep the profit that I have right now.
Got it.
So what I can do is we're 2 points in the money, not too crazy. I know that I can roll out to the 9-day and pick up a lot more premium because you have a huge 23% implied volatility boost, just one expiration out, and then a 10-point implied move boost, which is reflective of that IV. So the question is, can I buy this back for $5 and change and sell something that's out of the money for $5 and change? The answer is yes. So I think what I'll do right now is convert this to a diagonal spread because I don't want to take losses if NVIDIA keeps ripping higher into the pre-earnings move. So I'll just do this. I'll just buy back the 225 5-day, roll into the earnings cycle right now up to the 235 strike and collect another 50 cents. So this will turn my 0 intrinsic value potential into a $1,000 intrinsic value potential, 40 cents. So now my risk graph will look like this. So now I have no upside risk at all. And I have immense profits if we get a continuation, especially if it goes in the money. If we get up to like 240 or 250 pre-earnings, I'll just take it off. And I might convert it. So if this is profitable, if it continues to rally, it will be. But if this is profitable, I like the idea of getting out of this one that's near term and going into a July, June.
Interesting.
Because then you have, if you do get a sell-off from earnings with this near-term one, this is going to lose a ton of value because you're in June. Whereas if you buy July and sell June, at least you'll have July 65 days out for it to reverse. And I would imagine that if NVIDIA sells off in a big way after earnings, people are going to want to step in and buy it anyways, which helps the upside assumption.
Very cool. And so just backtracking, when you got into the calendar spread, it was bullish.
Yep.
So you retained your bullish thesis, but turned that calendar into a diagonal.
Yep.
And the reason you were looking at this the week before earnings is because it was already moving higher before even today's.
Yeah.
And the list of names where you could do that is relatively small or large. Would you, obviously NVIDIA, one of the most liquid options in terms of single name equities. Does this get harder to manipulate as we reduce liquidity? Like, is it just Mag 7 you could do this to, or is this doing?
So in terms of this particular setup where I knew that I was selling an option before earnings and rolling into the earnings cycle, it's becoming fewer and fewer of the names that you can do it because NVIDIA is like at the end of the line in terms of earnings that are yet to come out. So for this particular adjustment that I knew I could make, we're kind of at the end of earnings season, but
you would look to do this for
100%
for the majority of stocks. Okay,
yeah,
interesting.
Because you'll always have that benefit. And when you're doing calendar and diagonal spreads, if you're buying an option after the earnings announcement, or if you're buying an option in an expiration that contains the earnings announcement, so anything beyond May 22nd for NVIDIA, if you're long an option out here, you benefit also by knowing that even if NVIDIA sells off, your long option will still hold on to extrinsic value because it has the earnings announcement in it. Does that make sense? So like I know
only if you're managing still before the earnings announcement.
Yeah. Yeah.
Like holding through it.
Correct.
Does nothing.
Well, it still gives you that benefit up until the announcement.
Correct.
But then after the announcement, you're at the mercy of the announcement.
Right.
But if you're trying to do something like this where I'm long June or if I was long July, I still would have sold this 5-day.
Right.
Because I want to extract as much value as possible in a pre-earnings expiration that goes to 0 extrinsic value with the back pocket maneuver of being able to, even into an offensive rally like this, I was still able to move this 5-day into the 9-day and really emphasize my upside profit potential with a now in the money spread. But I still could have done this if NVIDIA was down at 215 or 220. I would have just rolled. I would have taken all the value out of the 5-day, rolled it into the 9-day, picked up $2 or $3, keeping the calendar spread, or maybe making a diagonal as well. But at least it would have reduced my cost basis. This doesn't really reduce my cost basis because it's an offensive roll,
right?
But it does increase my max profit dramatically.
Very cool. And so if you were putting a brand new position on in this today as a reaction to a 3% up move, would you be looking at a calendar spread alone? Like, would you still be, if you were still bullish, would you be doing a calendar spread from the jump or straight into a diagonal spread?
If I had no position on right now, I would do the same trade I did before. Calendar or diagonal, but I would sell the 5-day.
Yeah.
So like a 235. This was very similar to what I had on before. It's trading for 850. When I initially got into this, it was 760. So almost the same type of trade, but you're buying the 235. This will hold on to extrinsic value until the earnings announcement hits. And the 5-day, you will extract all of this $2 of premium over the next week, even if NVIDIA rallies up to 235. But again, if you get a rally up to 235, you're going to be looking at a $150 winner, similar to what I have, but you'll have the ability to buy back the 5-day, roll into earnings, and collect more premium. Because even just looking at like the value of the 235 out of the money now, 5 days out, and then you look at the 235 9 days out, it's almost $500 more expensive. So you have that ability to roll into that and roll it up if you wanted to. Still pick up a credit. Like all of these are net credits. This is a scratch. Going from a 235 to a 255.
That's crazy.
1 week out, same price. So like that, in my mind, this is how you manipulate calendar and diagonal spreads is you just buy back the short option, move it out in time, and just replace your debit with a debit or a credit that's slightly higher.
Yep.
So any of these strikes, if I'm paying $1.78 to buy back this 5-day, we swap it. Any of these strikes in the 9-day give you a credit.
Interesting.
Up until 255.
And if you were first time trying to get neutral in this while benefiting from the same IV pump, would you just center that around 225?
Yeah.
Or would it be?
Yeah, you could. I would still do the 5-day. I would still do the 5-day June, most likely. Because you still want to be able to capture all this value in the 5-day.
Yeah.
Especially if you're neutral to where you don't have the intrinsic value potential. Like if you were bearish or bullish on NVIDIA, like yes, you could do the 5-day, 36-day like I'm talking about, but you could also just go straight to like July, June. If I was bullish and I wanted just to put on a long-term position now, I could do something like this and you're still going to benefit like a 20-point wide diagonal spread, long July, short June. You still benefit if NVIDIA rallies. Even though you don't get the same extrinsic value decay in the short option, you still benefit because you're paying $10 for a 20-point wide spread.
Agreed.
So, but yeah, neutral, I think the same thing applies. And a neutral trade, though, I would probably take off prior to earnings. I wouldn't hold it through earnings because I assume NVIDIA is going to move on earnings, and the same thing applies. Like if I'm buying the 225 and selling the 5-day 225, my whole play here is just getting this extrinsic value out of this stock over the next 5 days. And if it chops around 225, I'll be able to do that. I don't like having neutral trades on like a calendar spread for earnings because if it moves too much, you're going to have a loss. I do like iron condors though. If you want to do something like this, this is a neutral trade that I would consider just throwing this on like at the expected move, $1.70, risking $3. And I like to go to a monthly cycle for, even if I'm playing earnings for like a neutral iron condor, because same thing, if you do it in the 9-day and you get a blowout move to the upside or downside, you have no defense with an iron condor. It's just losses.
Yeah.
Or at least with a June iron condor, even if it's completely in the money, you could just kill the put spread if on a rally or kill the call spread on a sell-off and just hope it reverses and you have time for that to happen.
Very interesting.
Yeah.
And last question on the calendar. You said you would just go straight at for the long dated one. You would just go look to the nearest monthly. Or,
Yeah.
Okay.
So normally I like to look at two of them. So I'll look at June and July. But like, let's say I'm looking at the 230. I'll do a time-based cost analysis, which you can also see here. So you've got a 26-point implied move for 30 days, a 31-point implied move for 65 days, twice the amount of time in July, almost the same implied move.
Yep.
And you also have to factor in like, okay, June has a 51% IV. All these back months are at 48. So you're going to get a slightly bigger vol collapse in June if you're buying it, which hurts you, but it's going to be less expensive than July. But like if you can afford it, I would say I would definitely go to July versus June because I'm paying $300 more, $400 more for this July option, but I know that my $400 extra payment isn't going to decay as much because I'm in July instead of June, and I have twice the amount of time for it to work out.
Interesting.
So it's almost always like I would rather go to July situation, but if it doesn't fit your risk tolerance, then maybe you have to go to June.
Okay.
If you're doing something like this.
The period on this, you and Jamal, sometimes, I'm not crazy, you do like for earnings, do like a 2-day and an 11-day.
Yeah.
What scenario would prompt you to do that instead?
Regardless, Glenn.
What's up?
Just kidding.
Yeah, so like a 9-day, 13-day. So if you wanted to be like really cost effective with your earnings trade. So let's say you didn't want to have a big cost in a video. Like these trades we're talking about are $1,000. If you wanted to trade earnings in a much smaller way.
Oh, okay, gotcha.
But still benefit from the IV collapse and the earnings cycle, then maybe you would do something like this. So like a 240. If you're just like, if your assumption is it's going to go up to the expected move to the upside, 240-ish, you could sell the 9-day 240, buy the 13-day 240, and this is really cheap. If we just look at this in isolation, 35-cent debit, you're collecting $4.65 on your short 9-day. You're paying $5.15 for your long. Like there's so much room for you to have a profitable trade here, because if we go to May 22nd, when you get the all this value out of this expiration, you still have to crush this IV though. Let's bring this down to like 45%, just because we know like it's gonna go lower than 48, because these back ones have to drop too. So if we kick it down to 45%, did I click the wrong one? I think I did, yeah. Yeah, let's bring this down to like 45, but here you go. So now you know, okay, if we're at May 22nd, after the earnings announcement, and we've got our long option the week after, and we get a 15% vol crush in the option that I'm long, this is my range of profitability. So I can make, $180 on this trade if we get a chop around 240, but my break evens are down at like where it's trading now and all the way up to 255. So these are very viable. I like to have more directionality with my earnings trades, but like this is still a very viable earnings trade, and the price will probably be pretty similar. It'd probably be a little bit more expensive if you did this on like May 22nd or May 20th when they have earnings.
But that still would, if for this kind of trying to pin the vol crush and the expected move, you would probably wait until next week to do it, to get in at because the worst thing you would want is to put this on for earnings at 227, and then heading into earnings, we're at 210.
Yeah.
You're still looking for 240.
Right.
Which is now outside the expected move.
Yeah. And another thing to call out is like, because this is such a near term, like these expirations are right up against each other, and this 9-day value isn't going to go to zero until after earnings. This there's no situation where this 37-cent debit turns into a $1.80 before earnings.
Right.
Even if you get a rally to 240, it's just not going to give you that same profitability. So if we bring this down to like the 15th, I'm just breaking everything here. If we bring this down to today, or we clear it and redo it, if we look at today, short the 9-day, long the 13-day. Okay, so it's just losses. Got it. I think I broke something. Oh, it's maybe this. No, I don't know.
You crushed Vol too good.
Too good.
I do appreciate that. You are a wizard at the analysis tool, and your simulated IV crushes.
They are nice when they work in your favor. But yeah, lots to talk about for NVIDIA over the next week or so. But we will be definitely looking at a ton of trades and trade ideas in NVIDIA. But if you have in the YouTube chat, we can check them out now. I saw someone ask about my silver position. Any adjustments? Nope. So this has been a really nice rally. We've got the 87 straddle. This started as a kind of a funny position because if you look at silver and you look at this day right here, this is when I put the strangle on. Right here. Right when it dropped from 110 all the way to 65 the next day.
Wow.
So I was like, how am I so good at this timing thing where I put on the strangle and then
bam,
drops 50% in one day. But the implied volatility was so high at that point in time that I was able to capture on an 87-210 strangle $8.60. So I was like, this strangle is so wide and crazy, and this is silver. I'm getting into this. And then the next day after the crash, rolled down the 210 to the 150 for $1.40.
Nice.
A couple weeks later, rolled down the 150 to the straddle for $1.50, and then just kept manipulating it. So went from March to April, bought back the straddle, moved it to an 87-100 strangle. That didn't work, so I moved the from April to May down to an 87-97 10-point wide strangle, and then early April moved the 10-point wide strangle down to the straddle and out to June for $340. So I ended up collecting $2,000 along that way. And silver really, my break even was right at 67 because I've had this 87 straddle on. So my break even was like right here. So I knew even though we got below it, I was like, I don't feel the need to go inverted here because I think silver will eventually rally back closer to 87. And even if it doesn't, I know I can just roll this 87 straddle perpetually, month to month, and pick up $1.50 or $2 and keep piling on the credit. And now we're fortunate to have this rally, and it's a $500 winner. But the nice thing is, the more we rally to 87, the more extrinsic value that will decay to zero just gets infused into these options. So right now, these options have $400 each of extrinsic value. So I'm not touching this. If we get closer to June, like 21 days to go, so like the end of May, and we're still sitting around here, I'll probably just roll from June to July, pick up some more premium. If we were to look at this right now, rolling from June to July gives me $4 in premium, which you just love to see. So I know that I'll be able to pick up $3-4 if we're chopping around here. But I want to try and extract more from this position if I can.
Impressive trade management once again, sir. Were any of those, were you able to do anything for a credit when you got below that break even, or that's when you just kind of had to hold on?
Yeah, I could have rolled down. So like I would have kept the put at 87. I would have been able to roll this down because I have $2,000 in credit. I could have technically gone and moved this call from 87 to like 77 or from 87 to 82 and just
because of the buffer that you had already built in from managing it a couple times.
Yeah. So I could do that right now if I wanted to.
If it had gone differently and kind of moved past your break even quicker, you would have less, you'd feel less confident about the options that you had.
Yeah.
And your decision would still have been to hold on because of your thesis that it would pop back.
Yeah, I think.
But because of this more stair-step move,
yeah,
lower, you were able to do some of that chop management.
Exactly.
Before we got to that point.
Yeah, because like if this went down to, so at this point when I got to the 87 straddle, I had already collected $2,000. So I knew that my straddle's up here, my break even's down here, it's chopping around here. So I was like, okay, it's chopping around my break even. Any rally in the next month or 2 months is going to be just fine for this position. But to your point, if it did go down from 60 to 55 or 50, I knew that I had already collected $2,000, which means I could turn my 87 straddle into a 20-point inversion. So I could have moved my 87 call down to 67 if I really felt the need to do so. And I would have been able to pick up, let's say like $2, $3 in that adjustment. And I would have been left with a 67, 87 inverted strangle with $2,300 in premium. So that would have created a situation where it would look like a strangle. If I had the 67 call, 87 put for $2,300, if we look at the expiration graph, it just looks like a strangle, like this, where I have $300 of profit potential in the middle. So I knew I could do this still.
Interesting.
But because I knew I had this flexibility, I stayed aggressive with my offensive stance and not having the inversion there. But you can always do that. That's the nice thing about having a ton of premium. You can use that premium to buffer your situation. So like if I wanted to neutralize some deltas right now, I could roll down to the 81 call, create a 6-point wide inversion, and I would still have, $2,200 in premium, and it would look like this. But I don't need to do this now because now we're in the sweet spot. Like we're good. But if we get back down to 67, maybe I'll consider something like that if I was looking to exit the position.
Very cool.
Yeah. Options are fun. Let me tell you.
Please. Tell me more.
Has my bearish thesis on Tesla changed at all? No. If you've learned anything from me, it's that I'm stubborn to a fault sometimes. I just don't see it. What do you think? My thing is Tesla, people are trading and investing in Tesla to get access to technology, SpaceX.
100%.
Like that. So when SpaceX has its $2 trillion IPO, where's that money coming from? It's coming out of Tesla, I think. I would not be surprised to see Tesla fall when SpaceX IPO kind of gets closer and closer. And then when SpaceX is actively traded and they bring in options, I would imagine they bring in options like a week after. They'll fast track it because it's supposed to be the biggest IPO ever.
Sure.
So
yeah, we can rubber stamp that one.
Yeah. I think you see some liquidity come out of Tesla.
100%. Kind of an
makes sense to me.
IV crush. Yeah. But I guess the interesting part perhaps is the resurgence of Tesla fundamentals. Are EV cars back in the mix? Are you paying for gas?
I am, but I have a little Honda.
How much longer?
Yeah.
Are you going to make that deal with the devil?
Well, it doesn't break the bank because I have a little Honda Civic.
That helps.
And I also go to Costco to buy gas. So it's never expensive. And I fill up once a month, maybe. Because I walk to work. So, as do you.
I do. But if I could take a Tesla here, maybe I would.
We can make that happen.
No.
Well, you should pitch to get a cherry embroidered Tesla.
That would be pretty good to match the Dude Wipes vehicle in the garage.
Oh my God, yes.
There's a giant Dude Wipes.
Yes, with a big
buggy.
doo-doo.
Yep, with
big
a
doo-doo on top.
Pile on top. So something like that.
Pile.
A cherry red Chariot would look great next to that. Options are crazy, man.
Yeah, there's some people getting into the weeds here. Yeah, if you sell a spread, yes, there is a counterparty that makes that fill, but I don't ever think of it as like if I sell a spread, there's a Glenn out there that's buying the spread. Like it could be, and that's especially true. Like if you have 100 shares of stock or 1,000 shares of stock and you're selling 10 calls against it, that doesn't mean you're bearish.
Right.
You know, so it's never like if I'm buying 10 calls, someone else is selling 10 calls, they must be super bearish. No, it could just be against shares and they're also bullish. So it's like
never see the full picture.
No.
And have no idea whose incentives are, especially with the market makers.
Yeah.
But in essence, in aggregate, it would be a signal, but you'll never have that complete information.
Yeah. High class problem, silver, 70 strike, 36-day covered calls are in the money. Already have 4 rolls and $13 credit collected. Yeah, so you're looking good. I mean, if you have a 70, 36-day, 70 strike call, it's the same story. I mean, you can't roll this up that much because it's so far in the money, but like it's just math. If you're buying back 1240 in debit, where can you replace, if you go out to July, where can you replace this in the money option with a less in the money option for a net credit? You can roll it from June to July, pay 35 or collect 35 cents and give yourself another $200 of share profitability if silver stays above 72. So you could do that. You could go like super long term if you really wanted to. You could go to the end of the year and move your 70 call up to, oh wow, you can actually do some damage here. You can move your 70 up to an 85.
Wow.
For a $1.50 credit. I did not think that this was possible.
That's pretty good.
So like this, in this situation, like yes, we typically stay in that, 30 to 60 day window for selling options. But if your whole prerogative is to give yourself as much share profitability as possible, doing something like this is on the table. You'd pick up $1.40, your net credit would be $1,400, be $1,440, and you'd have $1,440 credit. You'd move up to the 85. Your break even would be around 70 on the shares with this credit received, and you'd have way more profit potential to the upside. You have another $500 of profit potential from here, but you would also move your 70 in the money strike to the 85, infusing a ton of value into your position there. You'd free up another $1,000 of shares or share profitability there. So yeah, I was not expecting that, but that's something you can do is just go longer term and move it out of the money or at the money. That option is still going to move. Like if silver goes from 80 to 60, this 85 strike call is still going to go from $1,300 down to, less than $1,000. So I kind of like that adjustment. If you're comfortable shifting your protection up, because you would also remove your protection from 80 to 70, which you'd have now.
Right.
So yeah. 1 minute left. What's your prediction on this here stock market for the rest of the week? Up and away?
I think away is out of the picture for this week.
You think we're sputtering?
I think we might sputter to a close. But I mean, fears assuaged today for sure. Took a more than 20 minutes on the open this morning, so everyone was scared, but ended up in a pretty good spot. I don't see anything coming across that really shakes that picture. I mean, we had enough scary headlines to try and take this thing down. Couldn't do it. But I don't know what else could put us into further blast-off mode unless they say, we talked to China, they want all of our chips. They don't want to do any chips anymore. They want all our chips, and we're making them pay a ton for it. Oh, nice.
This world we live in is wild. But we're here for it.
Yeah.
We're here for it. Well, Glenn, thank you for joining me today.
Thank you. I learned a lot.
Glad to hear it.
Expert trade management with Mike Butler.
I have to say, it takes a lot of pain before you learn these things first. So, but happy to illuminate the earnings manipulation that you can do, and silver manipulation too. It's all just debits and credits. Accounting 101, class I left immediately at DePaul.
If they could see you now.
Yeah, they could see me now. But yeah, thank you for joining me. And for you, all you people out there, thanks for tuning in. We are streaming live on Tasty Live YouTube channel as well as tastylive.com. But if you want to reach out to us on Twitter, you could certainly do that. I'm at Trader Mikey B. Glenn is at Glenn Freibarger with an A. And we're going to go eat some Burrito Beach.
For sure.
Yeah.
Multiple burrito beaches.
For the gains.
Yeah.
The gains.
Somebody's got to do it.
Yeah. Thanks for tuning in. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Make me the got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad, mad hatter. Call me one of a kind. I'm a true believer. I got a good feeling. I got a good.
What is going on, everybody, and welcome back to Risk and Reward. We apparently are just going straight up, and we care not for any frivolous things. Exciting day today. I have some new positions that have entered the account that I'm excited to work through here. But before we get into all that, I'm joined as always by my wonderful co-host Errol Coleman. Errol, how are you feeling? What's happening?
Feeling good. Another all-time high. It looks like we're just like maybe 10 to 20 points shy from the all-time high on NASDAQ here. So what a recovery, just within the last 24 hours. And I know yesterday before the market closed, you and I were looking at the last 10 minutes, and I was curious if we were going to close green. We talked about yesterday if we close green.
Yeah, I was going to say.
Going to have to take a 7-day break. Jokingly saying that, and we almost closed green yesterday. So nonetheless, it seems like we're in the same type of very bullish market right now. But how are we doing today?
Yeah, doing good. Yeah, we came right down to the wire yesterday. I really thought we were going to move through to green. Just closed just barely red. So Errol does get to continue trading for another week. Groundhog Day goes successfully.
I would have done the 7 days. I would have been like, I think a 7 days is kind of nice. Sometimes the days kind of mush into one. So we'll see what we get.
Yeah, we are working with some new cameras here in the Tasty Studio. Fancy new cameras. So if I'm looking a little crisper than usual, that's why. Do you have a new one over here behind me? I haven't turned around.
I'm actually not. I don't think so.
Does that have the blue on it?
No.
Oh, okay.
Nah.
Maybe Errol has a new camera too. We don't know, but we're always making upgrades.
No, Errol's got the old camera. Gus got the new good stuff.
There we go. Yeah, only I have the.
I can't even tell the difference.
Only I have the fancy one. Yeah. This one doesn't have blue on it. There's usually blue going on up there.
I gotcha.
Anyway, yeah, we can dive straight into the Tasty platform here. I have a sort of stupid position, arguably stupid position that I put on yesterday towards the close. This is in BuzzFeed. Nobody has really mentioned BuzzFeed in a stock market context, maybe since they IPO'd in 2021. IPO'd in 2021 at a $1.5 billion valuation. At the beginning of the day yesterday, they were worth $30 million. Quick math will tell you that is 2%, 98% decline on BuzzFeed from IPO to present. However, yesterday, there was big news with BuzzFeed as Byron Allen, Hollywood mogul, maybe you've heard of him. I hadn't heard of him. I wasn't saying that sarcastically. Bought BuzzFeed at a 265% premium. He rolls in here and buys the $30 million company. And also, let me just say, I haven't really had anywhere else to express this. The guy buys, all reports say Byron Allen buys a majority stake in BuzzFeed, 40 million shares at $3 a piece. Quick math will tell you that's $120 million. The company's valuation before this was $31 million. So to me, that's a 400% premium in my head. And then if you look at the actual float on BuzzFeed, there's only 37 million shares in the first place in circulation. So did he buy a majority stake or did he buy the whole thing? Did he pay a 265% premium, which is the number being widely reported, or was it actually 400? I'm confused. In any case, he paid an enormous premium to get his hands on BuzzFeed. And because he wants to integrate, drumroll please, AI. He wants to put AI into BuzzFeed. He feels that with the power of AI, BuzzFeed can become a legitimate competitor to YouTube. That's the vernacular. I disagree with this logic. And what I disagree with even more is he took the current CEO and founder of BuzzFeed, Jonah Peretti, and he moved him into a new role, president of BuzzFeed AI. So I have all sorts of problems with this. First, I'm not even sure how you think you could integrate AI in such a way that you could become a competitor with YouTube. If you're talking about using AI for the content creation itself, that's definitely going to fail. Everybody hates that right now. And I don't see how that piece really fits. I think BuzzFeed is fundamentally dead. And I really hate, as I've expressed with numerous other companies, I really hate when you take somebody who failed and then keep them and move them over. Jonah Peretti, while he deserves credit for starting BuzzFeed and taking it up to its peak and leading them to a $1.5 billion IPO, the reality is that in the 5 years since that IPO, the company has lost 98% of its value. Why would anyone think that this guy knows how to lead the company still? Why would you keep him around? That's the point of a hostile takeover, is to get everybody out and put your people in. So I hate all parts of this acquisition. I think it's all fugazi. I understand the increase in share price because Byron Allen basically did just assert that this value is 200, 300, 400% higher now with the purchase price that he paid. But I don't think this sticks. So I got long 25 contracts of BuzzFeed 247 DTE puts at the 50-cent strike. I paid $8 a piece for these, I believe. So yeah, what's that? A $200 position, even, which is really just kind of what I look for at a typical position size. But I'm able to get a ton of them. And if we look at this options chain around the strike, these $1 puts are 3x what these 50-cent puts are. So to me, that you can obviously interpret that as if we catch a 50% down move, it's realistic that these puts on this side could 3x as well, the 50-cent strike puts. They've already moved up another cent today to bring me back to break even. I did get slipped 1 cent as I put these on, so all that's done is moving back to break even. But it has fallen. I think it'll continue to fall. I don't have confidence in BuzzFeed in the big 2.6. So that's my big Michael Burry thesis on BuzzFeed here. I think that this is all fugazi, and I ain't buying it.
Yeah, everybody resorting to the AI. The AI kind of trend right now. And I'm curious to see how BuzzFeed would implement AI. I know a lot of frustration from online and in the comments section. I know a lot of people are hyping up AI and a lot of these things that you can do with the agentic AI and this, that, and the other. And everybody's just like, yo, I keep hearing all about this, but like, what exactly is your AI doing? And I've seen that same sentiment across many social media platforms. There's a lot of hype, but it's like, okay, what are you going to actually do? Like, I feel like it can make a lot of the business practices more efficient internally.
Sure.
But I think the audience is, people from the outside are waiting to see like, cool, that sounds cool. It sounds effective, but like, how is that really going to make my day better with BuzzFeed? But
yeah, and there's a lot of nuance to this as well, because if this was, there's a lot of ifs that would have put me off of this. First, if they got rid of Jonah Peretti altogether instead of keeping him around, that would make me a little bit more confident. It's the same sentiment I have with Allbirds. Why is everybody so excited to race into Allbirds because they pivoted to AI when these people couldn't make a shoe company function? Now they think they're going to make it function in the most highly competitive, most expensive sector that there is in the world right now. So there's that sentiment as well. I don't know why you would keep the same leadership in-house. And then the second thing is that Byron Allen himself is not a tech guy. He's a movies and film guy, and he's been incredibly successful in that field. I'm not calling the man an idiot, but it's not Zuckerberg. If Mark Zuckerberg rolled in here, cleaned house, and said we're going to power BuzzFeed with AI, I would be a little bit more bullish on it because I think that he has the expertise to do that, and I've seen him build, trillion-dollar companies by this point.
And what I would ask him is like, what does that mean though?
Yes.
Like what within BuzzFeed is making that process more efficient? You know what I mean?
Yes, exactly. So yeah, just bearish on BuzzFeed. I'm willing to get and it seems aggressively short, but it's really not. It's a $200 notional position, which is usually just the rough size that I target for any other position. I'm just able to get 25 of them because they're so cheap, and I'm taking a little bit of a gamble here.
Yeah, no, I mean, I like it. I mean, the way that I'm perceiving it is, that's pretty cool you're getting into AI, but what does that mean? So to me, it's a little bit too vague, and it seems like it's a last minute kind of Hail Mary kind of strategy that I think a lot of these companies are doing. Whenever they recognize they need a little bit of attention, they need a little bit more support behind whatever they're doing, they're just throwing out whatever is currently trending right now. And I think we've seen that same pattern, over the last 12 months for the most part. But it's so vague. Everything is so vague. And I think that's a little bit of the strategy at the same time, being vague.
Yes, I'm inclined to agree.
Yeah.
And all I need is a 4-cent move in this option, and suddenly I'm up or down, I guess, $100. So it's, having that type of leverage, it doesn't take much for me to all of a sudden be in a good position to get out.
Yeah.
Chat is active here. I don't know. I saw a talk of money launderings. There's some kind of fight going on here I haven't really been able to keep up with, but keep at it, boys. Get those licks in. Gus is the ball in BuzzFeed. True. And then Ranch. I saw Ranch said something to me. You were right. You were right when you said I was dancing with the devil there, Gus. Oh, about what? Dancing with the devil in what? Ranch, I know there was something that I was like, oh yeah, Ranch got in this with me too. I can't remember. It's doing well today. Let me know. Aside from that, in the portfolio, Meta is ripping. Meta just announced in the last hour that they are rolling out a new Instagram adjacent app for temporary posts, ephemeral posts is the vernacular that they're going with. It's called Instance. I think that's what it was called. I just looked at this news before we got
Meta is.
What?
Meta.
Yes, Meta. And then additionally, they are rolling out a new AI-powered, fully encrypted messaging app, which I kind of thought WhatsApp was fully encrypted already, but they're trying to take like a Telegram route as well.
Oh, that's interesting.
So yeah, Meta, you can see if we go much shorter time frame here, took a gap up on open, and then it took an additional like $10 run. Yeah, we took this run up on open, and then since those two new apps have been announced, we've moved considerably higher. So these two my bottom strikes on Meta have been very sketchy, but we are back in the green at this time.
I'm curious to see what they're going to be.
Palantir, Dancing with the Devil on Palantir. Yes. Oh, but yeah, Rivian. Ranch, was that you? Somebody yesterday was saying I want a Rivian trade, and I was like, oh yeah, I think get long into earnings is probably the wave. And Rivian is panning out post earnings here, having a nice little day, up 3.5%. So all my Rivian positions jumping. If you got long pre-earnings yesterday, you're probably sitting pretty there as well. Oh yeah, well that makes it look a lot more aggressive. Let's zoom out. There you go. Better description of where we're at there with Rivian. But I like to find these channels. So if you're looking to take a continuation play with Rivian, the typical thing that Rivian likes to do is just string a bunch of green candles together and then give them all right back. So I think that there is probably some upside left on the table here for Rivian.
Seems like there's a little bit of momentum still continuing into some of the products like silver right now too. I've been keeping an eye on that. I know somebody said earlier, if silver reaches 98, they're going to stop trading for a week. So I think a lot of these underlyings are kind of in the same boat in terms of momentum and overall sentiment. So silver definitely going to be on the radar. Really glad that Meta took a pop finally, sold an out of money put spread there, barely in the green there, but it's nice that it's moving in the opposite direction. But silver, I think it's going to take the cake for at least today in the last 12 to 24 hours. I mean, that's a lot of momentum in that product right there.
Yes, and it is tragic for my SLV all the way down here at the bottom.
That could be temporary though. Could be a temporary pop.
I would need the dip below 75 now, so we're all of a sudden 2 DTE. It's like that would be pretty aggressive into the weekend, and yeah, just kicking myself for not taking those off sooner. That's a serious paper hands situation. Palantir, yeah, I haven't even looked at Palantir today.
All my bond mutual funds down since I bought them a while ago. That's crazy, media. You might be one of many people that are keeping an eye on their mutual bonds. You know, because I feel like many people haven't checked their mutual funds, and they're probably sitting at very attractive prices right now. And I mean, if you were looking at the market over the last 48 hours, it's a good thing you're not looking at it every day, because a lot of these cancel crashes have been canceled quite frequently lately. So,
for sure. Yeah, Palantir is sliding today as well. They just reported, or I feel like they reported a week ago or so. But yeah, this is just a tough one. It's a tough one to trade in this environment. I was all gung ho about getting short here and here and here, and I caught some good shorts in Palantir on the way down here. But after this consolidation, it just scares me, because it could do 2024 Palantir stuff and all of a sudden rip to 400. But at the same time, it hasn't had a lot of momentum recently. I think Palantir is just chilling as we let valuations catch up a little bit. SanDisk, this position that I threw on air yesterday, was very, very aggressive as I put it on, but looks like it very well could come to fruition. I have a 1465, 1475 short put vertical that was at 3 DTE yesterday when I put it on, obviously 2 DTE now. I got this one at 240 buying power for 800 of credit or something crazy like that. Very, very disproportionate risk on this one. But as I said yesterday, with the way that SanDisk moves, it's always been incredibly resilient in the face of any attempt at drawdown. And so I was happy to get long there, and with the expected move hanging at like the mid 1500s by Friday, it's not even that unrealistic of a trade that it could possibly be over 1475. We've taken a move back in the right direction. This was looking a lot better at open today. Has since slid a little bit, made some lows, and has rallied back to the middle of this range here. But we are still slightly up on the day, and I'm not surprised at all if we just open over 1475 tomorrow with the way that this thing moves. That wouldn't scare me at all, but I'll be very happy if we manage to sneak that one in on that tight of a time frame. But yeah, SanDisk, this is the first time we have three straight red days here. When's the last time that even happened? Right, there's technically 3 red candles in a row here, but it was moving higher the whole time, opening higher and just moving lower. Last time we had 3 true red days in a row. Yeah, you got to go all the way back to February to find that. So 3 months, over 3 months. February, what's this? 5, 9, 10. the last time. So over 3 months since we've had 3 straight red days in SanDisk. If we closed red today, obviously we would make that happen, but that would just make me even more confident that we open higher tomorrow. So not too upset with that one. But it's pretty much all of the excitement in the portfolio on my side of things today. What do you have going on over there?
Really not too much. We can go ahead and jump to the TradingView platform. Just been keeping an eye on silver, been keeping an eye on the indices as well. I know we're kind of trading at all-time highs here. We didn't do too much in NASDAQ today. We tried to pick off the top a little bit here, so let me go ahead and pull up these executions so you can kind of see that. But we started to consolidate here. This is one just wanting to take a shot just to see if this is where the market was going to actually dip. So we got a little bit of this downtrend. We had our stops near break even over here, got stopped out there. Risked a couple more points over here at the highs just to see if that was going to be the top for the day. And then no, we absolutely ripped to the actual all-time highs. So that's what we had going on in the indices today. It's going to be another hands-off kind of end of week, I guess, especially trading around all-time highs. So Monday, Tuesday, Wednesday, it was a fun market environment, but it looks like we're reverting back to how we were trading over the last few months. So we're not going to be putting on too much risk until we get an official pullback or at least some type of consolidation over here at the highs. Because as you guys have seen over the last 30 to 45 days, all-time highs can be some of the most difficult market conditions to trade, especially directionally, unless you already have some long delta on in the portfolio and you're holding on to that and you're managing and scaling out as we make higher highs. Other than that, price action can be pretty funky, and a lot of the times we can kind of just naturally just float higher and higher and higher. So we'll be patient to see when the market wants to take a pullback, but that's all the fun that we had on NASDAQ today. Been keeping an eye on silver a little bit more. I just bought a put on silver. I'm looking at the 75 puts on SLV. I really like that we finally got a pop. I know over the last couple months I was kicking myself for not being able to get on any short delta at least. So I'm going to use this as an opportunity to do that because I think if we put in another leg to the highs, I mean, I think in an 89, 90 silver is right around the corner. If we don't reject around here, we could probably pop, a little bit higher on SLV at least. I know the silver futures product, we're trading at 89. But once again, choosing to use the options for that because these silver futures contracts are so large. One downtick, it'll take out the whole portfolio. So I'm just be mindful about that.
In response to a few chats here, hey guys, do you like MVIS? If you did, do you think leaps? This isn't a stock that I've ever looked at before, but it is sort of a attractive little lotto. I don't know anything about this company. Assuming that they're not going bankrupt, it's a 77-cent stock. But assuming they're not going bankrupt, I don't hate the idea of leaps. 77-cent stock, you can go all the way out to the 2028 expiration cycle and get the $1 calls at like $37 notional, 37 cents per contract. I think that's fairly attractive. Or with how cheap this is, you could just choose shares as well and not even put a time horizon on yourself and just kind of let that cook and hope for a run back up to these highs at around $2. But oh no, I was going to say this hasn't really shown an affinity to chase much higher highs than that. But we have had some little runs up to 8 and 9 as well. So yeah, some disproportionate upside there for sure. And seems to like this bottom of 50 cents is like the bottom, but I don't know. Seems to be such a nice little pop right now. If you have convictions about it, I think that this could be a fun little leap. Hey guys, look at Joby run, brother. Yeah, nice boy. Joby continues to run. I wasn't really thinking that I was going to time this well at all. This was not part of the plan. The plan, as described when I first put the position on, was just to hold it, and Joby just likes to run sideways, and then occasionally we'll take all of a sudden it'll do 100% in a day. And I figured if we could just catch one of those 100% days, it would provide a attractive exit on this position. 100% day is a little bit pronounced. 100% weeks is usually the way that Joby likes to go about it. And I figured if we could just catch one of those, it would provide a good exit. But I just happened to accidentally perfectly time this little run that we've taken from sub $10 to now holding pretty firmly over 11. So I'm certainly pleased with the price action that we're getting in Joby. But I think I'm just going to continue to hold despite being up. Close to 50% on this position. I think I'm just going to continue to hold and stand by my original conviction that at some point we all of a sudden get the week where Joby just strings together 30% days in a row and lets us get out very favorably. But if I had multiple, and I wish I did, I would be taking one off right now. SanDisk is an expensive beast. I think SanDisk is now near a potential stock split because the stock is so expensive. Yeah, I wouldn't be surprised at all to see SanDisk split here sometime soon, trading around $1,500. that's the time for it. But if you're SanDisk, you got to be careful because this run has been so parabolic, and you have to make sure you're actually going to hold all of these gains, and then you're not going to split and then all of a sudden, decrease to 800/80. I mean, assuming a 10-to-1 split. You want to make sure that your share price is actually there and fully justifies the split. And I would assume it would be 10-to-1 at these levels, but you could get away with a 20 if it really holds like the 1500 level. Looks like the AutoZone scam is finally seeing some difficulty. I don't know about the AutoZone scam, AZO. But yeah, looks like we're sliding a little bit today. Oh yeah, and just recently in general, last couple of weeks have been pretty bad for AutoZone. How about bullish IWM here? IWM, kind of the forgotten ETF. I don't acknowledge IWM very much. Yeah, not a bad spot for it. I mean, if we're just making all-time highs everywhere else, and IWM still considerably below those all-time highs. Considerably is a relative term. 287 is the all-time highs, and we're at 282. But relative to the rest of the market, considerably far from them. And you feel like some catch-up has to be played there eventually. Obviously, it tracks pretty closely with the other ETFs. So I don't like that. I don't mind that. Is what I mean. I think that there's some solid, small upside potential for IWM here if it wants to catch up with the other ETFs. Yes, definitely. You are bringing it to my attention now, New Home Nation. But now that you mention it, I definitely forgot to post this in the follow feed. I'll throw that BuzzFeed trade in the follow feed. It's still at my entry right now. It's still there. Good call. My apologies. Just slipped my mind. It was just a quick little thing I did yesterday, and then pushed on with some other work. Do you think Intel is still on trend? Intel, interesting spot. I don't know. Getting long Intel kind of scares me with just how insane this run has been. This chart just looks like Micron or SanDisk, as does the chart on AMD. That doesn't mean that I don't think there could still be upside left, but for me, I'm hands off until we have at least a little bit better establishment of a level, because I think that this thing could easily go $20 higher or lower on any given day. It scares me. Fortinet, lots of good questions today. FTNT, haven't looked at this one in a while either. Ford is one of the best performers today. I didn't even know that. Fortinet, dang, I didn't see this giant gap up. I presume that this was a good earnings call and then just continuation off of that. Yeah, this one is another one similar to the sentiment I just expressed with Intel. I would be scared to get long here, but that doesn't mean it couldn't go higher. But if you put a gun to my head and made me trade Fortinet here, I would have to get short. This is just insane. I mean, we had a gap down from 96 all the way to 75 last August. And then without ever filling that gap, we suddenly just jump from 90 straight to 104 the other day. So now that gap goes both ways, has to get filled sometime, I would think. So if you made me get involved with Fortinet, I would get short. But I don't know what is driving this move. If it's substantiated, this isn't a stock that I keep up with. It could very well still go higher. Anyway, yeah, I know we're pretty much at our time here. CBOE, our friends over at the CBOE. But up. Yeah, always happy to see them succeed.
100%. We'll see what we get in the overall market. Silver finally pulling back a little bit here too. So we'll check on those puts towards the end of the week. That's going to be it for me on my end.
Yeah, that's all I got as well. BuzzFeed to 0 and Joby to 1,000. That's what I say. Just a little bit more SanDisk would be great. But yeah, that'll do it for us today. Thanks so much, everybody, for taking the time to watch. We dearly appreciate it. We never take it for granted. Ariel and I will be back here at the same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to come hang out with us. Stay tuned for Futures Power Hour coming up next. See you guys next time.
Peace.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, Backwardation is the opposite, so those front month futures contracts are trading richer than the corresponding back month contracts.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
got a good feeling. I got a good feeling.
We're back. It's still Wednesday, May 13th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio, New York. He's Thomas Westwater in Chicago. Thomas, it's a day that ends in Y, so the stock market's up.
Yeah, that's a very acute observation there. It is up. It's up despite PPI and, inflation overall, oil prices. So resilient market. I mean, it's what's going to stop this?
Not a Samsung labor strike, which makes Micron's 7-8 forward PE look rather tame from a certain point of view. We do have semiconductors bouncing back sharply. Micron is 13% off of yesterday's lows now in today's session. And so the semiconductor chips are running to the upside. Your NASDAQ's the leader. And Thomas, once again, we can say that the 1 week moving average is proving critical. The 5 EMA has saved the day again here for the NASDAQ and the S&P 500, which it tested in both of the major indexes yesterday. Of course, we do see that second half of the day rebound. Lots and lots of bullish activity in the options tape from 2:30 p.m. Eastern onwards into the close. And we're finding some follow through here with the S&P 500 now at a record high and the NASDAQ peering there around the corner. Thomas, you mentioned the PPI here today, which I think we should talk about in the context of what the CPI and the PPI data have done to rate expectations. Markedly different than where we began this week. And even after yesterday's CPI report, which still showed a relatively benign path, maybe tilting a little bit more towards hikes than cuts, but overall inaction through December 2027. That's no longer the story right now. The market foresees rising odds of a hike starting in January of next year. And if we don't get it in January, then we're probably going to get it in a month thereafter, with effectively rising odds at 50.5% in January, all the way up through 87.5% by October. And yet the stock market still doesn't care. I was looking through the PPI report today, and a quarter of the entire rise in price pressures is due directly related to energy. But another healthy chunk of it is related to the cost of electronic inputs, chips, dare I say, Thomas. So I'm looking at this inflation number right now, and I'm finding some evidence of a supply chain shortage for AI. And sure enough, in the second half of the day, on the other side of PPI, these chip stocks are roaring and racing back.
Yeah, I mean, I was I got into a calendar on SMH yesterday. And, it's up 2.3. I'm actually going to try to close that out right here today, a day after. It's up almost, at 50% of the max theoretical profit. So I'm taking that off. Still long Meta, Microsoft, things like that. Not playing the actual futures just yet. I've been waiting for a pullback, a good pullback. There hasn't really been too much. Like you said, that 5 EMA, it's been a very well-supported market. So, maybe I should just take one of these days where we're down 0.3% and just get long.
Maybe that was yesterday. We do have our bounce here today. The market largely ignoring the inflation issue, largely ignoring the fact that the Fed looks like they'd be leaning more towards a hike than a cut. I guess an interesting layer or wrinkle to all this, Thomas, is the fact that Kevin Warsh is now going to be your next Fed chair, having gotten through the Senate Banking Committee confirmation process yesterday. So he's in, right? Can't foresee him not getting in at this point. John Fetterman voted with the Republicans, so he's in. It's happening. Kevin Warsh is our next Fed chair. The market's probably overstating the possibility of a hike right now, but the odds of a cut this year, as things stand right now, we probably have to say it's not coming. So you're banking on the AI productivity and growth story, further earnings expansion here if you are going to be an equity market bull, and that is a strong case at the moment.
Yeah, I mean, I assume they would want to give themselves as much time as possible for, after the shock is over. So, to see how prices come down once the Strait of Hormuz is open. I do think a hike is probably a little overstated for this year. So maybe the market's more thinking like that too. But overall, no cut is coming, and, the market is fine with that.
Market's fine with it today. Stocks are shrugging off everything. Trump's in China. Iran is still telling the world that it's going to go to 90% enrichment. Who cares? 74, 68.5 here in the S&P 500, Thomas. It's a new all-time high. Volatility has come in a little bit here today so far. It's a 44.1 on the IVR. We can pop it over to VIX, which is down by another 9 cents here today. Yesterday, we were looking at this during the show, and the VIX had turned red while the market was still weaker on the session. And one of those little tea leaves that we were reading was maybe this is an opportunity to start to look to buy the dip. So that's exactly what we did, Thomas, because in a trending market, you have to identify the trend level. And when you find that trend support, you buy at it, and you buy at it blindly until the market breaks down and the chain of trades no longer works. So yesterday we had our pullback 2-hour 1-week moving average, the 5 EMA. We had it here in ES, got long the 7450, 7500 call spread expiring this Friday. And it's working out neatly because that's what happens if the trend continues. The structure of the market does the heavy lifting for you. So as far as I'm concerned right now, we have these South Korean tax headlines, and Citigroup is worried about CapEx for Micron, and that's all great. Have we seen the money that's going around the world right now? Have we seen the money that's being made here for the actual industry? And we look at their valuations. This is still a market that's in an uptrend. So right now, Thomas, I could take profit here. I'm going to hold on. I would like to see a little bit more. Maybe I'm being greedy. But the bull market is still behaving technically as if the trend is up.
Yeah, it's going to take something, and you wonder what it is at this point to stop this rally. But like we talked about previously, valuations are good here. I mean, their P ratios have come down as stock prices have gone up. So, I mean, that's a big tailwind for the market. I think it'll continue to be a tailwind. I don't know if I see a big breakdown coming. I think it's going to be more of where we go into a consolidation phase before the next run higher. Where we do that, who knows?
Where we do that, who knows? Here's a fun fact, Thomas. The Mag 7 ETF at the end of October was trading right around 69. When it was trading right around 69 at the end of October, it had a PE ratio of about 30.5. Today, it's breaking out to a new all-time high, and it has a PE ratio of 26.7. So if that's no Fed cuts coming, whatever the reason the valuation is depressed, it's still a market that's able to find a new high. So, I think there's an argument to be made, certainly, about things have gone too far too fast. I would also point out that when we take a look at the change in oil prices, the change in interest rate expectations right now for the Federal Reserve, that could be part of the reason why Mag 7 valuations haven't gotten back to 30, aren't going to go to 32 like they did in 23, 24, and 25. And nevertheless, because the earnings are so good, you can sustain a higher market level, even if your valuations still have some room to run higher. So, Thomas, I think we just need to be mindful of where we are in the cycle here right now. We are ever closer to Memorial Day in the middle of May, which is typically a good month, which usually leads into June, which is typically a good month, and then into July, which has been 11 for 11 in the S&P 500 in the last 11 years. Until the market shows you a reason to stop trusting it right now, we are still very much in chase mode, where dips into your 1-week average are effectively the only opportunity you have to glob on long. Otherwise, you just need to be patient and wait.
Yeah, a little bit of, softness in financials here, some softness in utilities, real estate, industrials even, really telecom, technology, and communication doing a lot of the heavy lifting here.
No, this is a concentrated market today. And if there's a knock on it, you would certainly point to that. Among the sector ETFs that we track here on Futures Power Hour, 26 on our list, I'm counting 8 that are in the green right now. It's semis, it's telecom, it's tech. You have healthcare, consumer discretionary, the materials, metals and mining, and then oil services is just squeaking up into positive. It's a tech story, Thomas. We could go over to something like QQEW, and it's actually down today by 0.25%, or RSP, which is down by closer to 0.5% here, or even the Russell, which is flat on today's session. So it depends on what you're trading right now. The S&P and the NASDAQ with higher tech weightings than the Dow or the Russell are going to be leading on the way higher right now. So if I'm a bull, that's the pond that I'm playing in. If I'm bearish, why would the Russell do better than, say, the companies that are actually making the money within AI? Thomas, where we go next? NASDAQ here, if we break out above the highs that we carved out just a few days ago, which we're pretty close to doing, 29,480, and we're 4 NASDAQ points away from that right now here in the futures market. A measured move, you could make a case, we'll call 28,800 up to, we'll call it 29.5, 700 points. That carries you to 30,200. And within the next few days, thinking about the Druckenmiller, 8 to 21 times multiplier on your window here, and this is a consolidation May 8th to the 15th, 5 days long. So, this should play out on this 4-hour time frame sometime in the next week, which brings us to NVIDIA earnings, of course. But the market structure, it's bull flags, it's an uptrend, it's 3 steps forward, shuffle sideways, take a little bit of a breather, and then move up. And until that structure changes, you just have to learn to stop worrying and love the bomb.
Yeah, absolutely. The Russell, KRE has been taking a good little dip here, the Russell being impacted a little bit by that from regional banks. Do you think, if the rate cut hike odds keep getting stronger, do you think the Russell starts lagging farther behind the NASDAQ? Is this going to be a market where tech is once again the major driving force?
I think that's probably right. The Russell might be insulated if we want to talk from a narrative perspective. Domestic reshoring and the fact that we've seen supply chains break down globally puts a good amount of onus on the United States to fill the gap, given our productive capacity. To that point, though, you look at KRE here, it had a nice little consolidation for a few weeks, in fact, starting to break down and challenge the uptrend off of last April's lows. We can draw it a number of different ways. In fact, if we want to be, use the most recent fall points, you could probably see a drop down towards 64, 65 before you really get too worried about a technical structure here. But it's not just the regional banks. XLF is a trade that I was looking at just a few days ago, thinking we have an uptrend, we have a triangle, you break back into an area where the market had been, stationed as support. We get back through there. Maybe this means we're going to get a rise up towards, 56, 57 again. And, I was looking for a move through 53 to get long some 56, 57, 55, 57 call spreads. Never materialized, and all of a sudden we're breaking support here. And that's despite 3.7% Atlanta Fed GDP, as it were. That to me is a higher for longer story, a market that's coming to terms with the fact that you are going to have tighter credit conditions in the future. And it's just something that we're going to have to deal with. So like 22 and 23, when you had the Fed hiking, and not saying that we're going to get hikes, but when you had the Fed hiking, or at least when they were done with their hikes and in the higher for longer phase, small caps, they struggled, unlike the NASDAQ. Small caps had, a 4-year window where they traded between 1,600 and 2,000 in Russell, whereas the NASDAQ was bouncing off the lows and starting to climb. I wouldn't dismiss that, Thomas. I think you're onto something there. If we're worried about higher for longer and oil and yada yada, then the big tech outperformance feels like a better bet than anything small cap related.
Yeah, I don't feel great about banks with yields rising a bit here, especially those regionals. Do you think, the biggest macro risk or economic risk right now is the labor market weakening?
Probably, because that paints the Fed into a corner. Well, I think there's a big tell. Confirm my bias, certainly. We're going into last Friday's non-farm payrolls report. You get good data, the market can unclench. We don't need cuts, thank goodness, because we can't afford cuts right now, thanks to inflation. I think the labor market deteriorating with the backdrop of PPI and CPI that we've seen in oil lingering at 95, 100 a barrel, that would really upset folks. So just keep rooting for the jobs to pull in, keep rooting for low jobless claims, continuing to drop. There is an argument, Ilya and I have been going back and forth with this on air and off air a little bit about labor force participation right now, because if you look at the labor force participation rate, it continues to fall. And maybe that's because of boomers retiring or the immigration policies that the administration has at current juncture. But when you look at prime age workforce participation rates, those are holding up near the levels that we haven't seen since the late 1990s, which was a booming economy. So it's a demographic churn. And because of this demographic churn of a large swath of the labor pool retiring and new entrants being limited from coming in, those who are currently active in the labor force may find themselves in a situation where getting a job, despite what's happening with AI, maybe we're a little bit too pessimistic about things in the short run, that there's enough there to keep 50K, 100K jobs growth for the foreseeable future.
Yeah, and I mean, if the market keeps going up like this, I assume you get more supply issues. Boomer, the older demographic retiring, because you're seeing your 401k grow and grow, gives you a little more breathing room, and you retire sooner rather than later with that high 401k number.
I have been enjoying watching some of the posts on Reddit's personal finance subreddit the past few days, where folks are like, yeah, I'm in my 60s. I work for a chip maker. And because of what's happened in the stock price over the past 2 months, I've now hit my retirement goal like 10 years earlier than I expected. I've been working here for 15 years. Do I cash out and retire now, or what do I do? So heartwarming stories, Thomas, because of what's happening with Micron and Intel. And then maybe Ilya's right. All these people get what they wanted. And so as they all cash out, that marks the top, just like the dot-com bubble. That would be fun. Would it be fun? Would it be funny?
Well, good for
either
them.
way, though. Good for them. Yeah, we'll still be here working.
Yeah.
Good for them. Which reminds me, we should pivot into being an AI company. I digress. Thomas, 29,500 here. We're poking up into the highs here for the NASDAQ right now. There's a path forward immediately for 30,200, technically speaking, given the recent consolidation. We have to look to a 4-hour time frame to really see that here. But it's a bull flag, bottom left to top right, low volumes, positive technical drift, the seasonally bullish time of the year. The VIX itself here hanging out below 18. What else are we looking for right now to hang on? So, dips into the 5 EMAs. Stick to the plan. It's been a good guidepost for many weeks now, and it has not let us down yet.
No, yeah. The next, even day we get, I'm probably going to get into a call spread here.
We're a little bit removed from it now. It's 74.20 is the closing level to watch for. NASDAQ, your closing level is going to be 29,153. Yesterday, we closed above both, despite there being red days. And that is a NASDAQ that is now moving, Thomas, into a new all-time high. Just as we get off of stocks and we go over to what's happening with oil, a lot of chop here, Mr. Westwater, in our oil market today, as Trump and his cadre of U.S. CEOs, American CEOs, and various advisors make their way over to Beijing. Trump's officially in Beijing right now. Reports so far have been limited, although I did see one comment that China has been back channeling with Iran for them to end the war and come to a ceasefire agreement with the U.S. as soon as possible. So maybe that's setting the tone, setting the temperature here for what will be an important few days of negotiations. Oil's in a little bit today, though. Volatility in likewise. It's a 46.5 IVR. The high for the session was 51.7. Do you find yourself looking at this market any differently than you did 2 or 3 days ago? And if so, how are you approaching the trade?
I mean, not materially different. I think crude, it still isn't going to really breach the 110 level around there. I think we're going to stay above 80. I think you keep getting these swings. I'm still in a short put spread in CLN6 at 80.81. I'm wanting to start trading the Q6 contract. I might actually put that trade on today. And I would do a put spread around the same area, probably right around the 25 delta, 80.81. Operate around there. Maybe the Iron Condor as well. You go out the 25 delta on the other side. It's around 118, 119. So that's the one standard deviation on the top side.
Sure.
Yeah, I'll probably do something like that. You know, I think it's still there's still decent volatility in here. The EIA numbers came out today. We got a little bit of an upside reaction in crude, but not enough to keep that. Crude drained 4.3 million barrels. You know, the SPR went down 8.6 million barrels. It looks like the largest drop on record. You know that this buffer that we have that is the SPR, and there's essentially SPRs, you know, in a lot of OECD nations. Those are draining fast. So the longer this goes on, you know, I've seen anything from June to July where these buffers effectively become depleted, essentially, and then it could be a different story, right? I think if this lasts, you know, a few more weeks, there's no resolution, you start getting into June, then the situation becomes more bullish. A lot of fuel products are also drawn down on heavily. The only thing that built today, I think it was build or very small draws, distillates that came in at the distillate number, increased 200,000 barrels. But yeah, everything else, I mean, gasoline, Cushing stocks, SPR, crude oil, it's another bullish report. It wasn't bullish enough to really keep the market up today, but I mean, we're still trading above, you know, we're still trading in the range that we've been at. The N6 contract 97. I mean, this isn't a market that's going to sell off, you know, heavily unless we get some kind of really good headline. So I mean, there's headline risk there, but otherwise, you know, the reality of the situation is stocks worldwide in the US have been drained on, you know, so we are in an environment where we're going to stay elevated for quite a while.
Stay elevated for quite a while here. I mean, I prefer to treat oil as having a floor rather than a ceiling that's reachable. Love allergy season, $97.20. I'm very much on the same page as you in terms of laying out directionally neutral things. If we get pullbacks, looking to sell the puts. If we get a little bit more of a rally, look to sell some calls here. We're back in kind of that ethereal plane where there is not really a 45-day expiry that's available to you. So you're stuck at 34. You got to go out to 64 right now. Some will get added to the board shortly, of course. But, you know, what do we do here? I've been doing the short put spreads on the way when we get the sell-offs. I've been looking to sell calls on the way up. 119.48 is the cycle high in the continuous crude contract that came in at the start of the war, 119.48. And so placing bets on the other side of that, 120.121 on a short call spread. Recent lows sit just below where in the N6 contract? April 17th is where we want to look. And that's about $77.50. So what is looking down here at 76, 75 look like? You can still get risking 3 to make 1, 70% probability of profit trades. Yeoman's work in oil. And we'd have to see a meaningful deterioration to get 120 to break. We'd likewise have to see, you know, such a substantial de-escalation, like all the carrier strike groups leave the region, you know, Iran folds up shop in the Strait of Hormuz, no toll. I can't even fathom what it would look like in the next 34 days to get oil back down to 75, Thomas. So for the sake of this, we got to continue taking these types of trades. If they want to let us take those kind of trades and the market's going to offer that opportunity, it's a lot of eggs in one basket, but it's a basket that we have been very comfortable operating around. So stick to the plan.
Yeah, I think stick to the plan is right. I'm have an order in for a short put spread in the Q6 contract at 79.80. So waiting for that to get filled. Then I'm in the N6 contract, and I'm still holding on to my short call in the M6 contract. That is 1 day left. It just, you know, I'll probably just leave this expire and worthless. But otherwise, yeah, I'm going to try to keep operating in the next 2 out contracts as long as this takes. And I might get a little more heavier in the N6 contract Because I do think there's, I do have a really good conviction that, this doesn't drop too far too fast and it doesn't rise too far too fast. I think this range here is going to be pretty well established for a while.
Just to give us a headline where we can get back below 90 and more puts can be sold, will be sold, Thomas, as they should be, in my view.
And you mean... There's a lot of speculation that the Trump administration is going to push really hard on China to pressure Iran. They're one of their biggest crude buyers. They're essentially an ally. So, I mean, if anything comes from that, I mean, who knows? They're probably going to try to put out some kind of positive headline. If it moves the market, I don't know. I saw something from Politico saying China's already, applied pressure to Iran to end this. But, the internal politics in Iran is just, it does look like, the reformers are a little less in control. Hardliners, especially the IRGC, is trying to drag this out a little bit.
Yeah. Thomas, we can turn our attention here to the bond market on this Wednesday, where they are bouncing off of their yearly lows. At least they were prior to that 30-year bond auction. They've started to come back in a little bit here. I want to go to that daily chart for a quick second. Notes haven't quite reached the yearly low yet at 109 and 24 ticks. We got down to 109 and 26 ticks here. Bonds, they are sitting right there as well. The yearly low is 111 and 23 ticks. We are at 111.31 right now, and the low was 111 and 26 ticks here. A lot of this came on the heels of that PPI report this morning, thanks to that energy number. And you can see that here's your 8:30 a.m. Eastern candle when the PPI report came out. We sold off over the next 15 minutes. And then we've been basically chopping around trading sideways ever since then. This was a big week of treasury auctions, however. Monday, we had the 3s. Yesterday, we had the 10s. Today, we had the 30s. The 30s weren't good. The 10s weren't good. The 30s were historically bad. Thomas, we have not seen a treasury auction with a high yield above 5% and a coupon above 5% since August 2007. And that's what came down the pipeline here today. So we tail through for the second consecutive auction, tailed by 0.5 basis points. So this is 2 auctions in a row now where we've seen the market give us a weaker demand signal here. The bid to cover ratio is down to 2.30, down from 2.39. That's the last auction. The 6-month average is 2.43. That's the lowest since November 25. I'm looking for some silver linings here right now. Zero Hedge put it well. This was an ugly tailing auction. What do we make of this?
If you assume all else equal between the last treasury auction and this one, that a higher yield is going to drive more demand. So this tells me that the market, these buyers are expecting inflation to pressure bond prices lower in the coming months, and maybe they're waiting for those higher yields yet.
I think that's the exact read. This is fixed income, right? You're not going to be granted any more money. If you buy a 10-year yield, you're going to get your coupon payments as they are, and if inflation goes to 15%, you're getting the same exact return.
Don't say inflation at 15%.
Sorry, if inflation goes to 20%, you're not going to get the same kind of return that you would if you're holding fixed income. So what's the incentive structure right now when we see all these price pressures coming down the pipeline and the build up further? Even names like Wheat Thomas here at 675 right now because of some of the crop reports that we've seen from official, reporting agencies. They're not giving you much confidence. And then diesel prices going up, and that's going to filter through into almost about everything. If you buy clothing at a store or food in a grocery store, takes trucks to get that stuff there, and they use diesel. So that's part of the input cost. And so that gets reflected. Who's going to let their margins get eaten? Businesses don't. It's passed on to the consumer most of the time. So, Thomas, I'm looking at what's happening in bonds right now. I'm going to use TLT here as an example, just for the sake of this conversation. Can I try to paint a bullish technical picture here at all whatsoever? Not really. It's actually incredibly difficult to do so. I'm trying to see what the case is to avoid a drop towards This isn't even a long enough timeline. Let's go to the monthly chart. Let's go back 20 years. What are the odds that we get back down to the lows that we had in June 2007? We almost got there down in October of 2023. We have had this bounce over the past year or so that has staved off a return to the 2023 lows, and we're starting to lose it. So yes, I'm very much a stock market bull in the short term, and maybe interest rates don't matter. At least the interest rate cuts don't matter. But if the 2-year yield gets back to 5%, Thomas, the 10-year yield crosses 5%, you have a very different conversation about equity market valuations moving forward. And that can be a natural break of sorts that slows down any bullish enthusiasm, even if the money being made in the AI trade still continues to pile up. Asset allocators, longer-term asset allocators, will struggle to justify investing in stocks when you have an earnings yield of the S&P 500 well below whatever the 10-year yield is yielding at that point in time. So this is not worth ignoring. I myself am leading a little bit short here. We talked about this a few days ago, but with the CPI and the PPI coming up, it felt prudent to look short deltas in notes on a short-term basis. So a 109.5, 110 put spread was put on. I could flip it for $78 here right now. Given my broader concerns and equity leanings, I'd rather keep this on and see if I could squeeze a little bit more out of it. Maybe we do get a range break here. But I would not be buying the bond market down here, Thomas. I mean, you're effectively calling the top in oil if you are.
Yeah, Chris, I followed you in that trade. I think we put that on Monday. And I took it off yesterday for a quick 100. So, I don't trade bonds much. I saw a quick profit. I just wanted to take my money and run.
That's good enough. And, I might be better off doing that myself. It's a little bit of a doji down here at support. So perhaps the bleeding's done, Thomas. We will find out more shortly. Selling the volatility in bonds down here I don't think is worth it. Not yet. We can have a more interesting conversation about silver and copper, which continue to run. Silver now is back. Is it back, baby? I think it's back. $88. Are we back? This has been a really nice run up. This was a really beautiful chart that we were looking at the past few days, where we got the breakout through the 83.5 level. You move up towards 88. You pull back down towards 83.5. Former resistance becomes support, and then bang into a new relative local high. Silver, copper, are they telling you anything about global supply chains, Thomas? You've been flagging the sulfuric acid problem for weeks now, and it may finally kicked in with a lot more people.
Yeah, silver isn't what I'm playing. Copper, I was talking to you earlier about this. I wanted to get back in. I still regret I was selling the short put spreads, rolling them up and out. And, the last time I took one off 2 weeks ago, I didn't get back in. And then, of course, copper just makes, its best part of the rally that we've had in quite a while. So I'm waiting for the next pullback. One's going to come. We're here at resistance right now. We'll see if that holds or not. But I'll be buying a pullback. If we get a pullback to 6.5, that'd be great. I would be a buyer there. I would sell the short put spread again and hopefully be able to get into that trade. From what I've been seeing, Chinese copper inventories have been decreasing a little bbit. Analysts use satellite imagery to see smelting activity. It looks like it's down a little bit as well. So it looks like the demand side, supply side, even though the IRGC, the International Copper Study Group, or not IRGC, the ISGS, they said it was a surplus market again on their last report. The market shrugged that off right away. It looks like it was right to do that according to the price action so far. But this is telling us something that maybe, isn't really, known to the market yet. There's something going on here. And of course, copper is also seen as kind of a proxy for global economic health, Dr. Copper. So this signal, if you look at just this is pointing to, still a good, healthy global economy, even with these supply constraints of crude oil, sulfuric acid in the market.
I think the supply chain concerns, Thomas, they are very much in focus right now in the short term. The IRGC does have a hedge fund, so I don't blame you for thinking that they might be operating in the metals markets here. There are a few mining operations right now that are limited, but could be coming online later this year or early next, particularly when you look in a place like Panama. Panama is having a pretty significant issue. When you look to places like Chile and Peru, they're having fuel problems. And so some of the mining activity has slowed down. And so here's a knock-on effect of the war playing out in real time. When you have to slow down your mining activity because you don't have enough gas in order to power the machines, but the demand persists, prices tend to go up. Thomas, we did the exercise of saying, let's pretend the late January price action never transpired here. It's a little disingenuous, but copper was really just caught up in the fervor around silver and gold and platinum and palladium. So giving it its credit, we said just pretend it doesn't happen. What does this chart look like? It's an inverse head and shoulders pattern sitting up right before highs. It could be a breakout up to 7.1. That was just 4 days ago, 3 days ago. Can't believe it was only 3 days ago. You made the point that we're sitting right at the former swing high here. So the HGN6 contract did hit a new all-time high today, clearing out its late January high. One could envision, as I do, that there are folks who got into that trade at the end of January who might still be holding the HGN6 contract long, who finally found their exit liquidity today. They can get out at break even. And that's all they wanted. They didn't have to eat a loss. So maybe there's a little bit of churn up here right now, but like these other markets, you get that pullback into the 1 week moving average, something that's in the throes of a breakout that has not reached its upside target yet. Or heck, Thomas, do we really want to go nuts here? I saw yesterday folks saying that we could, see copper engage on an even more bullish run because the range isn't, 5.3 to 6.2, it's 5.3 to 6.7, which means we could be looking at 8.1 here on copper. I'm not ready to buy those kind of calls yet, but I think we need to be open-minded as we head into a period where some of these markets are being shaped by the fact that there's not enough molecules flowing around the globe right now.
Yeah, absolutely. This is a good one to watch. It's making, if it breaks out, it breaks out. I'll have to watch with some disdain, but hopefully we get that pullback and I'll be back in.
So silver prices are here moving up. You've mentioned them as a knock-on trade for copper. That seems to be playing out right now. Gold is just, still. It's trapped against its 1 week moving average. Its 1 month moving average. It can't climb through its 50-day here. Volatility still low. I have some legacy gold calls that are going to expire worthless now, but I haven't put a new trade on here in some time, Thomas. I don't see a reason to do so yet. Silver and copper is where the action's at.
Yeah, I have a long put spread in gold, the Q6 contract, 4490, 4500. I've been waiting for gold to break down. It's just holding this level here, not doing too much. I'm going to keep it on into next week. If it doesn't give me anything by next week, I'll just get out. But
it doesn't give you anything next week, you'll get out. Yeah, that makes sense. Capital's tied up, a market moving sideways, state of decay. If you're long a put spread and you're not really going anywhere, what can you do? Thomas, let's talk about what's going on. Before we get over to the dollar, let's do a brief reprieve over into the grains here, which we had a really big day in wheat yesterday. A good enough day in wheat, Thomas, that the trade that you and I put on a few weeks back can finally be taken off for a profit here, the 650, 680 long call spread. It was put on at the start of the war once we saw the fertilizer prices doing what they were doing, where they were starting to go ballistic. And then you had the knock-on effect of companies like CF or IPI or, Mosaic. They were having some gains early on. It obviously took a step back in April when the market began to recover, but there have been some real supply concerns here domestically that have cropped up in recent days. Can you walk us through the report that sparked the big squeeze higher the past 3 sessions?
Yeah, I mean, wheat production was cut to 42 million metric tons. That's down from about 54. So that's a big cut. I mean, it's going to be the smallest wheat crop in quite a while. Years, I forgot the exact point that's going to be at, but a lot of it, was actually weather driven.
1972.
Farmers abandoning their fields. So I think almost like 35% fields the WASD just assumed were going to be abandoned. So that means the crop is so bad the farmers don't even try to harvest that. So it's just a huge shock for the wheat market, way over what the market was expecting, and of course that's reflected in the price action there. So this just isn't looking good. I'm going to try to get into this on the long side. I'd like a little bit more of a pullback than what we're getting here. If we pull back to that previous swing high, I would go ahead and probably do a long call spread with the IVR being down here. But I'm still also in my soybeans. I'm long soybeans via short put spread, and I am in corn via a short put spread as well.
Yeah, the wheat trade has worked out neatly here. I'm with you about getting into another long position, 12.8 IVR. At 9 DTE, there's not much more that can be taken out of this at present time. We're, of course, also at the end of the trading session. So liquidity a little bit thinner. I'm going to take this off tomorrow, Thomas. I'm not going to take it off right now. I know I can get a little bit of a better price. I'll watch the bid-ask spread. But at 44 days to expiration, this is a big deal. Okay. Farmweeknow.com, not a website I visit often, but this is now what I visit. We see here fewer planted acres combined with declining yield expectation drop the U.S. wheat production estimates to 1.56 billion bushels, down 423 million from last year. That's not good. This is 28% of winter wheat rated good to excellent, the second worst rating for that time of year in USDA history. Production's down 36% with the lowest hard red winter wheat crop since 1957. Projected at the lowest winter wheat crop since 1965. The total crop for all wheat in the United States, lowest since 1972. And now we have all the supply chain issues happening in the background, plus the diesel prices. So we're going to have less supply of wheat when the input costs are also skyrocketing. Oh my goodness, Thomas, I can't believe I'm going to say this. Was Larry Summers right with his silly 1970s inflation charts?
Yeah, and I mean, of course, higher grain prices, they're going to eventually feed into higher inflation costs for food. Food's already been a big pain point for consumers over the past few years.
There are still some decent trades on the board. The 700, 750 long call spread pays out 4-1, risking 1 to make 4 effectively, a little bit under that now. 33% probability of profit. As soon as I get out of this one tomorrow, I'm going to jump back into here. You mentioned soybeans, though. 50-day moving average lighting up since the beginning of February, catching it along the way. So I want to join you in there. That's a 65.7 IVR. I feel a little bit better about selling vol here than I do, obviously, in wheat, which doesn't have much volatility. I'm looking at the strikes, though, because I want to operate right around that most recent pivot low that we had here on May 7th, and that's 1,182. So just going south of there, 20 points wide, 75% probability of profit, risking 3 to make 1, a little bit worse than that, but pretty close. I think that's good enough, Thomas. We can just bump up $10 and you get a little bit in there as well. I'm going to take the better risk to reward at 71% probability of profit. I'm going to see if we can join you in there. I know these markets, we're not exactly the best time of day to execute trades in the grains, but nonetheless, nice price action that we've seen for absolutely terrible reasons.
Yeah, I'm in the 1180, 1200 put spread on the soybeans. I'll stay in there too.
So we had a lot of technical support here. If we lose 1200, we lose 1180. You're losing your 1 month. You're losing your 50-day. We've really been holding them. That little band as support. It's been a nice little region to pick up in recent weeks. Maybe it continues. Here, but 65.9 IVR right now in the beans. Thomas, we've got 10 minutes left here. Let's just jump on over to what's happening with the US dollar here today. We have a day where PPI, CPI is up, and so the dollar is able to continue its run to the upside. Although as the session's gone on, it's ebbed and flowed. The Australian dollar is now actually up on the day and could be putting in a new closing high for the year. I think you and I both have been trading this on the long side. I've been short the put spread. Maybe you have been too. Other than that, though, do you think that the dollar in a world with these higher U.S. rates potentially coming and no Fed cuts possible for maybe the next year and a half? Have we overstated the dollar's demise?
I mean, maybe. But you look at the other side, other central banks are hiking. And, we're still not hiking yet. Even if the rate hikes get stronger, the hikes have to be almost like imminent for it to really affect the currency market, I think. So as long as the RBA, the BOE keep hiking, I'll probably lean into these bullish trades. I'm long 6A through a long call spread. And I'm long 6B still. Actually, I am still long 6B via short put spread. So both of those, they're doing fine. I mean, today is not the best day for them. Yesterday wasn't, but still, not in the money on those the put spread. So I'll leave it in there.
Thomas, I'm looking at what's happening with the pound and the euro, which are two of the three largest components of the dollar index. So if the dollar index is going to turn, it's probably going to involve these two currencies. 134.5 here in the pound, line in the sand. Euro is going to be 117 in the 60 M6 contract right now. We haven't crossed those thresholds yet, although momentum is waning. We're starting to dip below some of these moving averages. Not for nothing, currency markets are a little bit more, they can be more technically driven. We had this Morningstar candlestick cluster at support recently. It did get a little bit of a rally, but then it was cut short. We got this evening star candlestick cluster. And then today we're finding follow through. So maybe the back and forth continues here. I don't think it's worth getting bared up for 25 pips. It's better to wait for 117 to break before trying to short this thing. Also, if you want to get long, maybe wait for a little bit closer to support if this thing still is weak, because then you're going to get a better entry and a smaller net loss if ultimately the low that we had here on April 30th at 116 and 76 is cleared out. I find the dollar in a tough spot here overall. You say the RBA is hiking rates already, which is true. And the ECB may hike rates as soon as next month. But Kevin Warsh right now is going through the final round of confirmation for what it's worth. Don't think the Fed's going to be hiking rates next month or maybe even by the end of this year if the market's correct at its current price and a lot can change.
Yeah, so how's it work? He had to get confirmed as the governor or a governor, right, to be confirmed as the chair. So there's two separate ones?
Yes.
Okay.
Yeah, I mean, you need to be confirmed as governor first. So he's making his way through the confirmation. It's all, he's getting in. There's no stopping him.
Yeah.
And, Warsh has been on the board before, so he knows how it works. I personally, and Powell's still going to be there, which is all the palace intrigue that a FOMC watcher could ever wish for. Beyond that, though, how can you bank on the Fed right now to be a lever upon which the dollar can rally? It just seems difficult to justify that. Whereas the other currencies, they have a very explicit line from point A to point B. Oh, the RBA has been hiking rates and they're telling us they're going to hike more this year. The currency is getting stronger while other counter currencies are sitting on their hands, or at least their central banks are sitting on their hands.
Yeah, and this is probably an environment where they're going to be incentivized. Those hikes are going to be supported. So,
keeping an eye on the Aussie here, it likewise has a near 60 IVR, 50 days to expiration. I said 50 days to expiration. There we go. Keeping that in mind, Thomas, if we go over to the U6 expiry, we're going out to September now. That gives you a 50 right around 70. We'll call it 75. So peering just below there, 70.5 and 70, you're looking at 4-to-1 risk to reward right now, which isn't fantastic. Not loving that, but it's an 84% probability of profit. Maybe if we went a point wide and straddled it, you'd get something a little bit more palatable, but even so, it's still close to a 4-to-1. I think the way that you're doing this is right. If we're going to get the continued trend following here, you may have to take a little bit of heat under the collar and buy a call spread, but that's really the way that you're going to get best bang for your buck, as it were. And maybe it's not the futures. Maybe it's the spot currency market that deserves more of the attention and just get there as opposed to, currency futures options. along the way.
Yeah, I'm also long Aussie dollar in my spot account. So stay long there too.
Thomas, we're coming to the end of the session here. Quick look at stocks before we go out the door. NASDAQ here is breaking out to a new high, 29,553. Your S&P 500 doing its thing as well, 74.82. New session high at 74.83.75 right now. 5 EMA all the way, Thomas. Tomorrow could be a red day as long as the 5 EMA holds. I will be there buying, and until that characteristic of this market trend changes, what else is there to do? Low volume, low volatility, positive technical drift during the seasonally bullish time of the year.
Straight up.
I'm just trying not to overthink this. Overthinking cost me half the rally.
Yeah, don't think. Don't think. They told us that in the Army all the time. Just don't think. You'll be fine.
It's ridiculous to think that, I've been on the right side of this for more than half the move. It's been one of the best bull markets we've ever seen, and I can say I've caught most of it now. That's not where I was mentally a month ago in April. So it's a totally different framing, and maybe that means I'm getting reckless here. But the characteristic is well defined, and so we just have to trust the process right now, even if it may be tough to process.
Yeah, trade with the market. Giving you something, take it.
Giving you something, take it. That's all there is to it. Tomorrow, GDP out of the UK, maybe that gets the pound going. Keir Starmer's demise is really what's drawing everyone in. It's fascinating. No head of lettuce yet, Thomas, but we might be getting there again. It's a great British tradition. Tomorrow morning, though, retail sales out of the US. That, of course, matters. Retail reflecting what's happening with the consumer. Best report that we have on a month-to-month basis. Consumers are 70% of consumption or GDP, 68% in the last report, thanks to the data center build out. Folks are going to be focusing on what's going on with the gasoline and autos print. I want to see what's going on with the retail sales control group, because that's what feeds into GDP. That's what we care about for our actual growth. So it strips out the noisy stuff. Are consumers holding up despite the noise? Because that's what the market wants to see. Thomas, we'll be back later today. It's Wednesday, so I'll be back on Last Call with Nick, 3:30 Eastern, 2:30 Central, and then overtime with Elliot, 4 Eastern, 3 Central. So I'll see everyone there. Until then, though, good luck trading. Stick around. Dr. Jim's up next with From Theory to Practice.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do, guys. Don't even worry about it. There is nothing to worry about. PPI is super hot. Don't even worry about it. Inflation coming back, not a problem at all. Man, it is good times had by it all. It's bonefish, it's banana natties for everybody involved. So welcome to the show. I'm glad that you are here. Thank you guys for being a part of what it is that we are doing, because it is only because of you all that we can do what we do. So thank you guys so very much. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching the show. Man, we can celebrate NASDAQ 30,000 here together on the program. Nobody else even knows this is happening. Like, nobody outside of the Tasty Live Network, nobody outside of From Theory to Practice even knows that the NASDAQ is on the doorstep of greatness. So I need hats, I need t-shirts, I need keychains. NASDAQ 30,000 is right around the corner. So Josh, bring us in to the market. Did we get there? Did we get there in the 3 minutes it took me to do the intro? It's pretty possible. All right, so we're still a little bit shy. You mean S&P is up 53. You got the NASDAQ, a risk-free instrument, which of course we know theoretically is an extremely high-risk product, but practically speaking, up another 382. Got the boomers down 94. You got the Russell 2000 futures index up 3 on there. So pretty unched from a Russell standpoint. You got bonds down a little bit. You got notes down a little bit. Man, you got oil down a little bit. You got UB40 down a little bit. Got the shifties out there. Pretty slow day in shifty land. Gold only up 13. You got the Hunt Brothers. Where's my cheese and pepperoni at? Let's see here. SIL 8888. Wow, man. Does it get more feng shui than that? Guys, look at that. Let me grab my thing here. Oh, we missed it. Oh, man, I had a chance at greatness and I couldn't grab my drawing tools. Man, it was 88.88 a couple seconds ago. Man, silver's going to be back to 90? That's crazy. It's going to be back to 100? Man, break out the silver bulls. Because they guaranteed me, they assured me, they reliably informed me that silver was going to 250. So this has been a little bit of a bump in the old journey for silver going to multiple triple digits, but maybe it is indeed just a little bit of a pause for the silver bulls. But the market looks incredibly strong out there. Incredibly strong. You got volatility. Volatility futures are down today. Oh, volatility futures up. Wow, the market is so strong, the volatility is even up. The market is actually so robust that it is dragging volatility up with it. Volatility futures up 13 cents, and spot volatility, that guy's down about 18 cents on the day. Got the VIX down to under 18. And so, man, some wild stuff out there. Wild stuff indeed. Of course, we are getting blasted on our MES and MNQ positions, but that's the way it goes, right? I mean, again, I say this on the show, no fewer than 19 times per show. You have to know what you're signing up for. You have to know what you're signing up for. If you're going to take a directional shot, you got to know you're taking a directional shot. That means if it works, you're the greatest trader that's ever lived, of course. They should erect a statue of you in downtown Manhattan. But if it doesn't work, man, they shouldn't even let you near a mouse. They shouldn't even let you turn on your laptop. That's the way that it works. That's how it goes when it comes to being directional. And so with MES and MNQ, that's exactly the situation that we're in right now, because we have short calls on in both, and it is not working at all. But yesterday, our old pal Danish Dynamite saved us with a little ratio spread that we put on in MNQ to offset some of the short delta from the call. Danish Dynamite, I did see your email right before the show. We chose different strikes than Danish Dynamite because the typo got them in the YouTube comments. And so we don't have the same strategy that he has on or had on. I think it's gone now. But still, it is helping the cause. And so we're not going to split hairs over taking a little bit of risk off the table. So MNQ, we kind of have a little bit of, of a neutralized position. We've got the short call giving us the bearish side. We've got the 1-1-1 or kind of the laddered ratio spread giving us the bullish side. And so, man, NASDAQ up 372. That's some wild stuff, man. There's some absolutely crazy stuff. And so, by the way, if you have a question for me, get it in the chat box, man. Get it in the chat box. I'll try to get to as many as I can. I see Josh is already Amazon priming me some questions right to my team's chat. So I'll probably start with those, and then we'll probably move into the surprise and delight section of the show, because I typically go to the first questions and then move down sequentially and move through them in chronological order, which that means I typically get to maybe 1 to 1.25 questions per show. And so if you put a question near the end, you're like, Jim's never going to get to it. And it is a pretty low probability play. Like, let's make sure that we understand what we're doing here. You are buying out of the money premium when you put a comment in later on in the show. But you can bank on the surprise and delight. There is still a chance that I will grab your comment or your question when we do that part of the show. So, okay, let's go ahead. Let's see where we're at, man. Look at you guys. I see you guys in the chat, though, man. You guys are already putting in some work. You guys are putting in some real work, man. I see WH Wall is in the house. E-Media's here. Man, CA Paris is here. Ash Finn, Jared Kramer, Preston. The Preston's here. Patrick's here. Superstar Sam L. Point B. RML. Man, Wolf is here. Ordenu is here. Man, that's some amazing stuff. So let's go in here. Let's see. In the portfolio, there actually isn't that much that we have to do. Now, look at ASTS. Now, we got a little bit of a shot here. Now, is it a likely outcome? No. Is this something that we're going to hang our hats on? Absolutely not. But we got a little bit of life in this position with the stock up almost $3 today. And so we've only got 2 days left. This was an earnings trade that I put on. It was either yesterday or Monday. I can't remember, actually. Actually, let's look at our chains. We don't have to remember. We don't need the blueberries to carry us through. We can just do this inside the technology. If I click on my chains here, we do this on May 11th. So yeah, so this was a Monday play, a little Monday earnings play. Wow, Monday's kind of that's a bit of a power move when it comes to earnings releases. Earnings are typically middle of the week. Like typically Tuesday, Wednesday, Thursday are going to be your primary earnings days for most companies. But ASTS, I mean, it's a little bit off the reservation, obviously. Like it's a little bit off the beaten path when it comes to just, the company that it is to begin with. So it would make sense that it's going to be kind of a Monday afternoon type of deal. So we did this guy on Monday afternoon. It was just a long call spread, like nothing super complicated, nothing super fancy about this position, but ASTS crash boom banged right after earnings, which again, all you needed to know, you didn't need to know what the company did. You don't need to look at the statement of cash flows. You just need to know which side of the market is Dr. Jim on. Is Dr. Jim very clearly on one side of the market? Because if I take the other side, I am going to trim 3 to 6 months off of my pathway forward to financial independence. And so that is exactly what happened. And we are now currently hemorrhaging cash on this position. But we have a little bit of time left. Not a lot of time. We got 2 days left. It's probably going to be a situation where we lose this $1.74. Now, you could look at this and say, Jim, you've got a chance to save 44 cents. In fact, you know what? I never do this. But just in the spirit of keeping you guys on your toes, just in the spirit of shocking the muscle, right? Because it's a Wednesday, right? So obviously Monday is chest day, Tuesday is back day, Wednesday is international leg day, i.e. off day. So we are actually going to hit a little chest today. Let's do a little chest and arms on a Wednesday, and let's take this trade off early. Because again, this is 44 cents. And I mean, you look at the strikes and it's like, all right, there's not a great likelihood that this guy's coming back. In fact, let's actually look at the numbers. You don't have to take my opinion. You don't have to take my subjective analysis. Let me look at the actual numbers. So for this trade to get interesting again, I need ASTS up to 82. I actually need it higher than that, right? To make money, to even break even on the trade, whatever. But let's just say to make it interesting, I need ASTS up to 82. What is the probability that ASTS hits 82 by Friday, by expiration? I haven't looked at this. I don't know what the numbers are. I'm going to say it's less than 20%. I'm going to say that the odds are severely stacked against us. So let's take a little look real quick. So if I go into ASTS, I go to my trade page, I go to my 2-day cycle, I'm just going to find the 82 call. Wait, what? That's crazy. I'm totally wrong. I couldn't be more wrong. So so the delta, now I think I'm going to stay in the trade. Wow, that's crazy. So the delta, see, this is why the metrics matter, man. This is why looking at the objective metrics, looking at the actual, the unbiased numbers and variables in the marketplace can be so helpful, because we all have opinions. We all have biases. We all have like feelings or hunches or whatever. But it's like, man, when I go in the actual marketplace, I'm like, okay, there's the price. There's the delta. There's the probability. It's not based on my opinion, right? It's just the amalgamation of all the order flow that's taking place in the marketplace, and it's kind of settling on these objective prints. And so when I look at the 82 call, it's actually a 22 delta. So that means that it's about a 45% chance that this actually hits by Friday. I did not think it was going to be that high. I thought it would be less than half of that. And so the fact that this is kind of like a coin flip, kind of like a weighted coin flip against us, that this guy could actually get back to the long strike, man, I don't know. Because, I mean, even if I look at like the 83 strike, which this is probably what we would need to potentially get a scratch in the trade. And if it happened at the very end of Friday, it would not be enough. But that's still 36% chance that guy hits. And so now I was going to keep it on, but then I wanted to shock the muscle as I kind of, started to spout off a couple of seconds ago. Now I'm kind of thinking, I think we got to leave it on. Like when I look at this, I understand this is real money. I understand when you apply, a bonefish equivalent unit converter to this, it's like I got almost 2 bonefishes right there. In fact, it's going up as we speak. I don't know what's going on with ASTS, but it is increasing as we speak. And so we are almost all the way up to our second BEU, because remember, 1 BEU is $25 US. And so ASTS, I don't know, man. I think we're going to leave it on, though. That's crazy. I did not realize the probabilities were that high. But we got a chance. We got a little glimmer of hope. And so so that's ASTS. So the rest of the trades, though, MES and MNQ, I'm going to sit tight. I'm not going to do anything. I'm not going to take off the going back, kind of backtracking a little bit. I don't want to take off this ratio spread just yet, because we definitely have an economically significant profit on that trade for sure. But just given how much we are hemorrhaging on the short call, I would much prefer to let this guy simmer a little bit, and let's see if we can get a little bit more off of the ratio spread. Again, I'm probably not looking for anything super crazy out of this, but I mean, I put it on for a 217-point credit. If I could buy this thing back for 70 or 80 points, that would be a really good trade, in my opinion. And that would kind of help to offset the basis on the short call. At least that's how I would think about it in my mind, rightly or wrongly. And you know what else is crazy? Is even though the NASDAQ has rallied almost 400 points today, we're still basically only with an at-the-money short call strike. And so that's good. That's a much better situation than we have with our MES trade. That is deeply, fully in the money. So we are short MES. It's basically a static short position at this point. And again, I'm okay with that because that's what I want to sign up for. And I'm okay playing the market to the downside. I got it. It's famous last words. This time is different. It's never going back down. I understand. I mean, yesterday they scared the children there for a second, and they actually did rally it back to pretty much us, which was a nasty, nasty business indeed. But for MNQ, we're going to sit tight, and we're not going to do anything. So ASTS, there's MNQ, there's MES. Man, looking on down the list, it's like, okay, IBM's not going to work. That guy's going to go out the pasture, which is fine. I mean, you take a shot, you miss, and that's just the way that it goes. And so the options will be out of the money. There's no reason to go in and close them early. You don't need to do anything. I understand that you have pain on your board. I understand that you want to get it off, the screen so you don't have to look at it. Like, I totally understand that. And I'm not even being sarcastic. Like, I'm being sincere when I say that. Like, I understand there's some benefit to getting it off the board, but still, let's leave it on because you never know. Some crazy things could indeed happen. So IBM will sit tight. Now QQQ, a little bit of a different story because this trade is not working either, but we're going to have to buy this guy back at some point in the next couple of days because it does expire on Friday. And so obviously if this guy expires fully in the money, then we're going to be forced to essentially absorb assignment fees on both legs of the strategy, which not a huge deal, not the end of the world. I think it's maybe $5 per leg for assignment fees, but it's avoidable. Like there's really no reason to do that. Now, sometimes things happen. You forget, you're out of town. It just happens, whatever. Those things, that's just part of trading. That's just how it goes. But this to me is pretty avoidable. And so when it comes time to, I'll probably give it enough. Well, actually, I don't want to close it today because if I close it today, then tomorrow we're going to gap down like 9% or something crazy. And I'm going to be like, where is my short call spread? And so we'll do it tomorrow, though, just so I don't forget it on Friday because I am out next week. And I don't really want to have to deal with all of that. Although it would just cancel out. It's essentially just the assignment fees. But for QQQ, we'll look to close this guy tomorrow. But just remember, when you have an in-the-money short spread, a short call spread, or a short put spread, you don't need to because, again, it'll just cancel out if you leave it on, but you'll pay the assignment fees. You're going to want to close that guy out before expiration, but still, give yourself the whole time. Give yourself all the way. Now, is it possible that we actually are assigned tonight? It is possible because there is effectively no extrinsic value left in the options. And so if it happens, then, hey, we got content tomorrow. And I'll tell you what, the content's not going to make itself. Like you think these shows just write themselves? They do not. And so maybe we get assigned tonight, and then we can talk about that on the show tomorrow. But for now, we'll sit tight and do nothing with QQQ, but we're going to have to buy that guy back in the next little bit. But I'll tell you what, man. So if you look at QQQ, I mean, this is some crazy stuff, man. Like I've seen all the comparisons online to like the late 90s and like the early 2000s and like the internet boom and the internet bubble. My dissertation was actually on that time period. And so I was looking at institutional trading around that time period and trying to measure the price impact of like the big players, institutions like insurance companies, hedge funds, etc., in bull markets versus bear markets, up days versus down days, and trying to understand what type of costs they would incur on these big orders that they had to fill. Because you and me go in with our one lots, you and me go in with our 100 share orders. I mean, they're going in with tens of thousands of orders. They've got these huge blocks that they're trying to fill. And oftentimes they have to split them up. Oftentimes they'll take like an 80,000 share order and they'll split it up into like 4 20,000 share orders. And they may do it over a day or 2 days. I mean, the whole stealth trading thing is that's a whole strand of financial literature that's really fascinating. And my dissertation wasn't really involved with that, but it was kind of related in like a tertiary type of way because I was looking at these institutional orders. And so, going back to the internet bubble, I was 20. Well, I was 18 in 1999. And so, I was 18, 19, 20, 21. And so, I remember it vaguely from like being an adult and going through it, but I wasn't really trading. Well, I wasn't trading at all. I wasn't even really investing at that time. So I just saw it happen. I'm like, that's pretty crazy. But hey, it's pets.com. I mean, do we not see this coming? Like, it looks pretty obvious to me. But right now, a lot of people are saying it's similar. A lot of people are saying it's the same thing. A lot of people are saying it's different because you got real companies with real earnings, whatever. I don't know, man. All I know is that this is not normal stuff. Like 1 to 1.5% a day in the indexes, that's just not normal stuff. Like, in terms of how it's going to correct or how it's going to, do whatever it's going to do to normalize, something's got to happen, in my humble opinion. And so if we look at QQQ, like when I put this trade on, now that I'm done waxing poetic about my dissertation way back in the day, if we did this on April 15th, we sold it for 402, April 15th. Let me click on the market state snapshots, and you will see, man, look at that. Look at that. This is not my opinion, guys. Like if you can see the screen, look at the screen. If you are multitasking, come back to me because you need to see this. If you are listening to the audio only version of the show and all you have is my sultry voice, let me guide you verbally forward through the forest. When we put this trade on, and this was April 15th, this was a month ago. This wasn't a year ago. This wasn't April 15th, 2024. This was 29 days ago. We sold a 645, 650 short call spread, and 645, 655 short call spread in the QQQs. The price of the QQQs at the time was 635. The price of the QQQs today, I can get you in to one share of QQQ for the one-time low cost of $715 a share. Now, you got to act now because this price is not going to stick around for too long. But that's crazy that it's rallied 80 points in a month, less than a month. I mean, that is pretty crazy. That's some pets.com type stuff right there. That is some, like laundromat.com type stuff right there from 1999, 2000, 2001. That would actually probably be a pretty good business now that I think about it. Like, let's get some marketing. Let's get some digital advertising to get some people out to the old laundromat there. But anyway, I digress. So QQQ, that's crazy stuff, man. It's not going to work. So we'll close it tomorrow. We'll come back to this guy tomorrow. And then obviously, Starbucks is down a little bit today. And that's really neither here nor there for our position because now, we rolled up the call on the investment style covered call. It's right there around the strike. If it just stays right here, that's actually great for us because we're not going to participate in any gains above 105. And so having Starbucks rally significantly above 105, not really going to help us too much. Now, it could help us if we wanted to close the position early because the delta differential between the shares and the option still favors the stock, meaning if the stock goes up beyond the strike, it will show us positive P&L, in the interim. But if we're planning to hold the position for a long time anyway, it's not really going to matter when the dust settles and we kind of sift through the rubble, which is kind of how I'm thinking about this because we're not going to get out of this trade anytime soon. And so there's Starbucks. And then obviously Snapchat up 9 cents today. That makes sense. I mean, it's just a great company. It's just very well run. And that's why we've hitched our financial future to Snapchat. And then XOP's right around the scratch. So we got a ratio spread on right around the scratch. And so that's fine too. What I want to do today, though, in the spirit of shocking the muscle, in the spirit of doing something different, I wanted to, because I don't want to do any new trades that are like, 45 days or something like that because, and Josh told me that Warsh was just confirmed. And so, interesting stuff. Okay. I mean, I guess that was kind of the chalk, right? I mean, that's what people would have expected, I think. And so there you go, man, it's going to be crazy. Man, when is the next FOMC? Somebody put in the chat when the next FOMC is because I want to know and the algo's dying to know. When is the next FOMC? Because listen, guys, I know I talk about this a lot, and I know I will over-sensationalize this from time to time, and I might mislead you into thinking that things are more important than they actually are. But hear me on this. This next FOMC meeting, whenever it is, Josh says June 17th. Guys, I've been studying this stuff for a long, long time. Going back to the dissertation, even before the dissertation, I've studied a lot of economic data points. I've studied a lot of economic data drops. I've studied a lot of FOMC prints. This one coming up on June 17th, I have never in my professional or personal life seen an economic print that is more important to your family's financial future than what is going to happen on June 17th. So you got time. You've got a month. Right? If you don't have the bunker materials, that's on you. If you don't have Bluetooth connectivity down in the bunker, that's on you. You've got plenty of time to get these things in place now. And so there is no time to waste. And so June 17th, man, that's going to really, really be something. But what I want to do today, let's do SPX. So here's what we're going to do. We're going to do a random butterfly. There's nothing tomorrow. I don't think there's anything tomorrow. I think the Spanish durable goods estimate forecast revision might be tomorrow morning. And that's always a notable market mover. But aside from that, let's do a random butterfly, SPX, tomorrow, just to kind of grease the wheels a little bit. So let's go into the trade page. Let's go to the 1 day cycle. I'm kind of thinking, and I know this is crazy. I know we're just lighting cash on fire. It's like, Jim, what are you doing? This is crazy. This is the greatest bull market of all time. It's never going to stop. This is totally normal. 100 basis points a day in the Qs. We're going to be at, NASDAQ 30,000. Forget 30,000. 60,000 by Halloween at the latest. Okay, let's take a little bit of a shot here to the downside with some SPX. Let's go ahead and let's do a 74.50, 74.20, 73.90. It's a little under $5. Nothing super crazy. Again, this is only about 1.5% of the account. And so 30 points wide in the SPX, not a super huge trade, not a super wide trade. I would like it to be wider, but you got to pay for that additional width on a butterfly. And so we're just taking a little bit of a shot to the downside for SPX tomorrow, just to have a little fun. Now, again, we might get a sign in QQQ, and so that would obviously lead to some fun on the show as well. But here's another way to just take a directional shot. And I love butterflies because you can take that directional shot and you can do it in a fairly cheap fashion. So 74.50, 74.20, 73.30, $5 is the price we're going to pay. And let's give it a go. Let's give it a go. There's nothing on the calendar tomorrow, but let's see if we can get just a wee little bit of downside movement in the old market. I'll try 495. Let's see if we can get filled. All right, no takers at 495. Let's try 5. We got to get somebody out there, I would think. Somebody wants the other side of our trade, I'm sure. I mean, if they knew who it was, oh my gosh, they would be chomping at the bit. Chomping at the bit. I feel like, okay, so we got filled at 505. I feel like we need order IDs because that was actually one thing I had back when I was at the University of Memphis and I was working on my dissertation. I had access to a pretty unique data set where I had all of the orders from like a group of institutional traders. I don't remember how many there were. There was maybe 100 or 200 or something like that. It wasn't a super high number, but it wasn't like 2 or 5 or 10. Like it was a pretty sizable number. But what was really cool was for this period of time that I was looking for, I actually had like the institutional trader ID. So it didn't tell me who the institution was. Like it didn't say Goldman Sachs or, like Northwestern, whatever, or MetLife or whatever. But it did say like ID 11976. And so I knew that I'm like, okay, ID 11976 has 100,000 block that they need to fill. And I could see how long it took them to fill that order, whether it was all in one fell swoop or they split it up or whatever. And it was really interesting. I mean, this was like almost 20 years ago now when I did this, but it was just so interesting. I remember looking at the data. I was like, man, that 11976, man, he is a shooter. Like he is out there. He is making it happen. Is that Bill Ackman? Is that Carl Icahn? I mean, it could have been. I don't know. And so all I saw was a series of numbers. And so I was like, man, that's some crazy stuff. That 11976 is making it happen. But anyway, I feel like we need that so that you guys can make money. That way, if you don't see the show, or maybe you miss my orders, but you see like Dr. J 3389, like, okay, that's Dr. Jim's trade. Let me fade that really quick and make a little bit of money to provide for my family. And so, all right, so there you go. There's some SPX trading to the downside for tomorrow, just some random stuff. And there you go. All right, let's see. Where are we at? Josh has Amazon Primed us some stuff. Some questions. So let me see, Josh, where are you at? I appreciate you. Where are we at? Okay, Orgdenu. What's going on there, Orgdenu? Orgdenu says, what rock do you typically recommend relative to buying power, particularly when using short puts? Great question. Excellent question, because I actually don't like using rock at all. I don't really like to look at rock at all. Like I rarely look at it. Sometimes I'll look at it if I'm explaining the concept or the variable, so that way we can all understand what it is and those kinds of things. But I almost never, not in this account, not even in like stealth accounts. I'm not looking at rock because to me, rock, it can be useful, and some people might be using it in a very useful way. But oftentimes it's very, very misleading. Very misleading. Case in point here, actually, let me pull one up here really quick. Let me give you guys a great example, a real-time example of what I'm talking about. Let me just do it doesn't matter, man. Let's just do like Apple. Well, Apple's at 300. That's crazy, man. Look at this. Apple 1.5% a day. What's Tesla doing? Is Tesla at 500? Oh, hold on. Tesla. 447. Wow, that's crazy stuff, man. We'll just stay on Tesla. It doesn't matter. So if I go into Tesla, actually, wait, it does matter. I want to get dollar-wise strikes to make my point. So let me go to IWM. So if I go to 36 days out, and let's say I did IWM, the quotes are not coming through. Interesting. We just had them a second ago. Oh, there we go. They're back. Okay. So if I go to IWM, oh, hang on a second. Man, this is a mess. Hold on a second. What's going on with my... Hold on. I can't click on... Interesting. Huh. Okay, there we go. We got some quotes now. So if I go into... There was a little bit of a jam there in the old quote feed. If I go to Tesla, Tesla's fine. It doesn't matter. So if I do like an iron condor, so let's say I sell like a 395, 390, and then I do like a 495, 500. Okay, that's perfect. It's perfect. So if I do an iron condor, it's a fine strategy. There's nothing wrong with this, right? It's totally fine. I mean, it's not my favorite. I've been very clear about that. But it's a fine strategy, especially if you're learning, you've never played the market from a neutral standpoint. Like I got all that kind of stuff. 395, 390, 495, 500. Okay. Look at what I'm collecting. I'm collecting $1.93. Let's just call it $2 to make it simple. I'm collecting $2. I'm risking $3. Okay. If this trade works and I take it all the way to expiration, then what is my rock on this trade? I put up $300 and I risked I put up $300 to make $200. If I make the full $200, let's just leave management out of it to make this really simple. My rock on the trade would be 67%. That is astronomical. That is astronomical. And this is a great example of the point that I want to make, because that would lead you to believe, wow, this is a great trade and maybe I should just be doing this. And like, it would send you down that type of path. And again, iron condors are fine, especially if you're learning, but this is not a great trade. I would not classify this as being like a Stone Cold Steve Austin, like certified type of situation. Like it's an okay trade and it's great for learning purposes, but it's not nearly as strong as like a standard short put or even a short strangle, actually. In fact, that's even a better way to kind of conclude this example. If I go in here, this is a great question, Rodgenu. Thank you for bringing this up. If I do the iron condor, the rock is 67%. Okay, let me delete my wings and do the strangle. Okay, what's my rock now? Now I'm collecting about $20 and my buying power is $13,000. So I'm collecting, it's not quite 20, but just to make it simple, I'm collecting 2,000 and I'm putting up 13,000. So what is my rock now? It's 15%, right? So if you're looking at those two trades and you're actually only looking at rock, which nobody would do that, of course, but still, this makes my point. The iron condor looks to be a far superior trade. Now you could say, but Jim, maybe it is because of defined risk and all those kinds of things. Okay, that's fine. And that's kind of a separate discussion. But when I'm just looking at rock itself, it can be very misleading because it actually kind of downplays the effectiveness and the attractiveness of undefined risk strategies because you have to put up so much more capital. But in my opinion, those are way more effective and oftentimes way more attractive than the defined risk counterparts. And so great question there, Daniel. Hopefully that helps a little bit. And thank you there, my friend. And then let's see. Josh gave me one more. WH Wall said, can you give ideas for silver trades in SLV or the futures? Well, what is SLV doing? The volatility should be up, I would think, on a day like today. Let's see here. I don't know why, but my keyboard's not working. That's kind of weird. That could be a laptop issue. And so we're going to have to go with just a point and click. That's kind of weird. And so I can't help you there, WH Wall, because what's up with the laptop? All right. That's not great. I'll have to troubleshoot that when the show is over. But I mean, I would think if the IVR is high in SLV, wait a minute, there's another way we could do this. Hold on. Tasty default. There it is. SLV. Point and click. We're still doing it. Yeah, the IV rank is 48. I mean, you could just sell any type of premium in there, WH Wall. You could do short strangles, you could do short puts, you could do ratio spreads, you could do defined risk in there too. I mean, basically anything you want to do in there, I think would be fine. Because the IV rank is so high. So, but let's go ahead. Let me see here. Can I get somebody in here? Man, you guys, look at you guys, man. I appreciate you so much. So very much. Let's see. Wait a second. I see a surprise and delight in the middle. I see a surprise and actually near the end, and I've got to respond to this. So it's my boy Ash Finn near the end. Say, Dr. Jim, hear me out. Take that MES call, roll it out, and flip it to an in-the-money put. Treat that as more of a long-term hold. Now, long the market, so to speak. So you're saying, so if I'm understanding you correctly, you're saying to sell, so I have my short call in MES. You're saying to roll it out. Okay, I'm with you. But flip it over to an in-the-money short put, not an in-the-money long put. You're talking about in-the-money short put, I'm assuming, because you said long the market, so to speak. Not a chance. Not a chance I'm going to do that because you're flipping your cards over. Then all of a sudden now I'm buying highs and I'm selling lows. And don't get me wrong, I'm not very good at this. But even I know I don't really want to be buying highs and selling lows. And so in my opinion, that is not the move that I want to make here. I would rather get beat with my fastball than kind of say, all right, the fastball is not working. Let me go to this changeup that I just developed, 48 hours ago. And then that guy gets beaten to a pulp and just knocked out of the park over and over again. And so I'm not going to do that. And personally, I think that's oftentimes a mistake when you kind of flip your bias over, at what I would deem to be potentially one of the worst possible times. But I don't know what's going to happen. Like nobody knows what's going to happen. And so, all right, let's see here. Oh man, we're almost done with the show. Let me go back to the beginning. Man, you guys, look at this, man. I mean, the algo is going to be very, very confused. But I appreciate you guys so much. Org Daniel asking about the Rock. Thank you there, my friend. I appreciate you. Point B, good afternoon, Doc. NVIDIA is up 2.5% with Jensen Huang showing up to the China Summit uninvited, like a true options trader. That's right. Always finding a way to collect premium. Yeah, I guess there was kind of a fleet of CEOs that joined President Trump on the trip over to China. I think Elon Musk was over there. I think Tim Apple was over there. Jensen Huang was over there. And so, I don't really know why they went over there, but go for it, man. If you get a chance to ride on Air Force One, like you got to do it, I guess. So Wolf is in the house. Doc, what if we shock the muscle today and do something you covered on calculated risk? We sell an in-the-money put, maybe Netflix in the June or July cycle. Yeah, so Ash Fan was trying to get me to do that in a current position. Don't like that, but I do not mind it. And, my laptop. What is going on with my laptop? That's crazy. All right, so we'll go point and click. We'll go back to the watch list. Let's go to the trade page. Let's go to, what are you thinking here? There, Wolf. Netflix in the June or July? I kind of like it. So what if we do, let's just do that was actually, we did do that on calculated risk. It was a couple of weeks ago now. So definitely go back on the YouTube channel and give that guy a look if you haven't seen it the first time. Even if you have seen it the first time, go back and give it another look. And you don't have to watch it. Just have it play on your tab and go live your life, man. Have it play on like 3 tabs and go live your life. That would really help your boy out quite a bit. So I don't know, maybe we sell like a 90 put. And we were picking up a lot more delta, right? We're picking up 57 delta. Probability is still really high for all the reasons I mentioned in the calculated risk episode. So I'm not going to share them now because then you'd have no reason to go back and watch it. But yeah, you can look here. Maximum loss would be if Netflix goes to 0. I'm going to say that's relatively unlikely. Maximum profit is 4.25, which is nice. And buying power is only $1,700. So that's about 6%, between 5 and 6% of the account. And so I kind of like it there, Wolf. Let's do it. Let's go for it. So we'll get a little Netflix trade on. And again, I don't want to do too many trades before being out next week, but this is not something I'm super worried about. Famous last words, of course. But let's just give it a shot. So we got filled at 425. So there you go. Let's see. BBB Fine is here. Dr. Jim, you did an hour-long show. Man, I might because it's crazy that it's almost over. Like I've got 7 minutes left. That's crazy stuff. But thank you there, BBB Fine. I appreciate you. SC Golfer in for the B- humor and to support the algo. Man, I'd like to book some winners. You just gotta play it to the upside, man. Don't overthink this, right? If you can't beat them, join them. Now I'm not gonna do that, but you can do that. And Ash Finn can do that. Go for it. You guys might be right. Like we'll see it NASDAQ 30,000. We'll see it, S&P 500 8,000. Like I understand, I got it, but I don't know, man. Maybe we do kind of head back down a little bit lower in the coming days. But let's see. Lors is in for the algo. My man, Lors, I appreciate you. Point B. B- in class. A+ in life, you demand, Dr. J, man. I don't know about that. I think I'm B- pretty much across the board. But thank you guys so much. RML, the man, the myth, the legend, Dr. J, man, I appreciate you. Sam L. Doc, we hit another level with the bloop. Yeah, I forgot about that. The bloop technical analysis sound effects. You're definitely the best part of the day. The joy and the knowledge you bring us is priceless. Truly one of the most underappreciated legends out there, man. Look at you. I'm going to send you that cash we talked about for you planting both of those comments in the stream at this time. So be on the lookout for that. But yeah, the bloop technical analysis. I mean, I'm not going to do that too often because it's too advanced, right? I want to appeal to the beginner traders. I want the new people that come in. I don't want to lose them in a sea of confusion. And so we'll mix in the bloops here and there when it makes sense, but it's not going to be a regular thing because it's just a little too complex. And so point B, thoughts on setting up a bearish position on APLD. Oh man, I might not be able to do it because it's not on the watch list, is it? I keep going to my keyboard, assuming it would work. How crazy is that of me? But nothing works on my keyboard. Like that's the craziest thing. And so I hope it'll work when I like restart my computer or something. But so I can't do that there, point B. Same up. PPP came in super hot and this market still refuses to go down. Nothing can take this thing out, but I guess it's all made up anyway. It is all made up. Not necessarily the market, but PPPI, kind of like BBB fine. It's the same thing, man. It's all imaginary. And by imaginary, I mean inflation is coming back 100%, but the market doesn't care. Samuel, algo update system confirms Doc remains the strongest indicator on the chart. Knowledge elite, entertainment elite, bloop technology unmatched. Yeah, the bloop analysis, like I said, sparingly, because we don't want to scare the children. So Griffin Jones, CL, closing some legs of 7150 strangles, got tiny with just one put and 3 calls. GTC orders in, 50% or 21 DTE close, watching risk. There you go. I know you've been trading those CL options for a while now, and that's awesome stuff, man. Like, that is really, really awesome stuff. Ash Finn is here. I caught you later, though, my friend. And so good luck. If you're going to do something like that, man, like, obviously it's all in good fun. I don't like it myself because you are flipping over, and I prefer to be, when things are up, I want to be bearish, and when things are down, I want to be bullish. I actually talked about that on the calculated risk that I recorded, because I'm recording some extra ones too for when I'm gone. And so I think this is the one that's going to air tomorrow, though. When you see the blue shirt, like, you'll know. But I actually talked about negative gamma, and I talked about what negative gamma means, because it can be really confusing. Now, gamma in and of itself is confusing, but negative gamma, especially with short options, can be very confusing because it makes you naturally contrarian. Like, excuse me, when the market rallies up, you naturally become bearish. When the market goes down, you naturally become bullish. And so that kind of fits more with my thinking, as opposed to, the market's never going down again, and this time is different, and I'm just gonna run it to the top. Oh, iPod Touch is back. iPod Touch is here. Sell it all, man. There it is. My man is back. And so iPod Touch, I need an official prediction for the next event horizon, and I would appreciate something within the next 72 hours. And so if you could put that in the chat, that would be great for all of us. So iPod Touch is back. Man, look at that. Samuel, the algo is running simulations, best outcome. Listen to the doc, but verify emotionally. You got to verify multiple ways. I mean, I would be in ChatGPT, I'd be in Claude, even grab a little Gemini and make sure that it all makes sense. Point B, Trump lands in Beijing and Chinese stocks immediately ripped. Even China knows a deal is better than tariffs. That's true. Let's see. Patrick Maslanka. Talking about some John Wayne. Okay. That's a little bit before my time, but I appreciate it. Superstar Dr. J, I have made so much money betting against you. I am getting concerned that you may come after my profits, saying you are entitled to half. No. They are all yours. They are all yours, my friend. It is my gift. It is my gift from me to you. And so thank you for being a part of the show. And I'm trying to find more ways to make your journey to financial independence easier. And I'm not sure we can get any better than just doing the opposite of all my trades. And so that is something you can take it to the bank, man. It's safer than a UST bill with better returns. And so you are welcome there, Superstar. I am not coming to get any of it. It's all yours. Clean Tiger's in the house. What's going on there, Clean Tiger? Sergio's here. WH Wall is here. DMZ is here. Daniel from Argentina. Great show, man. I appreciate you. Thanks so much. Brian Rakuten is here. Word is up. Sebastian, nice shirt, Dr. J. This is one of the go-tos. I mean, you can go back. I've had this shirt for like 15 or 20 years. And so you go back to like the early tapes. Like even like the picture they had for my show, I think I'm wearing this shirt. In fact, I'm pretty sure that I am. And so I've had this guy for a while. But again, you got to dance with Ubrangi, man. That's just the way it is. And so, Ordenu's here. iPod Touch. Well, we got them right where we want them, Dr. Jim. That's why I like to hear iPod Touch. That is what I like to hear. Let's see. Sebastian, but the Dow is not over 50,000. Is it not? No, it's not. It's a couple hundred points off. And so the boomers got to get their act together, which is not good for them because they typically shut it down in a given week right around Wednesday afternoon. So we'll check in with them on Monday when they get back on the job site. But yeah, 50,000, not going to happen this week. And so BDH is here. What's up there, BDH? Dr. Jim and his Wednesday algo. Man, my man. CA Paris is here. Theoretically, practically, I see what you did there. I can't remember myself, but thank you there, CA Paris. E-Media is here. Hey, Dr. Jim. I'm here if I got to run to Costco to get some goodies. Yeah, nice move on your part. That's an uptick for sure. I mean, you can stay for the show, but going to Costco for some samples and you're probably not fighting the crowds? Man, that's a power move on your part for sure. And so let's see. I see Griffin Jones is here. Man, I'm just about out of time, though. I'm out of time. Man, I see Ashman with a ZB trade. Try to remind me tomorrow, Ash. We'll take a look at that because I'm just about out of time. But I see the Preston is here. Jared Kramer's here. Man, all you guys are here. I appreciate you guys. I appreciate you guys so much, but I got to run, man. I got to go. I got to get you guys over to Tim Knight. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade. Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hello out there, Tim Knight, and we are here to look at the wonderful world of charting. Once again, we have lifetime highs, and I'm completely short, and I'm still up for the day. Isn't that weird? It's not that weird. You know why? Most stocks are falling. Isn't that crazy? It's just, whoever got a seat on the president's plane, those companies are flying higher. But the rot under the surface is there. Brown shoots, let's call them. Remember the green shoots back in March of 2009? And stock's been battered for a couple of years, if you can believe that. I know younger folks, it seems impossible, but it was a real bear market. The last one we've had, by the way. It's been 18 years since we've had a real bear market. But there were the green shoots. And wouldn't you love to go back to March 2009 and buy stocks at those prices? Well, the brown shoots are here. And I would say, you're really going to let me sell short at these prices? Thank you very much. That's lovely. I appreciate it. these prices just get better every day. More shortable, at least. My entire options portfolio is profitable. God bless it. And I also often say, in lots of time on those instruments, I will also say, thank goodness I had the good sense to get out of my SMH puts yesterday. A rare feat of great timing, 120% profit overnight. It wouldn't be so if I just crossed my arms and held on until now. So that worked out. Tech stocks, of course, are leading the way higher. And yeah, it is just madness out there. People falling all over themselves to bid things to the stratosphere. But I don't think there's any bears left besides me. But I'm doing all right, in case you've been laying awake at night wondering. And I just intend to keep shorting. The higher it goes, the bloodier my teeth are going to get. So let's jump in and see what's out there, what's cooking. And we'll start off with Bitcoin. Yeah. And Bitcoin has finally done what I've been wanting it to do for a while, which is break its trend line. We're below the psychologically important $80,000 level now. As I've said, my target on this is like 35,000. But it's been frustrating for about a week. It's just been grinding around 80, 81, 80, 82, 81, 80. But finally, we're starting to crack today. Now, I will note, even though I tend to be a purist when it comes to charting and close my eyes to everything going on around me except for the chart, there is a lot of chatter about this so-called Clarity Act. I think there should be a rule that whatever the title of a bill in Congress is, just assume the opposite is going to be true. But the Clarity Act is the government's gift to the crypto industry. And I guess they're voting on it tomorrow. But there's a lot of excitement around that. And I don't know what's going to happen with that vote. I don't know what the reaction will be based on the vote or any of that stuff. What I do know is that Bitcoin, for whatever reason, has cracked. The futures are down about 1.7%. In cash terms, it's about $1,400. But from the charting perspective, we have finally, we cracked the trend line yesterday by a few pennies, and then it rallied again. But we're honest to goodness cracked now. And so that's a step in the right direction. So yay. I think Bitcoin is an important harbinger of asset prices to come, and let's keep an eye on that. But so far, so good. It's not all wine and roses. I did take a couple of hits, but not nasty enough to subjugate the things that are going well. I got out of my FXI short early today when it basically had a bullish engulfing pattern. And so got it at a loss, although a much smaller loss than I would have if I didn't do anything. So that's what stops are for, right? So out of FXI, also took profits because this was an older position on EFA. So in fact, I think now in terms of ETFs, I don't think I have any domestic ETF shorts at all. Maybe I'm wrong, but by and large, it's just a bunch of weird little stocks. I'll also note that some weird little stocks that I've offered as short ideas are really getting hit hard, and sadly, I'm not in them. A couple that spring to mind: DT, Dynatrace. It's down, I think, 14% today alone, and Wix, WIX, which is Wix.com, down about 25%. I look at a lot of charts, as you can imagine, every day, and I saw those and just smacked my hand to my forehead because those are definitely items that looked good on the short side, although much smaller, much more volatile, but definitely moving as God intended. So yeah, anyway, little distraction there. But there's plenty of strength out there. Strength begets strength on the whole. Just a few analog devices. ADI up over 3%. Cisco, there's a grand old man of the Silicon Valley. Cisco up 1.4%, another lifetime high. Pretty much lifetime highs across the board, wherever you look. eBay, another classic. I remember my roommate in college worked side by side with Pierre Omidyar before he founded eBay. And he told me one day that he saw Pierre working on some new site. It's like, what are you doing? It's like, My girlfriend wants to sell some Pez dispensers, and that was kind of the very beginnings of the eBay origin story back in, I guess, 95. I think they went public somewhere around there, or maybe that's when they were founded. But eBay is one of the few, kind of like Amazon, not just survivors but thrivers of the first internet. Of course, they're well regarded these days as being subject of a GameStop acquisition target. But eBay is having another good day, up almost 3%. I still never figured out where the name came from. It's a weird one. Here's EXEL, which is EXLIX. Oh, I can pronounce that. Just EXEL, 4 letters. This is up 3.6%. Just a lot of strength out there in tech land. JBL. This, of course, is semiconductor related, up about 2.25%. So a lot of strength out there. And of course, the outside strength is going to be in the realm of semiconductors. So here we have AMD, but they're looking pretty tired, some of them. AMD is up, yes, but by, just clicked down. It's down 0.03%. So like I say, kind of weary. If you look at today and yesterday and the day before, it's just been kind of grinding around there, near lifetime highs. How much more inspiration can it take from hyperscalers will just buy infinite number of chips? People are kind of like, that's yesterday's news. AXTI also looking a little bit on the tired side, down 1.3%. And as with AMD, yes, right near lifetime highs, but struggling a little bit at these levels, even with the incur of hundreds of points again, and approaching 30,000 on the futures. Remember back in the internet bubble, the big round number was 5,000. How times have changed. Sienna, another good example of one of those bottle rocket vertical stocks that seems to do nothing but go up. It is up, not quite 1%. As you come back up here, you can see that it used to be kind of a normal stock, and then it went berserk over the past year. Many issues have gone up hundreds, even thousands, sometimes even tens of thousands of percent. But as I said, there is here and there are some nice, crumbly, dry brown shoots that can be discovered. Here's a DT, which is down 12.2%. Kind of a sloppy pattern, but it worked out nonetheless. We have Floor and Decor. Remember this one? FND. I imagine the narrative behind such a drop is that anything to do with home building, whether it's Home Depot or Lennar, one of my options put positions, anything to do with home building is weakening in the face of rising interest rates. Interest rates are going up. I mean, I didn't even mention the PPI numbers this morning. Did you see those? PPI annualized 16.8%. Did you hear inflation's dead? Doesn't sound that way. And these are government numbers, by the way. These aren't just like raw unvarnished. This is like from the government that has every reason to minimize these. 16.8% annualized. Eye-popping. Market doesn't seem to care, except for bonds. We'll get to that in a second. So it's not good for the home building sector. And we're seeing that expressed with Floor and Decor, which is down about 5%. Birkenstock, there's a change. BIRK, this is a relatively young stock. This is the entire history here. Lifetime low, down over 13%. And this is, I guess, a good example of not necessarily, some people are like, oh, I like Birkenstocks. I have a lot of those. I think I'll buy some. That's not how you make a decision like that. Yes, it's a well-known name. Everybody's heard of it, but it doesn't mean anything. The stock has had a wretched time going from 65 down to about half that level. Carvana, CVNA, down over 5%. Started to, and this one, I guess a couple of weeks back, they had that crazy overnight session where it just exploded higher. And then for reasons I cannot fathom before the open, it had completely erased it and had fallen. And it seems to be complying with that quite nicely, as you can see on the whole, red bars day after day. Here's our old friend, Infosys. INFY, the gift that keeps on giving. I think in percentage terms, this is the best performer, not amongst my short positions, but INFY down 2.12%. And you can see as we back way away here, this monster of a pattern. This always bugs me, but I can't do anything about it. SLM. This is SLM Corporation, I think back in the day called Sally Mae. And this is another one of those. I've got 30 shorts right now. I'm about to bump that up to 35 when I say goodbye, because I've got a few more I'm going to put in there. But SLM is down about 3.6%. Again, I suppose related to general weakness in the home building sector. Pinterest, PINS. There's a lot of these sort of like third tier social media companies like, Snap is another one. But this one had a huge rally a couple of weeks back on earnings. It opened very, very strong. But when you know it, just below the topping pattern. How about that? And it hit that as resistance and then turned south. So this is down 4.35%. Hang in there, just a few more. It's a short fest. Palantir, PLTR, down 4.33%. Not a bad looking pattern at the top there. Pretty clean head and very clean head and shoulders pattern. The retrace was a little bit strong. It did push into that pattern to some degree, but it's well below it now. And this is still a very, 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 very richly valued company. So I think it's got plenty to go. I also, in the aforementioned options portfolio, got puts in a couple of energy companies. And again, not overthinking this. It's like, oh, well, we're in a war and there's Iran and oil might go up. No, just look at the chart. And so I bought puts in Halliburton, HAL, which is down 1.29%. And also Schlumberger, which is off just a little, 0.15%. But these seemed ready to curl lower to me. As I mentioned yesterday, I dumped my DIA puts and in exchange for that established a new anchor position in bonds, TLT. I think bonds have plenty more to go. I think it's going to be a key trade in the months ahead. And so far, so good. And it's not a dramatic mover, but it's moved down a little bit more, about 0.25% on TLT. And so I've got puts on that. And in a couple of accounts, I'm long TBT, which is the ultra short. And that's having another good day as well. Got this yesterday. So nice day yesterday and then another one today. Anyway, a couple of days left this week. We've got the China summit going on. We've got jobs report. I think, is that true? I forget. Probably not. I think we just had that. Never mind. China. Okay, that's where all the exaltation is, and the Clarity Act that I mentioned. So we'll see what that does. But I shall leave you with lifetime highs on your screen, and hope you're doing all right in this very interesting market we've got. And I will see you here tomorrow. Good night.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Favorite
it!
color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game.
Oh, here
I'll get in this man's game.
Yes.
5 mil.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, my friend, we are back for the last call. And what do you know it? We are back, or past all-time highs, I should say. E-mini S&P 500 futures up 50 on the session here. Skosh off of the high of the session, which was 74.83, about 8 or 9 handles higher from here. You got the NASDAQ up 350. You got the Dow actually down 60, and the Russell up 6. The Russell up, despite what we're seeing in bonds. Bonds at the lows or near the lows of the session here, 112.03. You got oil coming off the highs here, 97.05 right now. It did get into the 99 handle, 100 in the M contract, which expires at the end of this week. Volatility futures upticking a little bit, 2078. You have the VIX itself, though, at 1782. Gold and silver have both had a little bit of a weird move here. Gold's up $6 on the day, so it's up a little bit, but has not performed like silver has. Silver up to 88 and change here. It's up like, $10 in the last 2 weeks or so. And Bitcoin below 80,000. It's not the flavor of the day here. Anything stand out to you, or is it just more of the same?
Things related to electric vehicles are doing really well today. That's kind of a surprise. NIO's up 7%.
Sure.
Rivian's up near 4%. Lucid's up 9%. Ford itself is up 15%. That's cool. But yeah, it's all about the semiconductors, Dick. Micron is 13% off of yesterday's lows.
The moves are amazing. They're incredible.
Absolutely incredible. But the structure of the market remains intact, Nick, from a technical perspective. I've been talking about this 1 week moving average since I've been turning blue in the face here. So blue, the background changed from green to blue, and it's sticking up. So as long as we get a market that's following momentum, low volume, low volatility, we stick on and we continue to ride this ridiculous thing higher.
All right, 1 week moving average. I got to add that one.
5 days.
5. Oh yeah,
That's it.
5 trading days. Okay.
But it's been good as gold for the NASDAQ and the S&P. And when it breaks, it's probably going to break hard. But until it happens,
I've gone ahead and added it. Here we go. I got the 5, the 20, the 50, the 200, all the averages. One of them has to work. Right? I mean, you can't be wrong on all 4. Something's got to work here.
something somewhere along the way will work, technically speaking. Throw a few more on there for goodness sake. If there's something to be said about this market today, which is a negative about it, there's not much participation right now.
Sure.
It's still semiconductors. It's still new tech, if you want to call it that. More components of the S&P 500, I think over 314 right now are down today. So Mag 7 and AI, that's the whole story.
100%. And I think that's been the story for quite some time. I saw that same stat. I think it was higher earlier in the day when we weren't up, 50
here, flirting with 7,500. Earlier in the day, I think it was something like 390 of the 500 components. So a couple of those, I think, were probably on the dance floor and at least rallying now. But to your point, it's totally been about these semiconductors. Even if I pull up the S&P 100 list, I mean, you have MU, obviously, Texas Instruments. You have Google in there, which I guess I'll batch in there. LRCX, NVIDIA having a really strong session here. New highs there. Even like Meta catching up. You have Oracle was at 200 the other day. It's been pretty broad-based across the board on any of these stocks. Nothing about yesterday shook you out at all. I mean, if from my vantage point, which was at the pool with my piggy toes in the water, just kind of splish splashing around in Arizona, it felt like it was just kind of like a, short-term weekend type move. I mean, everything was down. You look at like an AMAT, LRCX, down $20. That's pretty short-term, liquidation. That doesn't scream anything more than that, especially with volatility, where volatility was basically unchanged the entire session. It kind of told me that it was like, this isn't done. This isn't top.
The key tell during the day yesterday was when the VIX flipped red while stocks were still down. No, Nick, I was on with your dad and Ryan yesterday on Let Me Explain, and I was laying out this 5 EMA argument again, the 1 week moving average argument again, and saying when it gets down below there, you got to dip your toe in the water, because if the trend is going to continue, then the characteristics of the trend should remain in place, which is to say that the 5-day moving average would hold up. Mm-hmm. So yesterday morning went in for the 74.50, 7,500 call spreads that expire on Friday.
Ooh.
Been a quick little bounce here as I continue to step out of my shoes, becoming a little bit more of a scalper here as I play catch up.
I like it.
Like I missed out. But, I'm also looking at the market that if we are in what's a historic bull market right now, then everything is kind of in place from a trading perspective, especially this time of the year. Mm-hmm. And I'm not going to be the person to do too much thinking about it. So short term, as long as the 5 EMA holds, you get pullbacks to it. My play is looking 2 or 3 days out, buying, an out of the money call spread that's maybe 50, 100 points higher than current price. Mm. And if we're going to continue to ride the rails of this silly little rally, then it should pan out. And at some point in time, when you get these momentum trades, one of them in the chain is going to break and you're going to be wrong, but hopefully you can squeeze enough out enough times where that final one, when you get blown up, doesn't really matter.
So you have Trump with his brigade of billionaire and trillionaires on their way to China. This has to be something good, right? You don't bring all those people to not pump tech-related stocks in the near term. Do you have thoughts on that? It's kind of where I'm
very much with you. I would almost encourage people to go to our YouTube page and watch yesterday's Signal versus Noise episode, where there was some unusual options activity in Baidu and PDD. Nick, what are the odds? What are the odds?
That's fine. That's one thing. And those stocks have had an absolutely unbelievable move today. Baba had earnings this morning. I don't know anything about the earnings, nor do I believe any of the numbers that they put out. But the stock was down at like 130 and just face ripped back to basically the highs here. I do think it's interesting in the because the Iran situation has kind of been I think that's been put to bed here for the most part from a market perspective. But the China situation is interesting because, bringing the tech leaders there, you have all sorts of noise around data center build out. Is it being built out? Do we have the power? Can we even get the power? Is our infrastructure powerful enough for the power? When you start involving China, there's a lot of things. There's a lot of news headlines that could come out that would be, propel this thing a little bit higher.
I mean, absolutely. I mean, if we get any easing of export restrictions around the trip, that would be interesting. I found it really fascinating yesterday going into the close in the final 90 minutes. We had, more than $200 million in net premium put selling in Micron. And sure enough, just sniffing around. Micron is one of the companies that's on the export control list right now. So imagine what happens if, Trump goes over there and sees a Samsung labor strike and can strike a deal with China for Micron to get a foothold in that market. Micron's going to have a little bit of runway here as Samsung struggles. You're looking for the headlines, Nick. The table's set. If it was just Trump and Melania going over there, it'd be one thing.
Yeah.
But Melania's not going over there. It's Trump with all of these business leaders. And you have to think that the business leaders aren't just going over there to be token, symbols of what the American economy can do. They're actually there to strike deals and to get something done. So I think the market I think you're right. We're looking for something coming out of this China trip.
I think so too. And I will say, on the point of Micron and the put selling and the call buying and all this stuff, there is kind of a dynamic here that's at play, which is just the sheer size of the moves that you're seeing, the gamma exposure, the volatility mainly here. You also have to think about it from the perspective of a large participant. Would you rather buy shares of stock at 800 here with, let's say, 100 points of upside or potential downside in the next 2 days, which is roughly what the expected move is? The expected move is 50 points. So 50 points over the next 2 days. Or would you go out and sell the 600 strike puts or whatever strike puts in June at $20, essentially gives you your 2-day upside, kind of there with a fraction of the downside risk, and you have the vol component where you're short that volatility into the downside move, which typically with something like this that has such high implied volatility, such high call skew, into a downside move, those puts don't move. So you basically take out that 100 points of downside risk. You don't have the asymmetry to the upside, but if you pair that with long calls or call spreads, you have some convexity to it without the same sort of downside risk. I think you can think about the calls as well on that front. I see all sorts of tweets, somebody buying, 2,000 contracts of the 1,500 calls or whatever number. It doesn't matter the number. That's not a play on the stock getting there in 30 days. It's a play on the stock going up $30 or $40 and the gamma on that option increasing significantly, increasing the delta as well of that option, and that option doubling just via increase in volatility, increase in price, increase in notional of the shares. All those things are dynamics that happen in the market, in the option market that, get skewed a little bit when you see these fancy tweets. I agree there's some that, you question, but for the most part, it's a strategic thing. I would do it if I had millions and millions of dollars to throw around. That's the sort of stuff that you have the flexibility to do.
I'm glad you brought that up. Our focus on today's signal versus noise, which is going to be up on the YouTube channel soon, was about the Micron trades and the institutional angle of it all, Nick, because you're not seeing that type of size moved around from, speculators, if you will. There's a reason why the numbers are that big.
But CNBC will blame the retail speculators, those no good degenerates out there, with their one lots, not the 1,000 contract hedge fund, that's
not
doing,
just one lots.
That's doing.
They gave us fractional shares too, Nick. We're eating real good around here.
That's right. Speaking of, the shackles are finally coming off. June 4th will be the end of PDT for all the peeps out there waiting for that. That'll be a nice feather in our cap, a win for the retail trader. It'll be great. Nothing you have to do on your end. It'll be all retroactive. So if you're in PDT right now, it'll go away. It'll be done. It's going to be great. Wonderful.
Good.
Metals, Mr. Vecchio, the gold silver ratio. I am long the ratio, which means I'm short silver, long gold. The ratio is at 53.40-ish right now. I got in around 44.10-ish. So I'm out about $600 ish on this ratio. Are you interested in metals, specifically silver or both?
Not in gold right now. Gold, the chart doesn't look good to me. Silver, on the other hand, yes. Last week we were looking for trades on Futures Power Hour for this. Couldn't find anything in silver futures that lined up with the expiration cycle that we were seeking. But we did find some stuff in SLV. And so we've caught this recent breakout here as silver's moved up towards $88, $89. Likewise in copper as well. We've had some long deltas going there too, thanks to Mr. Westwater. Copper just ran into its January high, so seeing a little bit of a pullback. If you've been in the HDN6 contract, you've been kind of trapped here maybe for a few weeks, few months.
Yeah.
And you may have used this as an opportunity to get out. There are a few short-term dynamics that are at play in the market right now, which Westwater has likewise flagged. China has banned the export of sulfuric acid, for example, which if you are trying to liberate copper from its ore, you need. And so just one of the knock-on effects of the Iran war is that some of the input processes for actually getting these metals out of the ground and usable, it just can't happen. Speaking of that Iran war, Nick, what's going on in Chile and Peru, where you have some major mines, there's not enough fuel to operate the mines right now. So there's a short-term supply squeeze going on. That is a knock-on effect. $7, $8 copper futures. I'm not ruling it out. I'm playing both long. I'm going to continue to trade these to the upside. But Nick, it's good to be back in the metals after taking a little sabbatical here after getting burned in January.
Well, you didn't give me the news I wanted, which was that you were bullish on gold, because I need some help there. Trading the ratio.
I don't even think about gold.
Don't even think about it. What do you do in copper? What are you call spread? Are you selling put spreads?
So right now on the platform here, I have the short put spread that's been put on. I'm looking for a little bit of a give back here because first off, copper volatility is rather low given where we've seen metals volatility and overall copper volatility over the past 52 weeks, grand scheme of things. So the technical pattern, maybe it's looking for a move up to $7 a pound, maybe $8. Long out of the money call spreads to take advantage of the cheap vol on a long enough duration window, maybe 3 months out, as opposed to a typical 45. That intrigues me right now. I need to get filled first, which is one of the problems that I've had in the copper futures. There's not a lot of activity in the strikes and the duration cycles I'm looking. So maybe it's CPER. Maybe I do something with like FCX instead as an imperfect type of corollary to it. But there are these dynamics at play, which short term, copper is a commodity. It's going to eat its own tail at some point. And these labor issues that you're having in Panama, some of the mines that haven't opened up across the world, they're going to start opening again in a few months. So this is a window here. It's a trade. It's not an investment we're getting married to.
Yeah, I got to add copper to my watch list for my metals because I've traded it sparingly, and they have the micro copper, which is MHG, which is a little bit smaller and relatively liquid that you could trade if you wanted static delta. But that is an interesting chart. My next question for you is CPI hot, PPI hot. Everything's hot. Inflation hot. Markets hot. Bonds getting killed here. Rates high or at the highs of what they've been trading. Are we near 5%? Close?
We got to 5% in the 30-year auction today. Both on the weighted average and on the coupon. The last time that we did that was August 2007.
Big deal, little deal, no deal. That's my question.
I don't know. It feels like that should be a big deal because in August 2007, if I recall correctly, that was when we had a big quant blow up.
Okay.
And it came on the other side of the rates kind of went crazy. And then you had a lot of quant funds that were focused on rates. They went belly up. And then you had that's when the VIX started bursting higher. But that was so long. It was 20 years ago, Nick.
Is that why you think volatility is a little higher on the session today?
After the bond auction, you can draw a line in the sand at 1 Eastern and vol starts to just generally creep up across the board there. So just, a few years back when the 2-year yield got to 5%, it rang the market's bell. It worried everyone. If you start getting more and more of the yield curve that creeps up to 5%, it doesn't derail the AI story, but it does make people pause and go, I can get 5% of the 10s. Why take the risk in stocks?
Okay. All right. Russell doesn't care about that. The Russell, it's off a little bit, or it's off from the highs here. It's up about a point, but near the high end of its trading. You do have a couple earnings after the close if you are so interested. Cisco reports earnings 5 minutes after the close. It's hovering right around 100. It's been there pretty much all session, near the highs that it's been at here. We did a iron fly on what's your assumption this morning. You also have USAR, which is U.S. rare earths. That is added to the government portfolio, so watch out for that one. MP did not have the stellar move I was expecting to the upside as a fellow government portfolio stock. Do you consider now the $1 trillion flight that is on it, that is in China right now? Do you consider those stocks part of the basket, the government basket now?
Yeah, you have to.
Tesla, Nvidia, MU, Qualcomm.
CEO of Tesla, the guy who ran a government agency.
Yes,
I think that they might be.
Yeah, but they had their fights. I mean, there was the pedo call out. You know, there's all sorts of stuff.
Nick, it's a big party, and we're not invited.
Very true.
George Carlin, this is the government basket. You know.
Yeah.
What can we do? Can we do a Chris Nick AI LLC quickly get listed? Is that allowed? Are we allowed to do that here?
Why not?
No.
Compliance
is telling me we're not. Compliance is telling me we're not allowed to do that.
Yeah, no. Going back to a Tomism, anything you create here is mine.
Oh, right.
So yes, anything we do,
it's actually still Tom's. Believe it or not.
Probably still. Some would consider it.
Yeah.
Is there anything that we're missing, or that is the next thing to go parabolic? Is there anything that interests you that's not quite on the radar right now?
It's a good question. You know, there's so much that hasn't gone up vertically, but in large part, it's everything that's not AI related. I know that, Ilya and I are going to hash this out in a few minutes' time. He's going to talk about RSP and QQEW being lower on the day.
Yeah.
QQEW has turned positive here. It's up by 0.3%, but that's not the NASDAQ 1.2. Equal weighted NASDAQ has not cleared out new all-time highs since October of last year, right? Whereas the Mag 7 are doing so today. It's that concentration that probably spooks people the most. So where would the next bottleneck be? I suppose that's the question traders should be asking themselves, because the bottleneck last year was in the GPUs. And then we had the DeepSeek Monday where maybe it's not a bottleneck in the GPUs. We can train these models with much less. That was all nonsense. Okay. It was just a single training run that cost that $5 or $6 million, not the entire build out of the model. But as we've learned, when we had the DeepSeek news recently, did that produce any sort of negative reaction in NVIDIA? No, because that's no longer the linchpin of the market. It's moved to memory. So continuing to look for these linchpins. Where will the next bottleneck be if memory gets solved? Is it in energy? Utilities went crazy last year at various points in time, and they've calmed down.
XOU has done nothing all year.
Nothing. So if the AI trade keeps going, where will it trickle into next? And when it was raging at points in 23 and 24, some of those utility names had a little bit of a tailwind to them. So I think maybe that's the next point. Transmission, energy. Where's the bottleneck in the grid to help deliver the actual power supply necessary to bring about this great future? So we all can send each other, instant memes of, Jalen Brunson dunking on Mitch Robinson on top of Joel Embiid here, which I just have Nick Sixers on the mind still. Sorry.
I will say bottleneck is the new transitory.
Is it?
You can't read or see or hear anything without the word bottleneck being used. It's a bottleneck. It's a bottleneck. Optical.
We've been using it around
bottleneck.
These parts for years.
Yeah.
It's in the slides on futures. Go back and check the tapes from last year and the year before. We've been talking about this.
No, I know. I wasn't throwing shade at you. I was just saying that is buzzy now. Bottleneck. The bottleneck.
It's public.
It's public. It is public.
Mm.
E-mini S&P 500 futures up 42 right now. We're crashing actually from the highs here, down 10 from the highs of the session. NASDAQ up 300 here. You got the Dow down to 80, the Russell up 2. It's every day. How many down days have we had since like the middle of April? 4? I mean, yesterday I consider a green day.
1, 2, 3, 4, 5, 6, 7.
Oh, that includes
7 if you don't include yesterday. 8 if you include yesterday as a red day because in the NASDAQ.
In the NASDAQ it was, yes, but
and SPX. Okay, so 7 days since the end of March.
Got people in the chat saying, "What is a down day?" It's true. It's
Bring
true.
that energy to overtime.
There
please.
you go. Torment Ilya. E-minis up 43.
Help educate. Oh, I love this part of the bull cycle, Nick, where it's like, chat, let's gang up on the bear.
No, you can't do that, okay? You know,
that means we're close to the top. Just means we're close to the top.
Yeah, you can't do that yet.
Not yet. Soon. S&P 8,000. Then we can do that.
When do you think that happens? Is that for the buy through July stretch? You got people calling for that now too, which should scare you.
Yes. I think it was it Deutsche Bank today and Citigroup, I think, or Bank of America, some American bank and Deutsche Bank. They both upgraded their year-end S&P 500 forecasts to around 7,900.
Mm-hmm.
So they're saying earnings growth is going to be around 16 or 17% the rest of the way, which is a reminder we just came off of 27% earnings growth. So higher bar than usual for sure at 16%. But if we get 16, 17, 20, then Nick, this year so far, valuations have dragged down the S&P 500's return as of the close yesterday by 3.7%. Valuations, this is not a bubble is a market that's going up when you're not long, as people like to say.
Mm-hmm.
Valuations are not blowing out right now market-wide. It's select pockets. It's not even the Mag 7. Mag 7's at a new all-time high for the ETF. The valuations, the forward PE ratio is lower today than when it hit its original peak back in October by about 4 points. So the money's there to substantiate this.
It's good to see though some of those stocks. I mean, Meta up 14 and change. Amazon has been strong today, but was down 3 or 4 on the session. Nvidia, which was just in a correction last week, it was down like 10% from all-time highs. That's a correction, right? When that's bouncing all the way back, this is good to see.
What's the problem?
I agree with that. And on that note,
not enough.
E-minis closing right here, 74.70 up 43. Got the NASDAQ up 300, 29.50-ish is what we're sitting at here. Volatility futures at the high of the session, 2091, and oil down at 97 and change here, low of the session. Another interesting day. We're going to take a quick little 90-second break and come back with more Tasty Live. You got Chris and Ilya next for overtime. You're listening to Tasty Live. We'll see you tomorrow.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
some things that we know. We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
DPI comes in hot. There's a lot of inflation coming. Stocks just really don't care. It's Wednesday, May 13th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down this trading day. A trading day that in the early hours, Ilya, was defined by a market that got spooked by the PPI report. Energy accounted for roughly 25% of the full increase, which was much hotter than expected. Annualized producer prices are up over 5% right now. And then we make our way through the session, and those Europeans, they close their doors, and U.S. traders can get back to what we actually care about. Who gives a darn about prices going up 5% year over year at the factory gate when we have the AI story right here at our fingertips? Micron up more than 13% from yesterday's lows, Ilya. NVIDIA up at an all-time high. The NASDAQ up at an all-time high. There is an increasing disconnect that may be growing between stocks and the rest of the market, with President Trump over in China meeting with Xi Jinping. We still have the Iran headlines to worry about. Josh, we can go to the slides or go to the charts here. NVIDIA up at 225 right now, just as a case in point. Semiconductors themselves, SMH rebounding here today. We can go to the charts, maybe. Up at 572.46, like yesterday, holding above its 1 week moving average, which is becoming a consistent theme around my charts, at least here, Ilya. S&P and NASDAQ, they have their good days up at new all-time highs. The Russell, the Dow, not quite there. And that probably speaks more to your concern about the lack of breadth with, I've got to double check the numbers again, but I think 365 S&P 500 stocks closed in the red today. Not fantastic. Oil doesn't do
and another low volume day, the lowest since about just over a week. And all the volume spikes recently, past 2 weeks, are all down days. All two of them.
All two of them. 96.81 here in CL. N6 on the mark closed 97.20 here after hours. There's still Iran headlines, obviously, driving the market, but we do see silver continuing to extend its gains, copper extending its gains, gold's a bit of a dud right now. Other than that, Ilya, the dollar gets somewhat of a bounce back. Not much. The Australian dollar continues to run with commodities, but we'll talk about that.
Take a look at that euro.
We will get there. Let's talk about the market's reaction, though, to what happened with the PPI report through the lens of bonds here, though, because rates are going up. And there's clearly a lot of inflation in the pipeline. And we've seen diesel prices go up. And we had their crop reports this week with wheat prices surging here because of the low crop yields that are now expected. So you can see from a mile away the food inflation that's going to be arriving by Thanksgiving.
Sure.
The bonds are the clearest expression of this view right now. You know, oil can move around and stay range bound around 95 or 100, and bonds have a different set of circumstances that they're contending with. The CPI, the PPI report have informed us on that. What is that information the bond market the past few days has been so disgusted by?
Well, I mean, if you look at what's going on here, it's a very simple kind of calculus. You have to ask yourself a very kind of straightforward question. 68% of the economy is consumption. 14% of the economy is non-residential investment. In the first quarter, we had something of a unicorn phenomenon, where that little 14% component added more to GDP than did consumption, which actually slowed for a second consecutive quarter. It slowed in the fourth quarter. It slowed again in the first. Is it any surprise that it's slowing when inflation is punishing consumers to this extent? No. So how did this happen that non-residential investment managed this amazing feat? Well, it grew 10.6% annualized because data center. Nobody's surprised. Okay. So what do we know from here? We know that inflation is not going to get better. You just mentioned food inflation. That's going to be mostly about, and we saw this in the PPI numbers, trucking, freight, all those things that depend on energy. Let's look at the services side. Forget the good side. Obviously, there's a giant spike in oil. We know that. We saw it in the CPI numbers. Sure. It's in services. That's the really interesting thing. It's in the cost of moving goods around the supply chain. That'll be the first thing. Then next year, you're going to have the impact of lower yields, less fertilizer, more expensive inputs into the actual planting cycle. That's not even this year. And so there's a really long inflationary arc here. So rates are not going to be going lower, it looks like, anytime soon, unless we become subscribers to Ergonomics, and that seems unlikely. New Fed chair got approved today, and he's not exactly somebody with a dovish record until recently, where he's really had to tie himself up in knots to make a case that rate cuts ought to make sense, and he got the job. Now that he's in the job, will they still make sense? Unclear. So we're in a situation then where the consumer is going to get told, you're going to get squeezed, but as long as the boom continues, GDP can keep growing. Except the boom faces all of the same constraints: higher energy, more expensive inputs, more fraught supply chains. And so really the central question you have to ask yourself is, does the first quarter mark the beginning of a trend, or was it an aberration? And failing consumers in this environment will ultimately drag the whole thing down because they are just such a huge part of the total. And in my mind, it seems pretty straightforward that that's where this is headed.
Does that mean that we can't continue to have this discrepancy in the market where you have the AI infrastructure trade continuing to run while everything else struggles as it did today?
It certainly means that after a while, you run out of room on that. And you can see that after a while, you run out of room because you have to wonder who's pushing around this market. It isn't committed participation. Volumes have been falling for 6 weeks. So it's not like this market is well loved and the breadth of big money investors have concluded that, you know what, we now have a new growth engine. Forget the consumers. Obviously, nobody in their right mind believes that nonsense, or we would be seeing building volumes. We're not seeing that. The rally is not broadening. It is not finding more conviction. It is narrowing and finding less. So when you look at this then, what you're really doing is, as people often talk about the carry trade, you're standing in front of a steamroll and trying to pick up pennies. The question becomes, how long, how bad of a consumer number do you need to get for the markets to go, oh man, there is no amount of data centers we could build that are going to offset a real slump in consumption in this environment. And we couldn't build them if we wanted to fast enough. Already 40% of data center projects slated for this year have been pushed back at least to next year, some to 2028, some beyond. Just because it's too expensive and there's not enough stuff. And frankly, the political will isn't there. Something like 10 states have efforts underway to stop construction.
If we were to take every data center that's due to be built out right now, and they were to all get built by 2028, in 2028, will we have enough compute for what we'll need in 2028?
No, because these things age into obsolescence within 3 to 5 years. You have to constantly run it.
You want me to be bearish?
Yes. Because again, I think the question here isn't that we don't have a data center boom. We clearly do. The question is, can that data center boom repeat the trick of offsetting weak consumption in the same way that it did in the first quarter? And I think to think that it can in a consistent way is just silly.
Probably silly. Is that something that you feel certainty in the next 45-day and 21-out window?
Absolutely not. I am not going to bet on this in the next 45-day cycle, because we're here to make money, not to force the markets into rational thinking. As Keynes maybe quipped, the market can stay irrational longer than you can stay solvent. So, no, you don't fight this thing. Especially when it's thin liquidity like this. These little guppy pockets of money don't have really any meaningful resistance to push this stuff around. And ironically, the fewer of them there are, the easier it is for them to push this thing around until finally liquidity decides to slam in their face. But when does that happen? Who knows?
Who knows? Until then, Ilya, 1 week moving average every session since March 31st. We've been holding above it in the S&P and the NASDAQ. If the trend holds, then when you fall back into it, the market should rally thereafter. Otherwise, the trend no longer exists. So yesterday, I went out and got long. I know you and I have differences of opinion on this, but I'm going to ride these rails. And
ride the rails, man.
Add more short-term exposure, 7,450, 7,500. It's now in the money. It's still 2 days to expiration, so we're going to hold on to it a little bit more because it looks like this thing has a bit of a bounce. But if we get another pullback into the 1 week moving average, you know what I'll be doing, Ilya?
I do.
Getting some more exposure. That's 2 or 3 days expiration. I'm looking for another bounce. And until that doesn't work, maybe I'm chasing. I'm not really a scalper here. That's not really scalping per se. But over the past few weeks, having shifted when we got near 6,900 to the long 8,000 calls, 80,000, 8,200 call spread. And then over the past 2 weeks, using the 1 week moving average to just justify getting long, some slightly out of the money, short dated exposure, it continues to work. So I'm kind of in a comfort zone for myself right now with how I'm approaching the stock market after what was an uncomfortable March, April period where it felt like, grinding sideways, missing the move, blah, blah, blah. Sure. Until, I feel like I'm back in the zone where it's like, I have the system. I'm going to continue to do this. When it breaks, it's going to break hard. But as long as it's defined risk, maybe I can keep doing these risking 1 to make 5. And I do that enough days in a row where when I get the one that works against me, I can walk away and say, I milked the trend the best that I could. So
and
that
I
to
think
me is the goal here.
And it's an honorable one. I just think what we need to be doing, there's nothing wrong with that approach. I think what we need to be doing is we need to be clear-eyed about what we're looking at. We're not looking at a market with a convincing long arc. We're looking at a speculative melt-up, which you can certainly try to ride the coattails of. That doesn't really line up with the way I think about markets or with how long I like to hold winners versus losers. Typically, one of my winners is anywhere from 4 to 6 weeks. Typically, one of my losers gets cut off after about 2. So I look at this and I go, right. We tried to bet against this thing. Obviously, speculative spirits, limited though they are here by diminishing volume, they've prevailed. Those trades that I had on were, of course, risk defined and are essentially dead money now, unless there's some sort of lottery ticket situation and things collapse. But am I adding? Of course not. Am I going to step in front of it until there's a meaningful sign that a real wallop is maybe taking shape with some real price action signals of a reversal? Absolutely not. There's no reason to fight it, but to know that this is a thing that's built on sand.
Well,
and when it turns, it's going to turn violently.
Here's some not sand. Here's PPI for semiconductors and other electronic component manufacturings. Do you notice
Astronomical.
Do you notice that in the 2000s, Ilya, right? The year-over-year change in semiconductors as the bubble's building. It's like, wait a second, the thing that these people are selling, it costs less money to make over time.
Yeah.
What's different about this build out right now? This is what I talk about it being a commodity where like prices rise, the supply comes in, then prices fall. When prices fall too much, the supply dwindles. And so then prices rise again. And you get the slinky effect because it's kind of like a commodity. And then all of a sudden, this is what's driving PPI. I mean, this is one of the inputs of the report that I was looking at this morning. I was talking about this with Westwater on Futures Power Hour.
Yeah.
You look at PPI and it's like, oh, what's one of the biggest components outside of energy? If you're going to strip away energy, what are you looking at? The next biggest contributor is what's happening with the semiconductors, with the electronics.
Oh, sure.
And is that bad for these companies' margins? Probably not. And so you look at the PPI report, just kind of mapping this out today. I'm looking at a company like Micron here, which had a nice little bounce yesterday. But we have our PPI report today, and it doesn't exactly scare the market, right? You didn't see this kill the trend. You didn't see this kill the trend in NVIDIA. You didn't see semiconductors keel over. They stopped advancing at a certain point as everything else did during the day. But the PPI report didn't spook the semiconductors specifically, right? So when I'm thinking about the economic data and the inflation that's coming right now, putting together these building blocks, is this enough to short circuit the rally right now?
Well, it depends what it is, right?
But
it depends what it is. I mean, what is enough to short circuit the rally? I mean, PPI obviously wasn't enough. We are looking at a rally that continues. The question, again, isn't about PPI or not PPI or CPI or the Trump-Xi summit or the ongoing war. Because all of the markets, aside from stocks, clearly care about all of those things. But this melt-up doesn't. That doesn't give this melt-up more credibility. It gives it less. So again, the question becomes not so much, does the market logically look at PPI and say, this is not a problem, this is not a fundamental headwind because I've analyzed what this looks like and there's nothing to worry about. None of that is going on. Nobody is analyzing a thing. They're ignoring things. That's different because other markets clearly are not ignoring them. And so when you look at what's going on here, again, especially with the diminishing volume, you're not seeing a reasoned assessment of what PPI means or doesn't for these companies. What you're seeing is a handful of small players tossing around a hot potato, hoping they're not the last ones holding it. This is going to end violently. But who knows when?
As all rallies do. But who knows when?
But who knows when?
Do you know how much more relaxing it is, Ilya, not thinking about the macro and just looking at a silly little line?
Oh, I know.
Buying against it.
It'll be really interesting to see sort of how the distribution of losses shakes out when this thing snaps. And as long as, again, folks look at this with very, very militant attention to risk reward, you can try to pick up these pennies in front of this steamroller. But I'm
just keeping it risk defined, right? That's why I like buying back at the 1 week. You go a little bit out of the money, you go out a few days. If the trend holds, you get a bounce up into it. You're risking 1 to make 5. And if you get one of them, if you get it wrong, right? Now that I've knocked off a few of these in a row, if this next trade that I do is wrong, then I'll be able to walk away with like 7 winners in the back pocket, 1 loser, and most of the winners were much bigger than the risk I was taking. So I'm finding this is also how the market. Oh, yeah, sure. But that's like what the nature of 0 DTE and like the limited under 3 DTE trading is about.
Yes.
Hopefully that you catch the move with the high convexity and you can place enough of these trades over time where the odds are in your favor. So right now it's working.
And rightfully so, it's working. I mean, we know the stock market is biased higher, just as a structural consideration. So it's working as and until. But there comes a point when it stops. I am not going to try to guess where that is. I'm going to let the price action tell me where that is. And when that happens, I'm going to be looking to see it on that side of it.
Most of this market doesn't have a good day. I was looking at the thematic map over on FinViz. There are pockets for things related to electric vehicles, AI, semiconductors, new tech, if we want to call it that, Ilya, that have a decent day. But beyond that, most of the market is trading in more or less a mixed fashion right now. Just going to pull this over here. In terms of the actual sector performance on the session, to no surprise, the major sectors that we cover here on Overtime, there's 26 of them. Semiconductors sit at the top of that list, which is not unusual for what we typically see here, Ilya. Semiconductors are up 2% today. They are followed by Telecom, XTL, which has been a usual winner around these parts recently. It's been flagging the past week or so, but it's been holding up near the all-time highs. You have tech broadly, XLK, and then some defensive things sneak in there. Healthcare, consumer staples, energy's coming back in. On the downside, though, the banks. Talk to me about the banks here. KRE was a little creaky, down 1.5%, losing its 50-day average. KBE, which is more or less like XLF, likewise losing its 50-day average. You see XLF here losing its 50-day average, losing an important swing level that it followed throughout January and October and July of last year. Why are the banks not liking this? This to me feels like a treasury yield story that's under-discussed and appreciated.
It certainly seems like a treasury yield story. First of all, if we want to take the kind of easy layup here, we look at KRE and we see that a lot of the regional banks that we were talking about when some of them were blowing up, Silicon Valley Bank, of course, comes to mind, that a lot of them are sitting on these giant piles of U.S. government debt, just that they're intending to hold to maturity just as assets on the balance sheet because they had money that needed to go somewhere, and this is where they parked it. And of course, bonds are not exactly doing all that great as yields surge and are probably not coming back anytime soon. So at least not to levels where these positions are incurred. And so you have a situation where a lot of the smaller banks are sitting on these massive losses, which can sit as long as nobody comes to get the money. But as we saw, again, in the case of Signature Bank, in the case of Silicon Valley Bank, if there's a run, if depositors want their money, the pressure comes on to start to liquidate these things, and then things get rocky. So that's a vulnerability. We haven't talked about it in a while because nothing has blown up in a while, but we were expecting rate cuts, and now we're not. So maybe it's time to talk about that again. But I think the issue here is more straightforward and cyclical. We're going to get retail sales numbers tomorrow. Those retail sales numbers are probably going to show us another ugly month after what was already an ugly month in March, largely because of gasoline.
Gas
and
station
so
spending, energy. Yeah.
Off the charts. Off the charts.
Not going to be good.
Greg
Don't we know,
Weldon that I spoke
don't we know
with
that?
for trading.
Don't we know that, though?
We do. We do. But that's a problem for the banks. They are the facilitators of economic activity in an environment where the biggest driver of that economic activity, again, 68% of GDP is consumption, is flagging. So again, we know that, but the question is, at what point does the stock market have to pay attention? Because this thin liquidity melt up is no substitute for actual GDP growth.
Well, before we go out the door here, Ilya, we do have Cisco earnings that came out a few minutes ago, and it's worth covering them. Revenues are at $15.8 billion versus $15.54 billion expected. EPS came in at $1.06 versus $1.04 expected. The fiscal year 26 guidance, revs up at 62.8 to 63 versus an estimate from the street at 61.6. Likewise, the adjusted EPS up at $4.27 to $4.29 versus an estimate at $4.16. After hours here, Cisco's up 12.6% right now. It's given a little bit of a kick to the S&P and the NASDAQ, which are returning back closer to their session highs. S&P down at the close was down near 74.66 and now back to 74.74. NASDAQ, which had fallen closer to 29,450, is back to 29,519 here. You and I are done here, though, today because overtime is now out of time for this Wednesday, May 13th. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. We'll catch you in a little bit, though, because you're sticking around to watch Macro Money with Ilya next year on Tasty Live.
You're there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
And we have another melt up. Stock markets continue to power higher, but the day's economic data is telling a story that ought to give us pause. This is Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And what we're going to do is take a look at some of this data that has come out here over the past 24 hours and really contextualize it within what's been happening in the past several days data-wise, and see if we can't figure out what are the makings of what happens next here, because clearly the markets are of two minds. There is what's going on in the stock market, and then there is what is going on seemingly everywhere else. And of course, this disconnect has continued now for quite a while, but the economic data that feeds into what may be the alternative to the stock market narrative, it's starting to pile up. And what's happening in markets outside of stocks is starting to look increasingly convincing and increasingly like something that the stock market needs to pay much more attention to. So let's take a look at what we have here in the price action. This should be a familiar story so far. Another record high for the S&P 500. We still have standstill, broadly speaking, on momentum indicators, although we're starting to get a little bit perkier there, the relative strength index edging up a bit. But the real sour note for this rally is the diminishing volume, basically all the way up from the lows that were set in late March, early April, as the U.S.-Iran war called the first ceasefire. So what we see is fading conviction. And as the market rises to erase the wartime sell-off, that's this right here. So by the time we correct to retest the underside of the range here, volume starts to peak. And the higher we go, the lower the volume is trending. So the conviction behind this move is increasingly suspect. And we can see here that, as ever, this is a tech-driven move. We've looked at this before, and it continues to hold true. The chart here shows the degree to which different components of the S&P 500 are outperforming the benchmark. And we can see that All the sectors, but for tech, are somewhere on the left-hand scale here, outperforming from 0 to 0.4%. Tech is in a whole separate universe, outperforming between 0.6 and 0.9% over the past 3 years. And we can see that most recently, this melt up from April's lows, we're closer to something like 0.85, 0.86%. And obviously, tech has surged while the other sectors here are languishing at best. Now, we've shown likewise before that it's not even just tech as a sector. It's a very narrow segment therein. In fact, we can see the equal weighted NASDAQ is up only 2% on the year, whereas the headline index is up over 15. And it's not even the usual suspects, not even the Magnificent Seven mega cap names that are doing it. They're only up about 8%. The software sector, where the most disruption from AI is being speculated for now, that's down almost 14%. So it's really all just a story about one thing, semiconductors. We can see that benchmark here is up more than 53% for the year. And needless to say, today, that's again what is leading us to the upside. Now, the underlying narrative, of course, the astronomical capital expenditure that is being planned by the hyperscaler firms. They've announced over the course of this most recent earnings cycle, nearly $750 billion in spending. That's almost double what they did last year because, of course, compute is in short supply and AI demand is surging. Here's the traffic we see here to the main AI tools. Needless to say, we can see where all of this capex is coming from. So as we consider then what is coming next, the critical question starts to be, well, okay, we get what the narrative is. This has been the narrative for some time. Does it make sense that there is this one-sided departure for a single thing? And should this be something we need to be worried about? Because, again, all the way up, we can see volumes are diminishing. So participation in this narrative is becoming increasingly thin. And there is an increasingly small pool of money bidding this up. Now, on one hand, thin liquidity can allow small money to make big impact on prices. And so you end up with a situation that is easier to jostle for these smaller pools of money. And so you could really see very little resistance on the grind higher. On the other hand, if at some point a meaningful amount of the money on the sidelines decides to bet against this melt up, or even just to wade back into the fray and even things out, well, then you might have a relatively quick unraveling. And so it makes sense to consider sort of what the architecture of that would be, because all of the other markets that aren't stocks seem to be telling something of a different story. And here we go down the list and we can see the situation is largely as we've left it. Crude oil continues to be pinned near the middle of its wartime range, right around $101 a barrel on WTI. Interest rates continue to surge and have in fact returned to their wartime highs, while bonds have slid to wartime lows. Gold is consolidating after an anemic bounce. Its path of least resistance was, of course, lower as interest rates surged as a consequence of the war and that oil price spike feeding into inflation expectations. It has not come back in earnest. So the higher rates, higher oil story continues to live in the gold market as well as bonds. And the dollar is actually perking up. Interestingly, it has held relatively well supported after about a 50% pullback, really since the middle of this stock move. So call it mid-April or so. The dollar found its bottom and is holding despite risk on momentum. Now, you'd think money would be flowing out of cash and going into the stock market, given its performance, but what these diminishing volumes mean is that's not occurring. And so the ominous disconnect here seems to be that everywhere around the financial markets, except on Wall Street, people care about inflation and its consequences. And on Wall Street, a narrow, low-volume melt-up in semiconductor stocks is creating the appearance that these things don't matter. Now, there is some logic to that thinking. We, of course, saw in the first quarter that this investment component, which is only about 14% of GDP by value, actually contributed more to growth than did consumption, which is 68% of GDP by value. And so we can see that this occurs, of course, because we have this dramatic jump in data center construction. And what that does is give us over 10% annualized growth in business investment, and that, of course, overwhelms consumption, which is only growing at 1.6%. But hidden in this chart is not just that business investment explains what's going on, but also that consumption is anemic. We can see here it is, in fact, slowing for the second consecutive quarter. And so as we consider then what that means, the real question we have to ask ourselves is, can we really expect that in a lasting way, we are going to see this semiconductor spending give us more than does consumption, or will we get to a point where gravity is reasserted and the part of the economy that is 68% of the total will have more of an impact on the bottom line than something that is 14% of the total? And if that setup that we saw in the first quarter is going to be something that is more like a flash in the pan, one-off kind of a thing, because we had a monster amount of spend, and that spend, even if it continues, has to face all of the usual constraints: higher oil, higher interest rates, tattered supply chains, all of those things already delaying some 40% of data center projects that were slated for this year. And so even if that spend attempts to deploy, it will do so against the backdrop of all of these headwinds trying to hold it back. And of course, so too, all of those things matter for consumers. And so we have to think, if we believe in this melt up in the stock market, that somehow this data center construction will be frictionless and consumers will not be hampered enough that their weakness overwhelms and GDP cracks. And of course, once GDP cracks, if it does, well, everything else follows. So the amount that you have to believe here is lofty, and the falling volumes would suggest most don't actually believe that that is a reasonable sort of setup. Now, the economic data over the recent days has increasingly painted that picture. Higher than expected CPI, of course, yesterday, 3.8% versus 3.7% expected. That is the highest that we've seen since late 2023. Core also higher than expected, 2.8% versus 2.7% expected. And so the story here, clearly, we can see by that rising yellow wedge that represents energy, clearly one where energy prices from the war are taking their toll. But as we look at the underlying situation, it is worryingly not just that. So here's the breakdown by component, and we can see, yes, there was a rise in headline. Yes, there was a rise in core. Core services quickened. Food, of course, did too, and energy was a big lift. But if we look at the month-on-month change in contributions, sure, energy was the standout, but we also see this increase in service sector costs outside of food and energy, suggesting that maybe things are starting to spill. Now, earlier today, on top of that wonderful news, we also had the producer price index. This is wholesale inflation for the same period. And of course, what we find there is not exactly very encouraging. Here is that data. We have a 6% year-on-year rate for wholesale inflation. That is higher than economists expected. They were looking for 4.9%. In fact, it is the highest since December 22. And again, worryingly enough, if we look at what's going on here, we see that it isn't just energy, because there is also an ugly surge in core PPI, 5.2% year-on-year versus 4.3% expected, the highest also since December 2022. So we have a situation there, of course, where it would be easy to say, well, this is just energy. The Strait of Hormuz will eventually reopen. The wartime situation will eventually unclench, and we'll be back to where we ought to be. But if it's also in the core, if it's also in services, well, then we have a different kind of a story here. And if we look at then the underside, the component parts, we can see, of course, on the goods side of PPI, it's energy. It's just higher fuel costs, higher energy costs more generally, be it jet fuel or gasoline. No big surprise there. The interesting part is the services side, where what we see is, on the one hand, the biggest increase, north of 12% year on year, the transportation and warehousing services component. That obviously is something much closer to consumers. That's the cost of basically getting goods from where they arrive or they're made to where they're going to be sold. And there's the trade services component, which is essentially wholesalers' margins. How much money are they making from the wholesaling activity, from getting intermediate goods, wholesale goods, basically, to store shelves and to consumers? And we can see that within the transportation services side of things, it's what you would expect. The cost of trucking, airlines, all those things sensitive to fuel, and all those things likely to come in and face consumers before long. And on the margin side, it's expanding margins from selling petroleum, fuels, and lubricants. In other words, this surge is not just an energy surge given the cost of the energy itself. It is also spilling over dramatically into all of the things for which energy is an input. And so the question then becomes, well, if the give and take between what's going on in stocks and elsewhere is, can the semiconductor boom offset consumption as it weakens in GDP and keep the engine going? On the one hand, you have to consider that semiconductors face all of these same constraints. But on the other hand, that consumers have been slowing for 2 quarters already, and what's going on in this data suggests the pressure on them is only increasing. And with that in mind, the retail sales report that's coming up here in the next 24 hours ought to make for interesting viewing, because, of course, this will speak directly just to where consumers are. The expectation is that we're going to get a modest rise of 0.5%. That's after a 1.7% surge in March. But lest you think that that surge was good news, consider it was driven by an almost 15.5% surge in sales at gas stations. In other words, again, this is the oil shock, and it's got plenty of time to continue to wash over the economy. We can see it takes about a month to appear in CPI. There's about a month lag there. And what we find is that as of the latest CPI data in April, the numbers we just saw earlier this week, we are only just starting to see its influence. We've maybe started to price in something in here. But the bulk of this surge is clearly still to come. And the markets, for their part, know as much. Because these inflation expectations that are priced into break-even rates, they continue to march higher with crude oil. And of course, as we just saw, crude oil itself is pointedly holding at its wartime levels. If there was some sense that this thing was going to let up, the first thing we would see before it ever appears in the data is prices would start to ease. And that is not what's going on. So this inflationary impetus squeezing consumers, it remains. And it's probably going to remain for some time. One of the interesting things in this break-even chart, as we can see since the beginning of the year, not only are inflation expectations up, the 5-year, the 10-year, but the spread between them has gone from virtually non-existent to something much wider. And that, of course, is painting a very significant arc of rising inflation between the 5 and 10-year horizon. It essentially tells you the outlook is for inflation not just to be higher, but to be rising over a longer term view. And of course, all of that comes with all the many risks that we already see likely to keep inflation elevated, be it tariff policy, be it the ongoing standstill in the Middle East conflict where it's unclear who's going to do what next, but certainly the strait continues to be closed, the Strait of Hormuz, that's disrupted energy and much else besides. And so we can see that we're hitting some of the highest policy uncertainty readings on record for the past decade or so. And in fact, these are some of the highest levels for this index in something like 40 years. So as we look at this then, it seems to raise a very straightforward question. consumers are getting squeezed, and these retail sales numbers will probably show as much again. It's not surprising that we're getting consumption slowing as a contribution to GDP for the past 2 quarters when crude oil is spiking like this. We also know that as a consequence of this war, central banks have abandoned any kind of a pretense, any kind of feeling that we might see a rate cut anywhere on the horizon. In fact, the Fed is perhaps the most dovish of the bunch here, and they're looking at standstill. All of the other central banks at this point are priced for hikes. So we're going to get this pressure on consumers. That's going to squeeze the economy. And there is no hope, seemingly, that what that will beckon is any kind of a prompt or a proactive response from central banks. And we have to ask ourselves, okay, so in this environment where whatever growth shock occurs is going to be allowed to linger until it does enough damage to inflation to justify cuts in an environment where inflation seems like it's getting extrapolated higher and higher. And so consumers are going to have to bear the squeeze at higher interest rates for longer. That what we're essentially asking of the stock markets is that in that environment, you can continue to run up semiconductor spending with all the same headwinds as consumers in a way that keeps growth well supported. It seems like perhaps too tall of an order. And this diminishing volume seems to suggest as much. The broader markets don't seem to believe it. So, with that in mind, here's the exposure that I have on here. I am still short gold, looking for higher interest rates, still long the dollar. And in fact, I've added to these euro and pound shorts over the past 24 hours because it seems like this thing is starting to have a little bit more progress in the right direction. I still have a bit of exposure on the short side of stock markets, but these older positions, the ones on the NASDAQ and the S&P 500, they're essentially locked at max loss for weeks now. And that, of course, is exactly the idea. The whole sort of point of holding these things with risk-defined, forced risk-reward parameters is you're fighting a rally, you don't want to get run over. And so you have to be very militant about keeping risk controlled. So these are basically now lottery ticket type of trades, but if they expire worthless, well, then so be it. That was part of the strategy, or at least it was structured that way as the worst case scenario. It's a little bit more time left in this short calls vertical in the Russell. We'll see how that goes. The Russell has been the weakest of the bunch because, of course, the growth concerns matter more there, and tech isn't a big contributor to the index. So still holding that on there. And, of course, short the long end of the curve as yields continue to rise and bonds fall, and long oil via a call vertical here, looking for that to continue to push higher. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com. My preview of the summit between Donald Trump and Xi Jinping is front and center there today. You can go check that out. I'm also commenting on former Twitter and on Blue Sky at Ilya Spivak. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.